Again, good morning everyone. My name is Dimple Mittal and we have gathered here to witness our 16th Wealth Convention organized by AFM India. And this is something really special to be announcing here, as this is our first time in Chennai. So imagine that it's our 16th convention and this is our first one in Chennai. So a huge round of applause to our initiative for conducting the first convention in Chennai. Thank you so much. And the best part, it's a Saturday morning and the house is full till the back. So a big round of applause to everyone who has again the effort to come here and make it to this convention. Thank you everyone from the entire team of AFM India to be here today. So, I am working with this academy for over a decade now. We started in India in 2012. And it's my pleasure serving this academy, as the mission of upskilling people keeps me going. And I think it's good to know that this industry is massive, ever growing, and we are saying next 10 years belong to India. I am not going to talk much on this, as full day we are going to deliberate on this theme. The theme today is very unique. How many of you have paid attention to the theme? Can anyone get up and tell me what is the theme of this convention? Let us make this interactive. It should not sound that there's a lecture going on. Let us make this engaging. What is the theme of this convention? A very simple question. Anyone? It's there in front of you. It's there in the kids also. So what is the theme of the convention?
Knowledge network success.
Okay. Any more answers? Any more answers? You know why I am asking this? Because when we started promoting this event, a lot of people ask why this theme. So I think it is important for us to know the theme of the event. What is the theme?
Capitalizing technology shifts in financial landscape.
Yes, that goes to Ramki sir. Sir, I request you to be loud enough, get up and tell it to everyone.
Capitalizing technology shifts in financial landscape.
Thank you so much. So it is capitalizing tectonic shifts in financial landscape. Can anyone take a moment to explain it in 2 lines? Just 2 lines. What do we mean about it? 2 lines. I request you to take efforts. Let's make this interactive. Is it a difficult question? Capitalizing tectonic shifts in financial landscape. What is the meaning of this one?
Investment potential tap and run.
Okay. Any other answer? Be loud. It's our forum. It's our fraternity. It's our family here. What is the meaning? What do we mean by this?
That's a big shift happening in the financial market. How we are going to capitalize it?
Okay. Simple language, simple words. Just explain what your heart says, what your mind says. What comes to your mind when you hear this line? Just 2 simple lines from anyone. Yes? Digital? Transit. Okay. Yes. So it is one of the change. Yes. Any other guesses? Okay. So let's not make it any complex further. And we will basically, without taking further ado, we will begin this day. Are you all ready to witness an amazing day?
Yes.
You have to give me energy if you want energy from me. Are you all with me?
Yes.
Are we all excited to be here? Okay, so I will request you to all get up, do a small exercise with me. Can I request everyone to please stand up? Because whatever we do in our life, we begin our day with the blessings of the Almighty. So are we all ready to invoke the blessings of God and our motherland? Yes or no?
Yes.
First of all, just turn your face to each other, the person standing next to you, and say good morning. Did you say good morning to each other, the person next to you? Very nice. So it's a very small initiative to attempt networking. And I will not take much time. We will play a song. Can you guess which song are we going to play now to begin our day? Yes, a big round of applause. Tamil Thai Vastu song. Can I request my team to please play?
திகழ்வரத கண்ணமில்
Thank you, everyone. Should I make you sit, or we should be standing only? Okay, let's take a pledge before taking a seat. Can we? Stretch your hands right in front of you. Take a pledge. We pledge to. Loud. We pledge to. Mute our minds of distractions, and we are ready to learn, network, and grow. Thank you so much. Be seated. Thank you so much. Thank you, everyone. So are we all feeling that we are in a city of Chennai, a sacred land which is full of spirituality? Are we feeling that? I think it's a city where divine presence is felt in every corner, and we got a chance to feel it for a moment here. As all the good events begin with the lighting of the lamp ceremony, we will proceed with the lighting of the lamp ceremony, and I would invite my dignitaries to, grace this occasion. I would start inviting, and I would request everyone to please welcome the dignitaries here to begin this event, to mark the beginning of this momentous occasion. May I please invite Mr. Vyasra Nagpal, co-founder and director, AFM India. A big round of applause, because we are here because he took the efforts for AFM in India. Mr. Deepak Jain, co-founder and director, American Academy. Again, a person because of whom AFM is born in India. You have to keep clapping throughout the day. This is just the beginning. It has to be loud. I'm sorry. Thank you so much. Mr. Sachin Jain, Regional CEO, India World Gold Council. Mr. Juan Carlos Artigas, Head of Research, World Gold Council. Shri K.S. Rao, Head Investor Education and Distribution Development, Aditya Birla Sun Life Mutual Fund. Mr. Harsha Upadhyay, CIO, Equity and Debt, Kotak Mahindra AMC. Mr. Mohit Bhatia, CEO, BOI Mutual Fund. And I think this gathering is of mutual fund distributors, IFAs, financial advisors. There are so many nomenclatures. I would also like to take this opportunity to invite Mr. Ramakrishna, who is properly known as Mr. Ramki sir. He is President, Coimbatore IFA Association, FACT. He's travelled all the way here to attend a convention. I would also request Ramki sir to come on the stage. We can have the music. So let's have a photograph, please. thank you all the esteemed dignitaries for gracing the occasion and setting the tone to unfold our event for the day. So I will quickly take you through must-do activities at AFM 16th Wealth Convention. I request everyone to please pay attention to these points as it will help you to take maximum from today. So everyone has got the kit in your hands. Can you just show your kit? Everyone has got one magazine from us. Yeah. So this is a handbook that we have given it to you, and there are certain things you will do in this. It's a specially crafted handbook at AFM. So make a note of key points in the handbooks you have. There are pages for your key takeaways. Connect and network with all the people here. Try to exchange cards. It's time to be networking. Try the quiz which is there at the end of the handbook. There is a wonderful simple quiz that we have put in just to have a simple test for what we do. Visit the exhibitors. In the next hall adjacent, there is an exhibition and there are exhibitors waiting for you. So I request you to please take a look at the product which are there, which might be helpful for your business. Then we have given you a membership today called Estate Planning Membership. I would not take much time to take details of this membership here. It's Estate Planning Membership. You can offer this service to your clients. We will have a proper dedicated session. What is estate planning? How you can offer it. And I will also, would like to tell you that we have a day 2 tomorrow. So I think we have informed everyone who is present here that this is a day 1. Day 2, that is tomorrow, is happening at Madras Management Association MMA. And it's a half-day program that we have, designed for you. Know your business, grow your business. So I think we have informed and you have given your confirmations also. So I would request everyone, whosoever can come, please come tomorrow. Now, there is a program called Chartered Wealth Manager, which is our flagship program of AFM India. We are offering very good scholarship and discounts for people who are here today. And there are QR codes available in this handbook only. So you can just scan the code and get the discounted price. Then you have a certificate of participation that you will be able to download through the link, and the QR code is again there in the handbook. For any assistance, there is a AFM booth in the exhibitor area. You can please connect with them. Then last but not the least, very important, please fill out the feedback form. As we are trying every year to come up with themes, topics, speakers and design special events for you, I request you to take a moment to please share your feedback, which will help us to serve you better in future. Then there is a QR code on your lanyards that you are wearing. I request everyone to scan the QR code on the lanyard that you are wearing. Through that, you will be able to follow all our social media handles. You will be getting all the updates from American Academy. So I request everyone, it's a small exercise, but please do it. So now, how many of you know about AFM India? As this is our first time, so we are having our hands raised here. We have met many people in other cities also, okay? I request more hands. So bigger hands. Thank you. So yes, there is a sizable number. American Academy is a global leader in financial education. We started back in 1996 in Colorado Springs, US, with the objective to create a difference in the professional world with our unique trainings and certification. We started in India in 2012 and we have completed our glorious 12 years now with the support of all the industry people. Some of you are present here also. Industry has accepted our certifications and training, which have been marked that we have created difference. And I'm very happy to say that we have trained 92,000 people through our CP trainings of NISM. I don't know how many of you know, but yes, it deserves a round of applause because we have covered 2,200 sessions in 150 cities covering 92,000 people. So you all are, I think, mutual fund distributors 5A certified. So people who wish to renew their NISM certificates, we do the trainings. And we have been doing for over a decade and we are successfully conducting it with your support again. Then we have created 3,000 chartered holders in India. And trust me, people, 3,000 is a big number because there are certification providers available and we are not able to create professional charter. So there are 3,000 charter holders in India who have completed our full programs, which is like Chartered Wealth Manager, Chartered Trust and Estate Planner. And we also do a lot of customized training, and I'm very privileged to share that we have been a very active partner to SBI Bank. We have set up the wealth management department for SBI Bank, with the name of SBI Exclusive. So we train around 550 people in the first lot for SBI. Then we covered around 1400 people from Bank of Baroda, which was a 3-phase training that we are doing with them. Level 1, Level 2, Level 3 training for wealth managers. And that is from relationship managers to territory heads, we have taken this initiative. So it was again a moment of proud for us. Then we have trained around 35,000 industry associates, financial advisors through the support of companies like Aditya Birla Sun Life Mutual Fund, and the leading personality behind that, Mr. Rao sir, is here, who has been a driving force for this massive training. Then we have done training for NSDL, DHFL Pramerica, Bajaj Allianz, and many more corporates. So this is about American Academy, and we have a booth again to connect further and take more details. So I think we are already running over time. So I would invite the first presentation of the day, which I am sure you will be, which will be close to all of you. Everyone is doing sales here, yes or no? Yes. Everyone is an entrepreneur who are sitting here, right? And I think we apply a lot of fundas, we keep changing, we keep evolving ourselves and try to apply some business techniques, each day. So now we have a very, very powerful presentation coming up by none other than the co-founder and director of American Academy, Mr. Vyasray Nagpal. He is going to give wonderful insights on successful business fundas. He has experience of 17 years. He is the director of 4 companies. Hailing from the family of lawyers, he is a financial planner and an entrepreneur by heart. So he is here to share some of the practical business fundas that he has applied in his business. So please make small notes which might help you to deliver the best in your business. So Mr. Vyasray Nagpal, I invite you on the stage with all the energy, and let me welcome you with all the participants here. A big round of applause for the wonderful presentation that we are all looking forward to.
Sorry? Yes, thank you. Thank you so much, Dimple. Good morning, friends. I take care of the marketing and business development in my company. And it's been 12 years in AFM, and overall I have around 17 years of experience in this domain. And I've been fortunate enough to, always dealing with the mutual fund distributors across my 17 years of career. And I have seen the, not audible? Is it better? Yeah, thank you. So it's been almost 2 decades with all of you. I have been interacting and seeing that how this industry landscape has changed in this mutual fund arena, starting from that commissions to today, so many regulations coming in. Seeing all those challenges, I thought today is a day where we should talk about which is relevant from your business perspective. Can you, or maybe we can change a mic? Yeah. So today I thought, I'm audible now? Thank you. So today I thought that I will talk about a topic which is relevant to your business, because we have many esteemed, distinguished speakers here who are going to talk on a lot of topics which are related to industry, how markets are going, and stalwarts like Mr. Harsha, CIO of Kotak Mutual Fund. Then we have Mr. Mohit Bhatia. Then we have Mr. Juan from World Gold Council. So topic for my today's presentation, which I have chosen, is successful business fundas from problem to solution. I strongly believe one thing, that if you do any business, since we all are here entrepreneurs, if you do any business, there are right ways of doing the business. And unless we incorporate those right way of doing the things into your business, we cannot build our business. We might be struggling, we have our own targets, but if we do the right things in our business, if we are able to incorporate, that is where we build our businesses. Just a second. So very first one, I am meeting new clients. I'm going to talk little bit on the EQ selling, emotional quotient selling. How many have heard before the word this EQ and IQ, emotional quotient versus intelligent quotient? Can anybody help me to understand and explain so that we all can understand this, please, sir? Very nice. Right.
When it comes to financial aspect, it has both the thing. So, with this perspective, EQ, IQ has the validity over investment services.
Services, right. Thank you so much. So I will just sum up what he said, because that was, I was about to say, I'm fortunate enough that he summed up very nicely. So before sum up that, I will just tell you what is IQ and what is EQ and why it is relevant for our business. In today's time, we are majorly focusing right now on the IQ selling. How many of us are focusing on EQ selling? How many of you think that emotional touch with your client is important? Can you please raise your hand? And how many of you actually deal with your clients emotionally also, rather than not only dealing with the financial facts? Please raise your hands. So I see a good numbers which is happening.
Okay.
Am I audible now? Yes. Thank you. Actually, I have a habit of moving and while talking, so it becomes difficult for me to stick to one place and talk. So what is IQ? IQ basically is nothing more than it's a person's ability to learn, to understand, to experience how we are able to solve a problem. That is a IQ, where we use logics. EQ is a emotional intelligence, where we are able to manage our emotions and others' emotions for our investment decisions. What Mr. Joshua from 6 seconds has to say on this emotional IQ, and we'll just hear him out for 2 minutes.
Which is more important, EQ or IQ? EQ stands for emotional quotient, the measure of emotional intelligence. IQ stands for intelligence quotient, the measure of traditional intelligence. Emotional intelligence is about being smarter with feelings. Traditional intelligence is about being smarter with numerical or verbal data. In both cases, we're processing information and we're using that information to solve the puzzles in our lives. I think in some way it's the wrong question, because EQ and IQ are actually correlated. They're both part of intelligence and they complement each other. For example, one of the key parts of emotional intelligence is naming and understanding feelings. Well, the linguistic part of that is also part of traditional intelligence.
So what Mr. Joshua was trying to say, it is not about IQ or EQ which is important. It is about the blend of IQ and EQ both. Today, why EQ selling is becoming important? Because a lot of information is already available on the internet. But what important role you as a mutual fund distributor is going to play is on the emotional touch. We are moving towards the era of digitization, but digitization cannot ever take a place of from the perspective of having emotional touch with the client. So what he said was, being smarter with feelings is important, and it's not about the feelings. So you have to manage your feelings. What Mr. Warren Buffett said, that investing is not a game. where the guy with 160 EQ beats the guy with 130 IQ. So even if my EQ is 160, and if I have an impression that IQ is more important than the EQ, that's not the case here. So EQ is equally important from the perspective of IQ. So let me put it this way, no matter how smart your doctor is, to simplify and understand from the mutual fund distributor perspective, if you go to a doctor and this doctor is not paying time or devoting time to understand your issues, would you like to visit that doctor again? Answer is no, right? Similarly, you are the financial doctor to your clients. If you visit your client and you are not giving emotional touch, you're not giving enough time to talk to your clients, you are more focused on the ROI, fact sheets and etc. That is where your EQ selling is missing. That's the point where I am trying to add here is we are supposed to add EQ selling with the IQ selling. So it's a blend what we have to focus. So what Warren Buffett said on this is to invest successfully does not require the extreme IQ. What is required here is an intellectual framework where you are able to manage your emotions. Your emotions do not disturb that intellectual framework what you have created. So that is the way of investing. So I am going to give you a few tips on the funda number 1. Number 1 is, how many of you understand Hindi here? Can you please raise your hand? Okay, I think all of you, most of you understands Hindi. So because few of the fundas which I have written is the Hindi. Sorry? No, I will explain that English as well. So it talks about story pehchan. Pehchan means you have to identifying the story. So what we do is with a client, know your prospect. So unless you know your prospect nicely, you know your client, that's the funda number 1, tip number 1, that you should know your client properly. Be Sherlock Holmes. So what does that mean is you have to be observant, watchful and listen to your client carefully. You need to understand what is the need of your client. You have to give time to the client. Chai pe charcha, discussion on the tea. Identifying the unsaid dreams, conversate beyond goals. What does this mean? We are not only going to talk about the financial goals. There are a lot of emotional goals also which are there with the client. We need to engage with the client in such a way we are able to build that confidence with the client. So we need to talk more so that those unsaid dreams can be talked about. This is a Hindi song. मेरे दिल में आज क्या है तो कहे तू कहे तो मैं बता दूं. Find out what your client expects. Understand the expectation of your client is very important. Maybe you are looking for investment advice only, but he might be looking for estate planning services, maybe other products. So you need to understand the requirement of your client. You need to understand, go deeper with the client. बात वही जो अच्छी लगे. We should talk only that which the other person would like. Normally I always talk to my sales team that only talk that which the other person when listens to you, he likes to listen to you. So that is what you should be able to talk. Find out, don't be boring with your discussions. You have to be, engaging with your client. The last but not the least tip is, अरे दीवानो मुझे पहचानो कहाँ से आया मैं हूँ कौन. Identify me. This is a song again. So this song basically tries to tell us that you have to talk about yourself. You have to be confident enough, that you are an MFT. You are going to change the life of that individual whom you are talking to. So you should be confident enough. You should talk about your qualification, your success stories. So those are the things which you are able to build, because that's where the confidence of a client will come, that he will feel that he is in the safe hands. Moving to funda number 2, asking referrals. Most of us know that our business relies on the referrals only. So knowing that fact, but I am trying to put certain things which will help us to put the things in a right way. which I believe is the one of the most and very effective way of growing your business. I would like to start and ask you a question. How do you decide to watch a series on Netflix or Amazon? How do you decide? So normally when you go to a Netflix or an Amazon platform, how do you decide which series or a movie, etc. you want to watch on Amazon or a Netflix or any other OTT platform? Sorry? I cannot. Please one by one. Yeah. IMDb reviews. Okay. Referrals. Referrals is what? The word of mouth, because you have to talk to somebody, right? Either you go on internet or either you're talking to somebody's friends. So what I believe in our business today, unfortunately, MFDs is yet to have the ratings in the industry, I think. So that rating IMDb will not work for us probably, but definitely that recommendation from the family and the friends will work for us. So when we decide to watch these kinds of series, it's about friends and families. So idea is that we as a MFD is supposed to reach to the depth of that social platform, social forum of our clients. Till the time we are able to reach that social forum of the clients, their families and friends, we will not be able to make the difference to our business. So idea is to reach to that level. So what do you think is the most difficult part of the referral? Is it goodwill, creating a goodwill with the client? Or is it a trust that we build with the client over the period of time? Or is it that we do not sound desperate when we are asking for referrals? I think all of these are very vital and important to take care. There is a report which says 72% of the salespeople who upsell and 74% of the people who cross-sell experience increase in the revenue up to 30%. Imagine the cut of commissions we had way back. And if we are able to add this kind of a business with adding new techniques, will that make sense for us to going back to all those good days of the revenue and the income we used to have? Yes or no? So that's the idea I'm trying to bringing here with these referrals. Number one point is ask at the right time. And what could be the right time is when we are able to generate the trust and happiness with the client. Very important, when we are able to achieve the financial goal of the client. Because unless we are able to achieve the financial goal, that happiness, that trust will not build. Then the other way of asking is to create a feedback. So we ask for a feedback from the client, and if your services are good, I promise you that the client himself will come and ask you, can I help you? And that's the time when we are supposed to hit it and ask for thumb rule, at least 2 referrals, not 1, not 3, and you don't have to be shy about it. So ask for 2 referrals always. Cross-sell and upsell. Offer value-added services like tax planning, estate planning. Then diversify your products with the new products which are coming in like PMS, AIF, P2P, unlisted. We have Landbergs also who is coming from P2P today with us. So how many of you are offering estate planning services currently today, if I may ask? Please raise your hand. I think 3 or 4 only. And barring estate planning, what other services like estate planning or maybe the products? Okay, let me ask you another question. How many of you are selling financial products other than the mutual fund? So if I say how many, are you selling 3 products other than the mutual fund? So like PMS, AIF, unlisted, P2P. How many, are all of you selling mutual fund? Raise your hands. Now drop your hand who is selling 2 products. And 3. And I think the numbers are very less. So imagine the growth we are expecting with us. So that's the point I'm trying to make here is that we need to add new services to the system. Use social proof. The moment we take the feedback, the client testimonials is the biggest tool for you in today's time. You need to tell them about the number of clients who have got benefited from you. You need to tell the stories, the success stories. And not only that, you need to build the kind of relation which I said. For example, if your client is traveling or maybe there was a dream goal of your client to travel to Europe, and you as a financial advisor or an MFD made this possible for the client. Imagine that client sharing photos with you on WhatsApp when this client is traveling. That's the emotional bond you need to make, and that's where your success story comes in. And that's what, when you share with your client, brings you the business. I'm just trying to focus that how we can build the business. Request for introduction and alliances. What do I mean? There are similar professionals like CA, lawyers who are doing this. So we work on a return favor, a barter system. We give our clients to you who are looking for lawyer services or a chartered accountant services. Similarly, who are looking for the investment services, they can approach you. Then highlights your achievements. It is very important. Unless you share your highlights with your clients, the confidence will not come in. Share the links of articles, blogs, TV appearances, magazine writing, and increase your credibility amongst the clients. Share interesting posts. Now, one of the very important, the last funda which I would like to share within the given time frame is the marketing tool. This is very close to my heart, and I believe this is one of the most effective way in today's term, which I am going to discuss here. Do you know the fact that average time an individual spends is approximately 3 hours on social media today, like platforms of Twitter, which is X now, then WhatsApp, LinkedIn. How many of you have your professional Facebook account? I think 10, 15 hardly. What about the Instagram? Similar number. What about the LinkedIn? Better numbers, but what are you expecting from LinkedIn when you don't have anything on the social media with you? LinkedIn will demonstrate your skills, your qualification, your experience. That's more of a professional platform made for the people on the other platform so that they can check your relevance, your experience, your background. Fact number 2, as per McKinsey, Digital India report, Indians spend, imagine the power of India, Indians spend 17 hours per week on social media, with the highest number of the users in, that is 294 million users in India. We are the country with the highest number of people using the social media in the world. So you can imagine the potential. And we don't have a Facebook account, being a professional, we don't have an Insta account. How are we going to grow this business in the world of digitization? So what I'm trying to position is engage your clients on social media. So be on the social media. It's all about being on the social media. And what are these effective marketing tools which I'm going to suggest here is website, WhatsApp API, videos, media presence, IAPs. How many of you have your own website? Please raise your hand. I think somewhere around 80 to 100 people in a room where 350 plus people are sitting. How many of you are using WhatsApp API today? 1, 2, 3, 4. WhatsApp API, you understand? No. Sir, would you like to explain WhatsApp API? Mike. Yeah, it's there. Thank you.
Hello. I'm using WhatsApp API through double tick.
Acha, already? Okay.
Yes. In 1 minute we can send 1 lakh SMS, and it's not block our WhatsApp number also.
Okay, so I will make it simpler. WhatsApp, currently the WhatsApp you are using is a normal WhatsApp. When you send your broadcast messages, unless the person who has saved your number, it will reach their mobile, but they will not be reading it, and you will not know when they read unless they conversate with you. So that's one drawback with a normal WhatsApp. Second, they can obviously block you also. So your personal number, which is a business number, can get blocked, which is a big problem, so that you are not able to use WhatsApp going forward. Then there is a WhatsApp business, wherein again the same problem exists. WhatsApp API is a third-party platform where you are able to send broadcast messaging with different numbers, and if you are able to take a green tick, so like to make you understand a simple example, you must have been booking your flights with Make My Trip and Yatra, right? Either you do a train booking or either whatever hotel booking, you get a confirmation WhatsApp message from Make My Trip or Yatra, even if you have not saved the number. How does that happen? That happens through WhatsApp API. So imagine you are interacting with your client on WhatsApp API. Your brand name is going there. So I will explain a little more on that on the next topic. So what is the role of the website with you? So it's basically the virtual identity of your business. Website should be more than a business card to you, should have relevant info about your business. Many clients do online research before doing business. So imagine in the world of COVID which happened, we were not having our websites. Rather, good number of mutual fund distributors created their own websites in the period of COVID only, and after that the numbers stopped. If you're looking to increase our business, going beyond territories or even to showcase our presence in the existing territory, it is the essential thing to have the website. Add Google reviews. Google review is one thing which you cannot alter. So that's where the trust of your client comes in. So add Google reviews to your website of your clients. Create your own FB, Insta, LinkedIn accounts. WhatsApp API helps in overcoming the limitations of the current WhatsApp, as I told you. Curate the advanced strategies. So for example, so people who are using the Facebook and Instagram, they are not able to put a call to action button. So for example, there is an ad, you are just giving your phone number in the advertisement on Facebook or Insta. What is the response normally you get by doing this? How many of you are using Facebook or Insta or something like that for your digital marketing? So normally you put you have some call to action button to that, or you just put a number on that, just a number. And what's the response you get? Do you get a response? No. So does that mean that social media is a wrong way of doing a marketing? No, we have not done it the right way. Unless there is a call to action button. So for example, you see a lot of ads where there's a click button on that. So automatically your lead goes to the third party, whosoever the ad is being published. Same is the case where you can use that WhatsApp API for yourself. So you publish an ad on the social media, Insta and all, and then put a button, and that whosoever clicks it, automatically the leads, either if it's coming from FB, because that's a meta universe of Facebook, Instagram and WhatsApp. These all three platforms shares the data. So that data will fill and reach you. If the auto filling is not there, the client will fill and then the classified lead can be generated. You can also use bots. Bots are nothing but a way of artificial intelligence using the for doing the communication with your client, 2-3 conversations normally. So like for example, you are interested in mutual fund, insurance, gold, etc. P2P. Your client submits the interest and that interest is generated, and then you know that what conversation you are supposed to do with the client. Currently, you don't know about that. You can use WhatsApp for API for doing the broadcasting, sending videos, lot of those things. So WhatsApp API more works like a virtual CRM. How many of you are actually using even CRM for your business? Again, I think, Rao sir, we should have a session on digitization. So there is a report on the videos. As per the Forbes, the study, most people prefer videos over the reading text. If you see the new apps which are coming in, they have stopped writing text now. Only they are publishing videos now. Because the acceptability of the video and the retention of that video in the mind is much, much longer than reading the text. Whenever you make a video, It should be limited and restricted to 2 minutes. Making the media presence, writing columns, newspaper, popular newspaper, magazine, having maximum reach in client base. How many of you are doing investor awareness programs? Again, very less. And how are you doing, physically or online? Sorry, both. What's the best benefit you can derive from the doing investor awareness programs? Point number 2. It helps to build the trust and confidence before starting the first meeting with the client, enabling quick closures. And there are AMCs who are offering you investor awareness programs. So I think investor awareness program is one tool which you should focus. And that's all from my side. Thank you so much. Any questions I am open to. Any questions? So tomorrow on day 2, we have this 2 sessions on estate planning and WhatsApp API. So if you're interested to understand what is this all about, you can come tomorrow. I think most of you are already coming there. Thank you so much.
Thank you so much, Mr. Vyas, for such a wonderful presentation. I think there are small things, but we apply in our business, we are sure to grow our business. And without taking further time now, I would invite our next speaker of the day, Mr. Harsha Upadhyay. He is the CIO, Equity and Debt, Kotak Mahindra AMC. Mr. Upadhyay comes with a wealth of experience and a vision that extends beyond the horizon. He is here to present on the topic called Outlook 2024. Ladies and gentlemen, we are privileged to have Mr. Upadhyay with us today as he brings 26 years of experience in equity research and fund management. He has been associated with various organizations like DSP BlackRock, Prabhudas Leeladhar, SD Asia Securities, Reliance Group and UTI Asset Management. So I request everyone to please help me welcoming Mr. Upadhyay to the stage, and we are looking forward for his wonderful presentation. Welcome, sir. You would like to have a mic or you would like to stand here?
Hi, good morning, everyone. I'm sure all of you have been keen followers of the market, and with elections going on and results around the corner, I'm sure all your focus should be on the markets now in terms of thinking what to do at these market levels, what are the valuations, what do we do during volatile periods, etc. So over the next 15-20 minutes, I'll speak about the fundamentals surrounding markets. The volatility is part and parcel of equity markets, right? Whether there is election or not, there will be volatility in the markets every now and then. But what does the underlying fundamentals say? What are the valuations suggesting today? And what do we need to do? Or moving. This is exactly what happens in the markets as well, right? So when you try to invest, there is some event that confuses you. So starting with global economy, this is what was at the center stage in 2023, right? The interest rate hikes that happened in US. Look at the steepness of the curve, the red line. It is almost like a vertical line, right? We have seen such interest rate hikes even in the past, but all of them took very long time to pan out. But last year was very, very unusual because inflation was near zero, interest rates were near zero, and then inflation spiked. And that's when this kind of an interest rate hike happened. At the same time, because of unwinding of US balance sheet, because in global financial crisis starting 2008, US Federal Reserve started to expand its balance sheet to support the economy. That is also dwindling now. So both impact is seen on the economy. One, hiking interest rates, and second, in terms of cut in liquidity. That is what dominated the markets in 2023. But now in the last few months, we have been seeing inflations coming quite closer to intended levels of most central banks. So to that extent, hopefully at some point of time in the near future, we should be able to see stability and also cut in interest rates. Already we are seeing stability in interest rates in most economies. Hopefully over the next few quarters, we should be able to see some interest rate cuts. May not be going down towards that zero levels anytime soon, but definitely not at the current high levels as well. And it is also in the interest of US government because their fiscal deficit is very high and their interest payments are also ballooning because of the high interest rate changes that have happened in the recent times. So not only the corporates are struggling, but government also in terms of interest rate payments is struggling and will only increase the problems if interest rates keep going higher and higher. In fact, if you look at the US national debt, it is expanding at an alarming rate and it is almost doubling in the last 8 years. So in 8 years, it has doubled and the interest rates have also moved from near zero to 5.5%. So that's the impact that you are seeing on the US economy. Similarly, if you look at other economies, whether it's Europe, China, all of them seem to be struggling. Europe because of the energy crisis after Russia, Ukraine, and also the problems that they're seeing within their own economies. China, which was always dependent on exports more than the domestic market, is also struggling because global growth is subdued even today. However, Indian situation is completely different, right? India seems to be an oasis in the global desert. Our economy has been growing at a healthy pace of about 7.5% annual GDP growth rate. Our inflation is closer to RBI intended levels. Our fiscal deficit is high, but it is coming down. Our worries on the crude oil is also not so much, given that despite geopolitical tensions, crude is more or less around the $80 mark. So overall, for Indian economy, things seem to be quite okay at this point of time. If you look at domestic economy activity tracker, it has clearly seen improvement since the lows that we saw during the COVID. The bottom that we are showing in the picture is that of the COVID period, and you can see that consistently after that there has been a recovery, and that's what is giving support to overall economy. While private capex is still at a nascent stage in terms of recovery, but we have been seeing healthy recovery in central and state government expenditures. And if you look at recent times, clearly it's been in healthy double digits on a year-on-year basis. And this is despite the fact that central government had to accommodate a lot of subsidies and a lot of support to social needs during the COVID period. We have also seen fiscal deficit coming down, which means that ability to spend money is limited with the government. Despite all of that, we have been seeing healthy growth. And if inflation doesn't shoot up from here, I think that should help further investments coming from the private sector as well. Another big thing that's happening in India is global capability centers that have been opening up. If you remember late 90s, early 2000, that was a period where IT outsourcing was one of the key drivers for our economy, right? Single-handedly, IT sector kind of changed the whole economic landscape for our country. Something similar is happening with global capability centers. Many of the global multinationals are opening their capability and support centers in India, which is going to use the skilled workers in India and also make employment that much more easier for skilled labor force in India. And definitely this is something that economy will also gain over the next few years. While the government has been talking about making manufacturing as the next focus area, and rightly so, not only our domestic demand is growing, but also India can get a share of global trade and commerce, because there is generally an apprehension towards taking more products from China or some of the other nations. And clearly that opens up markets for India, and India has been focusing on that. However, if you look at the services part, I spoke about IT services, and largely driven by IT services, this is how our exports have grown over the last several years, and significant growth rates that we have seen, and probably the third highest in the entire world during this period. Probably 10 years earlier, we never thought of talking about India when it came to electronics or defense, right? In fact, India used to import all of this. At a point of time, our electronics imports were as high as our oil imports. But today, Apple is setting up mobile manufacturing units close by. We have seen huge electronics units coming up in various geographies within India. We have also seen government focusing on defense, not only for manufacturing for Indian use, but also exporting. I think this is another big area which will continuously be getting a lot of thrust, and also changing the entire manufacturing landscape within the defense and the electronics segment. Another positive, we had not so great monsoon last year. The heat is unbearable this year, but hopefully if you go by the predictions, the early predictions, this year's monsoon is going to be good, which means that the rural economy, which has been struggling since COVID for various factors, probably will start to see some green shoots during this year. Since rural economy has not been doing well, we have been seeing the mass market consumption being very weak. If you look at FMCG companies which are focused on rural market, they have not been doing so well, whereas the luxury segment or higher discretionary category has seen quite a bit of improvement. For example, if you look at entry-level vehicles in the automobiles, they have been declining, but if you look at the luxury segment or SUV segment, that has seen quite a handsome growth. Similarly, if you look at HUL sales, they have not been delivering great numbers. The stock price also shows, stock has also been languishing at same levels for the last several years. But mobile phones, especially Apple sales, have been growing in the country. In fact, Apple sales in India have overtaken that of HUL sales. So that's the kind of shift that has happened in consumerism, where the upper end consumption has really taken off, whereas the mass market is still struggling. And hopefully with good monsoon and money going into rural areas during the election spend, probably you will start to see some improvement during the later half of the year. The K-shaped recovery is also because of the fact that while we have been growing, there are also imbalances in our country. Many of you may not be aware of this fact that only 12 districts of our country contribute to 50% of our GDP. And all these 12 districts, as you can see, are all near the metros or some of the major cities of the country. So 50% of our GDP is coming from only 12 districts. So that's where I think there is one India which is probably growing like US or Europe, and there is also another India which is struggling at this point of time. However, if you look at current Indian situation in various segments, whether it is auto sales, e-way bills, economic growth, which I spoke about, all of these seem to be at very high levels or near high levels. What is at lower level is probably the problem area of banking asset quality, which used to be a big problem a decade earlier, especially for public sector banks, which were really struggling with bad asset quality. Now those have also changed, and they have been probably having similar asset quality as good as some of the private banks or even better than some of the private banks. So I think that's what has happened, which is actually a very good sign, healthy sign for India, because when economy is growing, there will also be need for financial leverage, and that leverage has to be supported by the financial system. If financial system is not very strong, then the investment cycle cannot continue for a sustained period. But that is also something that is likely to happen going forward. Coming to equity markets, clearly for the last couple of years, we have seen domestic focused businesses doing much better than export oriented or global focused businesses. Whether you look at IT or any other export related sectors, they have been struggling, right? Because global growth is also weak, US growth is weak. So companies which are focused on Europe, US, etc., have been seeing a lot of issues in terms of the revenue growth and the margins and all of that. However, most of the domestic sectors seem to be doing well, and that is shown in this chart, where the earnings growth of domestic focused businesses have been growing at a better pace compared to global focused or just the Nifty. Similarly, going into financial year 25 and 26, we expect the same trends to continue. Although the valuations may be higher in many of these domestic segments, we do believe that as long as they continue to deliver better earnings growth as compared to Nifty, probably they'll continue to deliver outperformance over some of the other export-oriented or global-oriented sectors. You can see return on equity of companies over long period for about last 2 decades or so. Clearly, the initial period, there was a continuous uptick up till global financial crisis, and then until COVID 2020, you saw a consecutive years of lower ROEs. And that has started to pick up in the recent times. And this is at the beginning of a new cycle. And as I said, it's not driven by 1 or 2 sectors, but the entire domestic economy is contributing. Hopefully, this should sustain for a few more years. And also, there used to be another problem in India. Whenever a new cycle used to begin, the companies used to have a lot of debt on their books, which meant that they had to repair their balance sheet before they actually started their new growth, expansion, and all of that. But this time, even after having a situation like COVID, which clearly was not anticipated and hit most businesses, our leverage, corporate leverage, is at a 15-year low, which means the balance sheet strength is very good. And also, if you go back to the statement that I made, the banking system is also very healthy at this point of time. So not only borrowers, but the lenders are also in good shape. And it's time that our investment cycle will pick up and will probably take our economy to greater heights over the next few years. Looking at very short term, because we're in the middle of Q4 earnings season, nearly 28 companies have announced results among the Nifty basket. This is as of last Friday. A few more companies have announced results during this week, but this is as of last week. Clearly, you can see that the companies which have disappointed, whether on revenues, EBITDA, or on PAT, have been lower as compared to companies which have been giving inline or above expected results. So to that extent, the earnings season has continued to be a positive boost to the markets. Although at the headline level, the expectations have not been exceeded by a huge margin. It's about a couple of percentage points. But nevertheless, I think as long as the earnings growth continues and there are no disappointments, then probably market will also show that much lesser volatility. Just look at the profit pool of large caps. As you can see, nearly 75% of NSE 500 profit pool comes from large caps. This is relevant because I'm going to show you something else in the next slide, which will make you wonder why such an anomaly exists. Look at this chart. This is also the same chart for market capitalization. Instead of profit pool, we are showing market capitalization. As I said, 75% profit of our country comes from large caps, but look at the market capitalization of large cap companies. It's 63%. So it's very easy to understand. The large caps today are valued at a much lesser valuation compared to mid and small cap. The mid and small cap bucket is not delivering as much profit pools as the market cap is suggesting. There is a lot of hope built into that. If that hope gets delivered, then probably they'll sustain those valuation. If it doesn't, there is a risk of bigger downside in mid and small caps. Same thing, we have showed it in a different way. How much of expansion has happened from earnings growth and how much of expansion has happened from valuation re-rating. As you can see, for this basket, the valuation re-rating has been really much higher than actual earnings growth. And that's what worries, because currently the valuations of mid and small caps are at an all-time high. If you look at market cap to GDP ratio, clearly it's been at one of the highest levels that we have seen. Generally, our market has traded around 80% levels. It's clearly at a higher level. But one point to remember that currently our corporate average debt is also lower, leverage is lower. So if you look at a single company, whenever the debt reduces, the equity market cap goes up because the enterprise value remains the same. Enterprise value is addition of debt on the book plus the market value of equity, right? So whenever debt reduces, the equity value goes up. So now when you aggregate the entire India, the market cap has gone up more than GDP, but part of it is also because our debt levels of corporates are lower. So I don't think we are at all-time high levels when you look at this, when you look at both the charts, but if you look at only one chart, which is the left side chart, you will feel that markets are at very high levels. One last slide on the valuations of various segments, large, mid and small. As you can see, top left side, that is the valuation of Nifty, and the red horizontal line is the average valuation for last 15, 16 years in case of large caps. As you can notice, there is a different timeline that we have taken for mid caps and small caps. I'll explain why we have taken different timelines. But large caps currently are at about 19.7. The average is about 18.5. So it's about 5-6% of higher valuation compared to long-term average, which means that if our market is growing at 15-16%, on a quarterly basis, it's actually growing at 4% earnings growth, right? So if one quarter market moves sideways, this valuation excess will get corrected. Or if there is a shallow correction in the market, it gets adjusted. Or if growth continues to deliver on a higher level, probably this valuation can continue at these kind of expensive valuations. So really not much risk in large caps as a whole. But if you look at mid caps and small caps, where we have taken last 6 or 7 year history, that is the reason for that is, this is the time period when actually SEBI clearly categorized mutual funds and the stocks into mid and small caps. This is the time period when a lot of money has come into these segments. So what has happened in the last 17, 20 years may not be relevant for this sector. If you take that, anyways, the expensiveness will be even higher. But if you assume what has happened in the last 6, 7 years is a normal one, even then mid caps are trading at almost 30% higher than their average valuation. And small caps are trading at about 45% premium to their historical average. So clearly the risk in valuation is visible in small caps, little lesser in mid caps, not so much in large caps. So our advice would be, if you are a long-term investor, be invested in the markets, but have a tilt towards large caps at this point of time. And also don't make lump sum investments, given that overall valuations are also on the higher side. Going staggered way in a disciplined way will help wealth creation in a more sustained manner. And be aware that mid and small caps have one of the highest valuations that we have seen in the recent history. So any economic event, any corporate event, any natural volatile event in the market can cause more downside in mid and small caps as compared to large caps. So I'll close my presentation here. Do we have time for questions, or that's it? Yeah, maybe 1 or 2 questions if anybody has questions. Thank you so much.
Anyone, any question on this? There is a hand raised there. Can the team please give the mic? In front, in this row, yeah.
I'm Sailakshmi, MFD actually. Recent days the FA are taking funds out, and DAs are actually equalizing the buying side. So how do we interpret this, sir?
You would like to use this?
Actually, we don't have the slide in the presentation. If we had that slide, probably it would have been easier to explain. But there was a point of time when FIIs held almost like 24-25% of our Indian equity. And at the same time, domestic institutions, please have your seat, ma'am. Domestic institutions, insurance and mutual funds had nearly 12 or 11% of Indian equities, right? And also annual flows into Indian equities were dominated by foreign institutional investors at that point of time. I'm talking about 15, 20 years back, right? That is when the markets used to dance based on what FIIs used to do, because they were holding the largest chunk of our equities apart from promoters, because promoters generally don't trade in the market. Within the float, their chunk was the highest, and also the money that was coming in and going out from their pool was the highest, right? But in the last several years, that equation has changed. Right now, both FIIs and domestic institutions on their own will be holding more or less similar, about 17-18% of our equity. That's the point number one. Point number two, at this point of time, domestic flows are also equally significant compared to foreign institutional investors. For example, in the last financial year, both categories put more than $20 billion into the market. So there has been more of a balance. So that is what is reflecting in the lesser volatility that we are seeing in the market. And the last point is, we also have something called dynamic asset allocation products in the market, which have come into the market in the last 5-7 years, right? And the assets have also grown in that category. The balance advantage fund, the equity savings, and wherever the equity allocation can go up and down based on valuations. So that is also cushioning the market, because whenever there is a fall, even without fresh money coming into the mutual fund system, the funds can move from fixed income to equity, and vice versa when market moves up. So that is also reducing the volatility in the market. Yeah, currently the inflation, while it is manageable at current levels of around 5%, but it is still higher than the RBI intended level of 4%. And also there are geopolitical issues. For example, what happens to crude will determine how inflation moves in India largely, right? So with all of that, very unlikely that RBI will be the first central bank to go ahead and cut interest rates when other Western central banks are kind of holding the rates. So maybe we will have to wait for US Fed to take that first cut, and then probably we will see a cut. But I don't think there is room for too much of a cut. But over the next few quarters, somewhere we should see some cut in interest rates in India, especially if there is no spike in inflation.
Sir, I have a question, sir.
When compared to the US market, in India, the retail participation in F&O is very high. If SEBI wants to intervene and curtail the retail participation, so will there be any dominoes effect on the market?
No, I don't think
the currency.
I don't think, that scare is in front of us, but they have been putting out reports, which I'm sure you have also seen. 89% of derivative traders, most of them are retail traders, have been losing money in India. Only 10 or 11% of investors have been making money on derivatives. So large population is losing money and a few investors are making money. So obviously regulator is highlighting all of this, but I don't think anybody can go and say that valuations are high or speculative levels are high and you don't do this. I don't think that can be done. For example, even there was a point of time few months back when people felt that probably regulator will stop flows into mid and small cap funds, etc. No regulator will do that. They will highlight the risks that are there in the segment, and then it's individual call, right? You as partner, probably you can educate the investors to say what is right, what is risky. But beyond that, I don't think any regulator will take such steps in any market.
Sir,
Sir,
from
there
the
is a
slide,
question from
we
you.
have seen it. The premium to valuation, small and mid cap are higher when compared to large cap. This is the cyclical shift, or how this all of a sudden the small caps have become more popular than beating the large cap. This is because of the FIIs who is holding large number of stake in the large cap. Of late, they are offloading their stakes. Because of that, it is not performing or seem to be not performing when compared to mid and small cap. When this shift, basically as a MFT, we want to know large caps are safer. We want to shift towards that. When this shift will be happening, according to your perspective, sir?
No, very difficult to say, right? All we can say is currently it's expensive. There are no fundamental triggers for a valuation change, but anything can happen, right? 2 months back, there was one disclosure standard that came into the industry. It was known to everybody who was within the fund management teams in respective fund houses, right? Because we are looking at the portfolio, we know the liquidity levels, we know the investor concentration, all of that was known. Just those numbers were put out in a standardized format at one place, but that created panic. And what happened? Nifty fell only 2 or 3% at that time. Small caps fell 15%. Why did that happen? Nothing changed in that 2 weeks, right? Because the current valuations will also give nervousness at various points of time without even fundamental factors. That's what you need to remember. When it happens, nobody can take a call. They were expensive 6 months back, they have continued to move up. They could probably move up even further, nobody knows. But if you are investing there or if you are suggesting those funds, you should be aware of the risk that is associated. So don't go and put all your eggs in only small cap funds or only mid cap funds. Have a balance of your equity portfolio. Sorry, maybe I'm eating into others' time, so I'll... Yeah, it's a diversified basket of large, mid and small. So it has lesser risk compared to mid and small cap funds. Can we take more questions?
Last question.
Okay, last question. There are 2 of them who have stood up.
Let's try.
Yeah. In terms of the development of markets itself, the current definition of large cap, mid cap, small cap, maybe that also needs to expand. And, if that happens, there will be a lot of, I think, the turmoils in the
Yeah, that's also been debated at the industry level, but as of now, regulator has not taken a call to change that 100 next 150 and the kind of basket.
If you see the absolute size of large cap, mid cap, small cap, maybe they are getting nearer to than what they were earlier, like the graph was showing.
True. But as of now, it is still under discussions. Nothing concrete has emerged.
Sir, this is regarding globally countries are moving towards de-dollarization. So, in your opinion, do you think it will happen? If it happens, what will be the effect on Indian economy?
It's being talked about, but I don't think it's happening at such a pace that it is going to become a reality in the near future or even in the next 5-10 years. It doesn't look like. Because while India has started dealing with certain economies in rupee and their currency, for example, with Russia, we deal with in ruble and rupee. But that's a very, very small volume when you look at the global trade and commerce. So I don't think there is any other currency which is actually at this point of time can compete with US dollars to become a reserve currency. So I think, yeah, maybe it'll chip away some market share from USD being a reserve currency, but I don't think de-dollarization in that respect will happen anytime soon.
Thanks.
Thank you so much. Thank you.
Thank you so much, sir, for such a wonderful presentation. And there are questions. I can still see a lot of questions on the faces of the audience here. But due to time constraint, we are not taking. I would request Harsha, sir, to please once again come up and accept our felicitation. So I would request Mr. Deepak Jain to come on the stage and felicitate Mr. Harsha. This we are doing for the first time, the Vastram ceremony, being in Chennai, and we are feeling privileged to do that. Thank you so much. Harsha sir, that's a book on estate planning that we have created. I hope you like this. Thank you. So after this wonderful presentation on markets, the next topic is very evident. I think we all are looking forward to it, and it is a perspective on asset allocation and other factors influencing performance, presented by Mr. Mohit Bhatia, CEO, BIO Mutual Fund. Mr. Mohit brings with him over 25 years of professional experience in mutual funds and financial services industry, with a strong performance of track record and achievement of significant results in the areas of sales and distribution, marketing, branding, building of digital ecosystem. I invite sir on the stage, and we are looking forward for the wonderful presentation. Welcome, sir. So this is the slide.
Thank you. And once again, it's a great audience. So my greetings to all of you who've gathered here. I see a full house. And firstly, my sincere thanks to Deepak ji, Vyasi, Alpa here for inviting me here. And it's a great audience, Chennai. So, typically, my name is Mohit Bhatia, as you would have all seen, in the presentation flow and the agenda of the day. I head Bank of India Mutual Fund. I'm the CEO there. Am I loud and clear at the back? Very good, yeah. So, typically presentations end with disclaimer. I'm going to give two disclaimers here, having observed, the other two presentations. Firstly, this is a perspective that I'm going to give about, client handling, asset allocation, performance, and what is it that we can do, revisiting some fundamentals. But you are the people on the ground, right? You are dealing with clients, handling them day to day. End of the day, we are all trying to create wealth for clients in the long term. So this is just a perspective based on my observations over the last, 27, 28 years of work, in which about 24 years has been in the mutual fund industry. So observing investors, friends, clients, relatives, distributors, peers, right? So it's a perspective, comes with this disclaimer that you know the best, and please judge for yourself what suits your model. And two, I'm in Chennai, I realize that. So I'm going to use some Hindi words in my presentation, right? So like you've accepted MS Dhoni, right? So please accept the presentation, and I'll try to make it simple in terms of, what these imply, but these are simple words. But I thought I'll just begin with those two disclaimers. So friends, and why it's important is because all of us talk one common language, right? And what is that language? Money. Absolutely, right? We are here to make money for our clients. So what I'm going to do is set the context in terms of, what is the environment we are operating in India, what are the conditions around us. A lot of it has been talked about. You must be listening and hearing a lot of presentations. Why a perspective is important, why looking at what your client is expecting is important, something that Vyasi talked about in his presentation. And finally, a framework which I think can help us revisit fundamentals, refresh a few thoughts about some very well-known cliches, I would say, which need some refinement, and some other fundamentals which remain the same, right? Okay, so this is something that Harsha talked about, in his presentation in a very elaborate and detailed way, but I just want you to focus on a couple of things. Firstly, if you see the breakup of our GDP, in terms of what happened from 1993, we are picking up 4 decades here, right? 3 decades, sorry, and trying to see what's going to happen in the next decade from here. So you see that the share of agriculture has been reducing, urbanization is happening, there is a shift that has happened very distinctly to services, right? So this is the first 4 rows of the chart. And then what you see is increasingly now there seems to be manufacturing or industry which is forming an important part of the GDP. So, bear with this because like I said, this is setting the context. Importantly, the nominal GDP over these 10-year intervals has moved from 325 billion to close to about 4 trillion now, right? So we are a 4 trillion economy. And then the important thing to note here is that look at the Sensex, how it has moved, right? So every doubling of the Sensex is accompanied by almost a 3 to 4 times gain in the, every doubling of the GDP, nominal GDP is accompanied by almost 3 to 4 times movement in the Sensex, right? So except for the first one, because that's the time where, FI started coming to India, it also coincided with the Kargil war, the slowdown in the Asian economies. A lot of you would have been there at that time advising clients. But except for that, you see a very healthy, benign journey, in fact, an explosive journey for the Sensex, right? So that's one of the things. Two, it's also important to note the big picture. The big picture is that while our real GDP is growing at a great rate, we are the fastest growing large economy in the world, but it is also outpacing some of the next in line by a huge margin. So the difference between us and the second best projection is almost a percentage high, compared to Indonesia and China. So that's a huge margin when translated into nominal GDP. So this is for the next 2 years, and in all likelihood, this journey should continue for the next decade. And of course, I saw the raising of hands. We are all mutual fund distributors. A lot of us are mutual fund distributors. In fact, today as we talk, the industry has crossed 57 lakh crores. But important milestone we crossed with the help of all of you. All of you have been participants there. And then finally coming to this big mega trend of financialization of savings, which continues to be extremely important. So that's the big picture. That's the context that a lot of Indians, especially younger Indians, are now transforming from physical assets to saving doing their savings in financial assets. So that's a trend which we think is going to continue. Product innovation and complexity is increasing, and hence the need for good advisors and distributors. Market cycles are getting shorter, and on a lighter note, I think one of the contributing factors is that we have, close to 1.4 billion journalists in India, the WhatsApp Academy. So every time you get a message, client gets a message, he's up there to you, asking you questions about why the market is volatile or it's going up and down, right? But it is an important thing that with information being exchanged so fast, even at the institutional level, you are getting markets to be more volatile, and hence this is also a time where we have to be agile. And independent advisors and distributors have continued to grow. I consider as a manufacturer MFDs to be all-weather friends basically, because that's been a pillar for me in my experience of handling distribution at the mutual fund. I found that MFDs have continued to build up and thrive in this business, and really have kind of stuck to their clients. So it's a great opportunity, clients look at you. Of course, like I said, having said the context, it's important to look at what is the perspective of your clients. Now, I present this visual. Can you see, of course, this tells you a picture of the same place, but if you look at the left two-hand visuals, what do they tell you? They tell you, bad shape, there is, slums, you see, garbage lying on the ceiling. The other side is a picture of a similar area, right? But presented beautifully, right? So the perspective is really important. Why I'm saying this is, Mr. Vyas also mentioned this in his presentation, a very important point. It is important to know what your client is looking at, right? So you have to clear those, myths sometimes, help him highlight the reality. So for example, there are problems in India, but there are opportunities, and this is the picture going forward. So now in addressing the investor dilemma, I usually put a clip of a movie here, which is an old movie. I have not done that this time. But typically, what comes to my mind, I don't know if you all know Rajesh Khanna? Very famous picture, Amar Prem, right? So there, he's saying ki bhai ye kya hua, kaise hua, kab hua, kyun hua. So therefore, I try to build up from there and say that sometimes this is the question that foxes are investors, right? He's always asking you, so if we get these 4 things right, which is visiting these 4 fundamentals of हमने client के portfolio के साथ क्या किया, कैसे किया, कब किया और क्यों किया. So once again, I'm using Hindi here because it's rhyming well with the ka, right? But it's essentially, what did you do with your client's portfolio, how you did it, when you did it, and why you did it. So these are 4, I would say, pillars or parameters. I think if we look at, we are truly well prepared for answering all queries that the investors will have, right? And we've set the context that India, continues to be growing well. If you are invested well, I mean, the long-term journey in India should be good. Of course, the road in equities and market-linked products is going to be volatile, so we all need to be prepared for that. Okay, so when I said, ye humne kya kiya, that means it's basically the allocation. What did we do? So broadly, all of you know that allocation is extremely important because it decides, what kind of returns you're going to generate. So this is nothing but the assortment of various asset classes that you bring into the portfolio and try to manage the return risk expectation of a client, right? We are all very familiar with this. However, let's look at this graph, a very famous graph. All of you would have encountered this during various presentations. But essentially what we are trying to imply here is on the x-axis is the risk level, on the y-axis is the return level. In our endeavor, whenever we see risk, here is defined by what standard deviation या आपकी जो range of returns हैं in the portfolio. So whenever the range of returns is moving high on the right side, you should also ensure that the security you are adding is adding returns to the portfolio. It should not be, risk is added, but return is not, coming into the portfolio. So I'm going to also, ask you a few questions here. And this is when I said we'll revisit some of these fundamentals. So be careful about answering these questions. I don't have prizes, no punishments. But this is just a, kind of a, you could take a poll here or a view from all of you who've been seeing these statements. So the first one is asset allocation determines 93% of investment performance of a portfolio. How many of you think it is true and how many of you think it's false? Please read the words, right? Second one, asset allocation policy explains 100% of the level of returns of a portfolio. How many of you think it is important? Asset allocation is clear, right? How much debt, equity, gold, alternates we put in a portfolio, right? That's asset allocation. Second question, how many of you think the second one is right? Is false? Okay, that's interesting. Scheme or security selection plays a critical role in performance of growth-oriented portfolios. Is it true or false? Can I see a show of hands, please? Okay. See, I told you there are no punishment for guessing wrong, right? So, okay. Why I brought this up? Because sometimes we feel that the first one is a very, very, I would say, old statement that keeps on coming into a lot of presentation, advice and all. But when you go and look up the research, you will find that that first statement, portfolio return is not, performance is not determined only by asset allocation. There are other factors too. 93% of the returns volatility of a portfolio. So you chose a portfolio and you chose a benchmark, right? So volatility against that benchmark, 93% of that is determined by asset allocation, not the performance of the portfolio itself. Thoda sa complex topic hai, but this is something that we've been hearing that, do asset allocation and forget about everything. It's not like that. 100%, the second statement, 100% of the level of returns is determined by asset allocation. So if you are trying to generate inflation beating returns, what it means is, can you do with only a debt portfolio? You cannot, right? So unless your asset allocation has equity, right, or higher risk assets which are beating inflation comfortably, you can't have a inflation beating returns. Hence, what you put in your asset allocation will determine the level of returns. It's like saying that if you are competing in a F1 race, right, you have to better have a car which can match a Ferrari to compete there, right? You can't do it with a small hatchback, okay? Thirdly, what real research says, and I have given mention of these, papers. This is the important paper that came out in 1986 about asset allocation, and by Ibbotson Kaplan in 2000, and then by Ibbotson and Kaplan again in 2000 on asset allocation. And please look these up because these are important, right? So we are not here to confuse clients, right, with all the jargon, but it is important for all of us to understand. Because what the client will see is the confidence in your eyes, and that comes from understanding the concept, understanding your product very well, and understanding the requirements of your customers. So what ultimately comes out of this research paper is that 40% of your performance is attributed to asset allocation, the rest of it coming from scheme selection or security selection, timing, costs, and all that. So to prove this or test this, we tried to do a small test. What we did is we picked up two portfolios. One is a conservative portfolio comprising of 70% debt and 30% equity. And the other portfolio is the reverse, aggressive portfolio comprising of 70% equity and 30% debt. So remember the third statement, key security selection is important in growth-oriented portfolios, right? So what we found is, even in conservative portfolios, over 5-year periods, you see, we started with 100 lakhs, and in 5 years, the best value was 182 lakhs, the worst was 145, and the median value was 165. If you look at 10-year horizon, the difference is, 3 times 100 lakhs becomes 349 lakhs, and in 10 years it becomes 349 lakhs, and the median value is 296 lakhs, and the worst. So difference between the worst and the best is almost 1 crore. Now, if you look at aggressive models, basically, aggressive is when you have 70% equity and 30% debt, the difference is magnified, because of the power of compounding, selection of schemes. So when I said selection of securities is important, or what schemes you choose as an advisor is important, look at this difference now. So over a 10-year period, the difference between the best value and the worst value is almost 2 crores on an initial investment of 1 crore, right? So the third one, kab kiya? So timing, whether timing is important. Again, I'll do a small exercise here. So maybe somebody can volunteer. It's a very, very easy game. Sir, would you take these answers? Anybody else? Vyasji? Right? So you can keep sitting, no? Or anybody. So you know what? This is a game where you have 80% cards are green and 20% cards are red, right? So I want you to guess in terms of when you are deciding your portfolio allocation and deciding to move in and out of the markets, something in that context, right? 80% of the cards are green and 20% of the cards are red, okay? So you have to guess which card is going to come up now. So the first guess? Okay, this was the game, yeah? Okay, now, here goes. Ready? First one. Okay. See, everybody is guessing here and there, but yeah, okay, this is good. This is good. Okay, what is the next one? Yeah. So this is in context of entering, exiting the markets, right? Please keep that in mind. And let me add one more filter. It's about the Indian markets, right? How we all look at Indian markets broadly. Okay. 80% green, 20% red. Okay. It's a little bit of maths, right? Probability, because we all live in this world. Like we are saying markets upar jayegi, niche aayegi. There are people, working on greed. There are people working on fear. So what is the optimal strategy in this? Yeah. So if you were to choose only green, your probability of winning is 80%, right? The probability of losing is 20%, right? If you never guess red, you would be 80% times right. The moment you try to guess red, you are lowering your probability of getting that 80% probability right, okay? Because your accuracy will fall. So suppose if 20% of the times you're right in guessing, exiting the market, you still will lower your probability to 68%, right? This is very simple maths, but this is what is actually happening. Now place it in context of what is happening in the Indian markets. How many of you believe in the long term we will see, maybe a 10 to 12, 13, 14% returns in the Indian markets? Most of you? Yeah, we have the nominal GDP growing at that rate typically. You also saw that the nominal GDP typically has resulted in 3 to 4 times, and that's empirical evidence. Disclaimer is there's no guarantee, but this is what the proof is from Indian and other markets. Even in the US, the GDP went up from 3 trillion to 10 trillion from 1980 to 2000, and the returns were in this range basically, right? So there is a strong evidence. And what is the probability? How many of you think, what is the probability of you generating 12% return in the Indian markets? That's over the next, say, 10 years, CAGR? Fairly high. Can I say it's 70, 80%? Then why would you exit the market? So you will not choose red. So even if you have a 70% probability that this kind of return, and we are good, I mean, that's a good thing that we are talking about this probability over the next 10, 12, 15 years. And that's the time horizon we are taking for creating wealth for our clients. So we will not try to exit, because when you exit, you also have to enter back again in the markets. Finally, kyun kiya, or why did you do, or why did you do this to my portfolio is something that you keep on encountering from your clients, especially when the markets are going very high or the markets are down and the portfolio is suffering. So this is an important study published by the CFA Institute, which tells you about some of the important behavioral biases that, kind of come in. And this is something that clients, come and influence clients' decisions. So herding, they want to do what their friends are doing. Confirmation bias, they're looking for something they have experienced in the past. Overconfidence. Now this is something that you're experiencing, right? We talked about, are you all aware that the small cap index, right? I think last year generated about 65% returns, right? Only a couple of funds out of the 32 odd small cap funds were able to beat that. So what does your client come back and tell you? He says, I invested here in the stock. This went up 100%. Your portfolio only gave me 30% or 40%, right? So that's something that comes from the clients all the time, and that's a sign of overconfidence. So you have to, moderate or try and tell him that this is something that's not going to last forever, and moderate these biases. So therefore, to sum it up, what do we really go for? Allocation, selection, timing, cost. So Paul Samuelson, a very famous economist, has said that investment markets are micro efficient and macro inefficient. What it means is that at the level of small stocks and all, your price arbitrage is very limited. You can't really benefit from it as an investor. But macro inefficiency. So for example, somebody who started investing 20 years back in the Indian market has benefited because Indian markets have given outsized returns. Similarly, today, what is one of this inefficiency that comes to your mind in the context of asset allocation? Okay, quickly, because I'm running out of time. See, we allocate debt, but we've forgotten allocation to debt because of the tax-related regulations that change, right? But it is an important time because while interest rates have stayed up, right? And because of what Fed has done recently and the various geopolitical conditions, they have stayed up. But for the equity markets to do well in India, it's have to also stabilize and come down, right? So one of the things that you can do in context of a macro inefficiency is basically also allocate as part of your strategic asset allocation to debt, maybe through hybrids or through short-term debt funds or whatever, you know. So that's something to really look at. So ultimately, we can only control the controllables. Asset allocation, security selection is in our hands. Timing is not in our hands. Behavioral biases will exist, not in our hands, but we need to educate our investors about that. Importance of a holistic view, you know, that's for all of us, the advisors and distributors. This is again a very popular visual, 6 blind men, each one looking at the elephant from their own perspective and trying to see what it is. But as the mutual fund advisor or distributor, it's our role to ensure that the client's portfolio is based on a perspective that we've built up based on various factors that we saw. Finally, again, some Hindi to close it. Suno sabki aur karo man ki. Right? It's your own perspective that you build up that is going to matter, because the client is going to see. Like I said, we are not here to confuse the client or the investor, but it is important to have a holistic view and have that confidence which will come from your conviction about knowing the product, knowing what your client is. So therefore, your own confidence in your eyes or your perspective is going to be extremely important. So, suno sabki aur karo man ki. Thank you.
It's a great presentation. A big round of applause, sir. I request you to come back here and accept our felicitation. I would request Deepak ji to please come on the stage and felicitate Mohit, sir. We'll learn it next time better. Thank you so much, Mohit, sir. Thank you so much. So now when we're talking about the asset allocation, an asset class which is close to all of you, especially coming to South India, I can feel that. Any guesses for the asset class we are going to talk about now? It has to be bold. It has to be bold. So yeah, we are going to talk about gold as an asset class, a city that glitters with gold. Right or wrong? Last time I was in Chennai, I was proceeding towards Tirupati ji and I could see so many couples, you know, going towards the mandir wearing so much of gold. I completely felt that yes, we are in South India and we are where people have love for gold. In fact, we all Indians have love for gold. So I think it's going to be a wonderful presentation from World Gold Council, and it is going to be presented by Mr. Juan Carlos Artigas. He is Head of Research, World Gold Council. Ladies and gentlemen, we are privileged to have Mr. Juan with us today as Head of Research at the World Gold Council. He has been instrumental in developing insights on the gold market and its role in investor portfolio. With a rich background in US and emerging markets as a fixed income strategies at JP Morgan Securities and academic qualification from ITM and University of Chicago, he is here today to share his wealth of knowledge and experience. Please help me in welcoming Mr. Juan here, and is here for the first time with us here for a wonderful presentation on gold as a strategic asset class. Mr. John, a warm welcome to you.
Thank you so much. It's such a pleasure and a privilege to be here today with all of you. It's been a while since I was last in Chennai. I was here actually in 2017, so it's been about 7 years. I used to look like that. COVID happened, the beard grew. So, but it's really amazing, and I really want to first of all thank everybody, you know, for being here, and AM AAFM for the invitation. Thank you so much for having me today. And yeah, I think that this is a great time to talk about gold. Yesterday was Akshaya Tritiya, extremely auspicious time to be here. So it was such an amazing experience. It's the first time that I come to India about once a year, part of my role. But it's the first time that it coincided with Akshaya Tritiya. So I was able to see firsthand all the activity and all the purchases that were happening yesterday. So an amazing experience, and especially key in a place like Chennai. So thank you so much for having me. Now, I also, in particular, want to thank Mr. Mohit Bhatia for his presentation just now, because it really, I think, will set a very good tone for the progression of some of the things that I want to talk about, because I agree with him in many, many ways, right? But I want to expand on some of these concepts. So I'm going to talk about the case for gold right now, and I think that in particular, for Indian investors, gold comes very naturally. There's an understanding, an intrinsic understanding of the value of gold over the long run. But oftentimes, this value is presented in the context of, or perhaps is seen in the context of, jewelry that we buy as an adornment, but also as a store of wealth over the long run. Something that we buy for our generations is also culturally and religiously extremely important. But gold also has a role to play in asset allocation. And we have, we truly believe this, not just because we believe it, but because we've done a ton of analysis behind this. So in that context, and to start the presentation, let me just make sure that the clicker is working. There we go. Let me start first by saying that gold is a global asset. It's a truly macro-driven asset. Oftentimes, many people around the world, and even in India, think that the price of gold is determined in the US or in London. And I'm here to tell you that actually Indian investors and Indian consumers have a really important role to play in how gold behaves. Maybe not how it is changing between, right now and the next minute or tomorrow, but when you look at the behavior of gold over over 6 months or a year, the influence of Indian demand is extremely important. And as you can see, about 70% of global demand comes from emerging markets, and in particular, India alone contributes about more than 20% of annual demand. So imagine if there was no Indian demand whatsoever next year. Where would the price of gold be? It would significantly drop, right? So the fact, there is definitely an important connection between demand that is happening around the world, including in India, right? So don't think that the performance of gold is only happening outside and you're price takers. In the short term, consumers tend to be price takers, but especially with gold, in the long term, they are price makers, okay? Now, the other really important thing to understand is that gold has a dual nature. And this is key, because the way that it behaves and the role that it plays in asset allocation is underpinned by this dual nature. What's the dual nature? Well, on the one hand, gold is an adornment, jewelry that many of us are wearing. But it's also an investment, and these two things coexist. And what is important to understand is that gold in the form of jewelry or technology, all your iPhones or mobile phones and tablets and computers have gold components in them. So all of this demand is pro-cyclical. It grows with economic growth. So it doesn't, there's this perception that when you have kind of good economic times, it's not good for gold. That's not true. A good portion of demand is linked to positive economic growth, because if you have more income, disposable income, you're going to be buying more gold, right? And therefore that contributes positively. Now, what is also true is that gold as an investment tends to be seen as a hedge. When people are concerned, maybe the rupee could be depreciating, or maybe there's turmoil in the equity markets, right? So you're going to be using gold. So that part of the demand is counter-cyclical, And those two things coexist. And in addition to that, you have central banks that are making policy decisions and not based on the movements directly on the market, but many other things, right? So what does that mean? Well, that gold moves very differently to any other asset that you hold. So what's the strategic case for gold? You're talking to your clients and you're saying, yes, please, go ahead, buy jewelry. It makes a lot of sense. But make sure that you also have gold within your investments. Why? There's 3 reasons. A source of returns, a source of very effective diversification, and a source of liquidity. Now, when you combine all of these, that basically means that you improves the portfolio performance of your asset allocations. Now, let's talk about returns. And actually, Mr. Bhatia earlier said something that is absolutely true. As financial advisors and as investors, what we think about are returns, right? So what you want to do is to grow your money. And exactly as he mentioned, what happens, of course, as well, is that you cannot guess the market. I mean, somebody's going to give you money because there's uncertainty. If there was a certain outcome, nobody will, if there's no risk, nobody compensates you for that, right? So the fact that we don't know what will happen, creates this perspective. So yes, in the very long run, if you invest today and you have infinite time and infinite money, you just stay invested in a single asset class. Now, part of the reason that diversification happens, and I'll explain to that, is that, well, sometimes you need money the following year, right? Or you may, something else may be happening. Or you don't need to necessarily only invest in one asset class. The fact that you can combine some of these things can help you. Now, what happens is that it's absolutely true that the equity market, that the stock market, is going to, over the long run, outperform. And you can see this in this graph. What people perhaps not realize is that gold returns have been quite competitive compared to bonds and even compared to the stock market. And it actually behaves in different ways in different times. So when the red is happening, having some gold in the portfolio is going to help. So yes, please, stay invested in the equity market. Make sure that you have something to balance it. It may be an exposure to the bond market. It may be also exposure to stocks. So the purple side on the left is all bonds and fixed income. Then the green are stocks. The dark green is Indian stocks. The other one is and the light green is going to be commodities. So you can see how, from a return perspective, people don't realize that actually gold returns have been quite competitive. Diversification. That's the second point. Now, again, we just said that what we care about is diversification. A financial advisor doesn't wake up and say, what I want to do today is diversify for my investor. No, you want to create better returns for your investor. Now, diversification is a necessary evil. Because of uncertainty, you have to diversify because you don't know exactly what is going to happen, and you can benefit from that uncertainty. There's a benefit to doing that, also based on probability and the way that kind of like the world of financial markets behaves. Now, what happens though is that there is confusion between correlation and diversification. Okay, diversification is a much broader term. Sometimes people think that low correlation means diversification. What happens is that there are assets that on average have low correlation, let's say to the stock market. But when the stock market falls, it goes right along with it. So are you diversifying your portfolio? Not really, right? So what you need is the right type of diversification. And because of the dual nature of gold, this is not a magic property, this is just how the market works. Because of the dual nature of gold, it happens that when the stock market tends to fall, gold prices tend to rise. So it gives you the right type of diversification. On average, it has very low correlation. But when the stock market falls, generally gold price increases, right? So it helps you create more robust strategies. And that, as we heard earlier, determines 100% of your performance, the asset allocation strategy, right? Not, in terms of what you're trying to do. Not the returns, right? But the level, like where you're doing, how you're doing over the long run. Now, the other really important point is liquidity. Gold is a very liquid asset. What does that mean? Well, sometimes there can be a lot of alpha in illiquid strategies, like something that you invest and you sit on that for 10 years. And that is going to give you good returns. But maybe you need money in 5 years. So what do you do when that happens? You don't want to disinvest from the 10-year investment because they are going to penalize you. So gold can help you with that because it's a very liquid asset, right? You can sell gold whenever. Nobody's going to say, no, please, don't give me your gold, I don't want it, right? Especially in India. So, it is important to understand this in the context of, combining strategies. So yes, the stock market, yes, private investments, but also gold as jewelry, as an investment. When you combine all of that, again, what our analysis shows is that having some gold in your portfolio, maybe between 5 and 15% in the Indian context, can improve portfolio performance, risk-adjusted returns. What I'm showing is a fairly simplistic backtesting analysis. We have far more robust analysis, considering all the uncertainty that exists in asset allocation, where we show some of these items. Now, I only have a few minutes left, so I'm going to rush through a little bit through this part. I think it's important, but I also want to make sure that I have time for questions. So the first thing that I want to say is, well, performance. Right now, the price of gold is fairly high. It has been increasing for quite a few months. If my memory doesn't fail, right now it's about 71,000 rupees per 10 grams. So, it's a fairly high level. It raises attention for many people. So what is going to happen with gold? Well, the gold price has been increasing not only in rupee terms, in dollar terms, in many other currencies. Why? Well, partly because there has been a lot of demand from central banks. We heard earlier about the question of de-dollarization. Is de-dollarization happening? Well, I agree that it's not likely for the dollar to be completely replaced, but it is true that central banks are trying to diversify away from holding only dollars, and they are trying to hold other things in their foreign reserves, including gold. It is also true that more nations are trying to find ways to trade with each other directly and not depend on the dollar, right? The dollar is not going away, but they can coexist. So instead of having a single currency, you may have multiple currencies that you're willing to trade with, right? So central banks are buying more gold. That is, providing support. We also have investors, especially in Asia, generally, Far East, but also India, buying gold as geopolitical risks are happening, as some of these conditions are happening. And as central banks are buying, some investors say, well, if they are buying, we may be buying as well. And this is despite of the fact that, of course, there has been some deceleration in consumer demand with the higher prices. Yesterday was an exception, really strong showing in stores. But still, there has been overall a slight deceleration, all things considered. And you have also seen a boom or an increase in technology demand, especially in Q1, because you need more chips and faster chips to keep up with the AI explosion, right? So, all of that is contributing to fairly healthy demand. So, again, what does that mean? Well, it means that we do expect some potential continuous growth in demand and a somewhat weaker consumer demand, but that is going to be counterbalanced by it. And in particular, what does that mean for the gold price going forward? Well, while we don't do predictions directly of a price point, we're not going to come and tell you, oh, the price of gold is going to be X, Y, Z tomorrow. What we can tell you, or we have tools on our website, it's called goldhub.com. So you can go in and check it out. But you can see how our tools help you think about gold and what are the drivers that are going to influence it. So what are some of the headwinds? I actually flipped this around. There's a typo here. The tailwinds for gold are going to be that interest rates are on hold, and they are going to start to come down, so that's going to be good. And there's a weak dollar, so those are tailwinds, so they are pushing gold forward. The headwind, and again, I need to fix this, is consumer deceleration. But the most important thing to watch right now is what central banks are doing, what Western investors may be doing, because they are on the sidelines, so they may come in, if there's a potential recession or when interest rates start to come down. So there's more potential demand for that, and of course, Asian investor demand. So With that, I'm going to thank again the sponsors of these conferences for inviting me, AAFM, thank you everybody for attending today.
Thank you so much, Mr. John, for such an amazing presentation. I think this presentation should be well attended by couples, isn't it? So we would have probably, involved our couples here and could have done this. I remember the gold at my time of marriage was 12,000. And I think you all must have witnessed even lower rates at your all time. Yes or no? A significant number. Are we going to expect go higher? So I think it calls a cheers for all of us, you being Indians and South Indians, where the gold is very important. So thanks to all of you. I would like Mr. Deepak ji to please come and felicitate Mr. Juan here. A big round of applause. Thank you so much. Thank you. Thank you so much for the wonderful presentation and gracing our event, sir. So now, are we all excited for the next speaker and the presentation? Are you feeling tired? Too much of knowledge? Can you please share your experience and feeling? How are you feeling now? Refreshed? And I can promise you the next presentation is going to turbocharge you. That's my promise to all of you. Sir is looking at me, don't create pressure on me. So I think all the guesses are going in the right way. So without further ado, let me introduce our next speaker, the Head of Investor Education and Distribution Development, Aditya Birla Sun Life Mutual Fund, Shri K.S. Rao, sir. Mr. Rao has been a guiding force in the financial sector, contributing significantly to the growth and development of the mutual fund industry. The industry is 52 lakh crore, and I think 20 lakh crore can go to Rao, sir. So a big round of applause. Yes, the presence of someone of Mr. Rao's stature is indeed an honor for us, and he's accepting our request to be here to share the presentation. We always trouble sir to invite for presentation because AFM show cannot be complete without his presentation. So I request Rao sir to please come on the stage and present us with the wonderful insights on advisors leading the way, shaping Indian mutual fund industry for Amrit Kal. And this is a very, very important platform full of advisors. So please give a big round of applause to Rao sir. Thank you so much.
Yeah, please.
Its end is Romba Santosham, Romba Nandri, and seeing you all here. And I am between the tea time and now, right? This is a tea break. And I think you're all standing for a little longer. It's better stand up for a while, for a minute. That could be a better way. You can relax. And little bit of de-stressing. Little bit of de-stressing yourself. Shake your hands. Yeah? Yeah, once you are comfortable, have your seat. Can I have the slide changer? Yeah. Is it? Okay. And it was a really, thanks Deepak, and thanks to the DVD team, Deepak, Vyas and Dimple. And these are the people who always, very close to my heart. In the last 10 years, I worked very long. I only asked you to stand, not to go out, right? Yeah. It is occasion to go out. Okay, biological break and you can come back. And don't have your tea there. And it was awesome. It is, since morning, it's a lot to her. And the last session was, it is a session on the gold as an asset. And for me, what is gold, right? You want my opinion of the gold? All the people sitting in this room are gold. Yeah? Precious metal, precious advisors. What is that gold? GOLD? Goal-oriented leading distributors. Yeah. And focusing on the client goals, not on our goals. And before that, Mohit spoke about asset allocation.
And no, it was very interesting. And we had a great session from our Harsha. And it's awesome. And today we are here, the Hotel Accord Metropolitan. And for me, I always say the MFDs are the true people, and they need large accolades rather than Accord. And with this, I'll quickly run. I think I have 25 minutes before she waves a hand and before you are ready for your chai, I will take. And Amrit Kal is not a Hindi word, it's a Sanskrit word. Please excuse me for it, in case somebody is staying. And Amrit Kal, somebody who knows in astrology, they understand much more Amrit Kal. In Jyotish Shastra, it is, whatever you do that during good time. We have a Rahu Kalam and we have Amrit Kalam. It's and then you have a Yamaganda Kalam also, right? And right now we are in between. What happens on June 4th, we don't know. And all that we need to pay. That's exactly will happen. And I quickly run through, and I have a lot of data. Before I say, my humble, sincere thanks from Aditya Birla Sun Life Asset Management. We have just completing 30 years, and it is your support and makes all the difference. Thank you so much. Thank you. And some of you at the back also, you can clap it, because that can give an energy to you too. And there is no income tax for clapping, right? And thanks. It is like, we always believe, each one of us, not only vision for us, vision for all of us, we are enriching our lives. You and me together creating that wealth. All that can happen, the trust. This morning we spoke. It is not the markets, it's not the us allocation, but it is the relation, it's the trust. I think this morning when Vas spoke about what is that, emotional intelligence and emotional EQ and IQ, and probably we need to have a EMIQ. Equity intelligence, market intelligence, and intelligence quotient. And if you don't have a market intelligence, then we will struggle. I think a lot of stories. Good time managing the clients, greed is difficult. Bad time managing the clients, fear is difficult. I know during COVID time, how many people have come and scolded us, right? It is the experience, and each of you have gone through those phases. And there was a period of time I was in my Purvashram. I went to, there is a Christian missionary which was investing with us, and their market value has come down by, I think I had some 5 crores portfolio which has come down to 2.5 crores, half the money. When I went to meet that father said, mutual fund guys and dogs are not allowed inside. That's the story about, and how much you have to face that. And we need to have that. That's where the asset allocation plays. That's where multi-asset will place. But first of all, thanks to each one of you for this wonderful time. And let me do, and this is a little bit of my visiting card. I work for Aditya Birla Investor Education Distribution Development, and we work in various segments. We do mega events like Mahakums. We work for the Fauji Nivesh. We work for the women orientation, which is called For Her, exclusive for women. We work for the teachers. We work with CBSE. This is called Financial Education for Educators. We call FEFE. And we go to the 39 universities today. We do a program called My First Paycheck. And we work little over 1,200 schools with the My First Finance lessons. These are the initiatives which we do under investor education. And just we completed 15,000 programs this morning. Thank you so much. Thank you. And this morning, it was there in the Wealth Forum, today's letter, what are the things we do and how we do. We love to partner wherever. And in fact, for me, I am grateful to Deepak and team. We have started our certification programs with AIFM way back in 2015. And it's 2014-15. And our first program has started from this land. Trichy is the place where we launched that. Thanks to Deepak, and that is what our respect for Tamil Nadu goes. And it's a land of culture, land of a place. And one beautiful thing I can talk about Chennai and Tamil Nadu IFS is the first learning platform for the distributors started from South, that is called IFA Galaxy. Right? That's the credit goes to them. And after that, we have a, TIFA, Coimbatore Association, Pondicherry. But, we are the one, you started it. I remember Ramesh Bhatt in those days and A.K. Narayan, the kind of work we have done. It is amazing work. And now IFPA is doing the kind of great work here, Sundar and team. And kudos to them. And these are the awards which we won over a period of time. We won 7 times with Asia Asset Management Best Fund House Award for Best of the Best Award for Investor Education, and so far 52 awards. And we are counting, and many things to happen. But this is a broad presentation. I said it's a helicopter view. I know this is a season of IPL, and you like MS Dhoni so much here, and he has got that helicopter shot. And this is my helicopter view of the presentation. And today we are busy with IPL seasons. 1 IPL season, or 2 IPL seasons, or 3 seasons. No, this is IPL season. 1 is India's Premier League, and IPL 2 is currently India's political league. And all of us are playing another IPL, that is Investors Prosperity League. We are creating wealth to our investors, and we are the MSDs of world. That wealth we are creating, you are the MSD. Pardon? KYC. Sir, problems are the part of the life. Obstacles are the obstructions. For us, obstacles are not obstructions, they are the instructions to grow. KYC problem, I understand from industry, my apologies. I am also coming from an AMFI committee. But we are doing our best, but it's a regulator. Second, you took it on the positive side of it. This is the only period client looks at not going online, he will call his MFD. Sir, can you please help me? Right? You take it to your advantage. Why don't you? You connect to that. And I just quickly run. What is an Amrit Kal and how mutual funds sahi hai. All the things we know we have done, and I keep the time. And what is the financial advisory landscape? How we are looking at? We have just looked at 2024 markets when Harsh was talking. But how we can look at 2047? What can happen? And what is that aspirations we should have? We always need to have an aspiration. In fact, AAFM for me is, advisors aspire for more. AAFM, right? Advisors aspire for more. And that aspirations is a little bit hatke. Hatke is the Hindi word, but acronym. High aspirations are the key to everything. If you don't have an aspiration, you are gone. Keep that aspirations alive. And then what is the growth path where you can look at? What is the action you are going to take? And with this, I'll just quickly run. And when Amrit Kal for India, Amrit Kal for investors, Amrit Kal for investors, Amrit Kal for each one of us. And what we need to do is be positive, be proactive, having that learning curve on and on and on, and then we can be there. And here, in fact, yesterday somebody was talking to me about Twitter and the X, which uses 144 words. And Tirukural, Tiruvallar, 5,000 years back, he has created 144 words. You get a nice stanza, right? Nice message of Tirukural. And we are much ahead of X or Twitter 5,000 years before. And similarly, India, we need to be proud. We are the one created the first university in the world, Takshashila University. And we are the one who created world to learn the language of money or language of the arithmetic. The zero is invented from India. And Ayurveda, it's coming from India. We are the country, we have given many things to the world. Our neighbor knows how to give a virus. We know how to give a vaccine. That's the difference between us. And we are a country, we belong to giving to the world. And of the 2000 years of economy, at least till 1700, we have 25% to 30% of the GDP. We are coming back to much deserving place where we belong to. We are moving there, we are in that direction. And somebody said India, it's a decade, and somebody said it's an India century. That is what we have here, and all that we need to work. If an India is growing, we need to make our investors to grow. That's where we need to create the wealth for the investors. And it is, I will tell you one classic story. Last week I was there with one of the cricketers at RCB. And end of the match, we had a dinner meeting. We had, this budding cricketer, he told me one thing. All that he is playing, and because of him, they won the match last match with RCB with the Hyderabad guy, Deccan Chargers. What is that? Sunrisers Hyderabad. And then this guy said, all that I improved my batting and my bowling is just because of one person. That is a coach which is called Rahul Dravid. Mr. Dependable. And he said, I asked about what is your investments. I am looking for one more Rahul Dravid for me to help to manage my money. You are all those Rahul Dravids. You need to become that Mr. Dependables. How you need to become that coach? We do CWM. It's a fantastic course to be there, Chartered Wealth Manager. But you need to be that CWM. You are a coach, you are a wealth manager, you are a mentor. That CWM you need to look at. And this why you need a coach is if you can go back to India's epics. For example, Mahabharata. Pandavas won the war because they had a wonderful coach called Lord Krishna. But Ramayana shows us there is a wrong coach will make entire life miserable. Kaikeyi got Mandara. And then you have a home advisors. Like, in Mahabharata, you got Vidura, who is a wonderful guy at home, but you will never listen. Means even if you have somebody at home, please don't coach, give it to the financial advisor. And you have a Ramayana, you have a Vibhishana, who advises well, but no one listens to him. That is the reason you play a vital role in Indian context and every context, whether it's a budding cricketer or anywhere you can look at. And this is 2047, how the document looks at, Indian government, how they have created, how this document can work for us. And, there is a fantastic things available in the Google. You can search and download that India's fact book. All that what you need to do is per capita income of Indians, how it is going up, and GDP is how it is going to go up, and how you can move forward. And how that growth rate of India today, we have seen a couple of slides earlier when Harsh's presentation. And India is not only the fastest growing, but is one of the largest economies which is growing faster. And sectors which are looking at, service and technology sector, when the GDP composition, when he spoke about Harsh, he presented in that. And we have a demographic dividend, which is the youngest nation today we are looking at. And government initiatives and economic reforms, all that leading to India is accomplishing what into good. And when India's GDP is growing, and we all here to grow, simple reason that will create an increased demand, and increased demand will give you the increased profit to the corporates, and increased profit will leave the companies to grow. That will compete to the market capitalization. Like, as the GDP is growing, as the market capitalization is growing. Means, as the market is, if I am looking at 7 trillion economy by 2030, from today at 4 trillion, means, by 2030 you are almost doubling. And this is where, Motilal Oswal, when he says about how Sensex can be 2 lakhs by 2030, that's the arithmetic he can look at. And it is like, other day I was there in Delhi, I was attending to a couple of this foreign institutional brokers. And one of the guy, after the session on the sidelines, asked us, like, which is the multi-bagger can you suggest to me? It's one of the journalists asked him at the tea break. And this man said, I will give you one big multi-bagger. That multi-bagger is invest in India. India is that multi-bagger. We are here that way. We need to look, that's the magic of India. And last 6 to 7 years, we have seen mutual fund sahi hai. And it's a mutual fund. Earlier I used to say mutual fund saral hai, but mutual fund mein KYC ka problem bhi hai. Right? And you need to look at. But if you can look at, first 40 years of mutual fund industry, 1964 when it started, today industry is completed 60 years. First mutual funds, UTI, and the first finance minister we had, T.T. Krishnamachari, who comes from here. And he spoke in parliament one thing. UTI Act he has passed, he said only one line. My intention of passing UTI Act, he said Unit Trust Act it is mentioned, is only to give capital market benefits should go to the common man. Probably that is not materialized for 40 years, but what is materialized in the last 20 years. You can see 1 trillion for the first 40 years. Now we are at 57 trillions. We have got 56 trillions in the last 22, 23 years. That is the growth, and for which you all need to apprise yourself. You are the people. You are the one who make it happen, right? It's the industry is growing and you are playing a role. It's growing at a 20% CAGR. Last year it was a little over 37%. But whichever the way it is growing, you are into the right profession. All that you need to do is the right learning and right advice that can make you to the right place to be there. And the unique investors are growing today. We have little over 4 point. I think, every month I will change my presentation, and next month invariably I can't be lazy because something else is changing. And today, when I am talking to you, we are 4.86 crores of unique investors who have invested with us. And every 1 minute, you have 10,000 SIPs have happened last year. Every 1 hour, every 1 hour, 10,000 SIPs are happening. Means, more you work hard, more you will get the things. Yesterday I was meeting one of our financial advisors from Chennai. I went to his office. And he said something about Guru Graham, which has moved to the Shukra place. And I said, whatever the place, I need to go to the investor's place to get my SIP. It is a which way planet will go doesn't matter, but I need to be with investor. That's the way we need to look at. And SIP could be a small ticket, but it is a big impact. 20,000 crores per month, the book which you have crossed, 2,40,000 crores we are getting it. At one point of the time, industry is not that kind of size. If I can go back in 2001 and 2002, I mean, this is a kind of SIP momentum which is happening. Probably I don't look at this will slow down a bit, and it's a momentum. All that we need to do is we need to get that right advice. And now today at mutual fund industry from AMFI, we are looking at 100 trillions, and 100 trillions of this market, which is in the investor base, we intend to get the 100 million, 10 crore investors we intend to look at. And we are intending to even get 5 folds of the distributors today. There is a big campaign which is already on with the AMFI, but which is going to be a much bigger one, where the mutual fund distributors will be focusing in a bigger way. And there is a Niti Aayog projections which talks about India's mutual fund industry by 2033, it will become little over 210 lakh crores. That's a kind of projection with the Niti Aayog looking at it. And 3 things which are working for us. One is the progressive economy, and then, pragmatic government. And you may not like the third one, proactive regulator. And, we criticize the regulator, but they are doing amazing work. Certain things they need to do to protect investors, not protect you and me. And, this is the 3 things which we are looking at. And there is a huge pool. And 5 things which have happened in the last 5 years in India. One is the financialization of savings thanks to JM, Jan Dhan, Aadhaar and mobile. And there is a tier 2 and tier 3 has become much bigger. B15 to B30 we have moved faster. And regulator has played a very vital role. And technology is taking a shift. I think the theme this morning when Dimple was talking about the what is that? Tectonic shifts, which is which can create an earthquake sometimes, the tectonic shifts. But it is the biggest quake is technology and digitization which is happening bigger, and increasing the financial awareness. I think many of you who raised the IAPs you are doing, I think that financial awareness has become much bigger. I was there in Tiruvannamalai some time back. I don't know whether that MFD from Tiruvannamalai is there. We went to the main priest. After doing Archana, first thing I was asked, how my SIP is doing, sir? I am seeking the blessings of the Lord Shiva, and he is asking me how the SIP is doing. That is the awareness which we created today. That again credit goes to each one of you, right? And and then there is the increasing share. People are moving from the real assets to the financial assets. This is where things are moving faster. And the best part we have done is the market volatility has come down drastically because domestic this morning there was a question from Madam Sai Lakshmi. And when FIIs are going, DIIs are contributing. Last 3 years, DII investments are more than the FIIs, and DII investments have come predominantly from the mutual funds. And within the mutual funds, MFDs played a vital role. The consistency of assets coming from the MFDs. And this is where I look at, and now mutual funds are reaching to every corner. There is one number I would like to tell. Again, credit goes to MFDs. Today we cover 95% of the PIN codes in the country. I know that's a huge number, 95%. It's an awesome number. I think that's a clap for yourself you can look at. And B30 markets are growing very big. You just see regulator when he focused B15, B of B15 has gone up. Now when they said B30 has gone up. And B30 share, it's almost 30%. 1/3 of the market has come from the B30 markets. And majority of you who have come from the markets like Trichy, Madurai, Salem, it's like, it's a Hosur, Krishnagiri. That's where the market is really growing. And 75 lakh women investors have come in the last few years. I think the focus, I call, we have a For Her initiative. We do this, Har Ghar SIP, but for me I call HER, Har Ghar SIP. We are with Raji Madam here, Alpa here, who are our brand ambassadors who does amazing work for the women education. And this is where we have reached the corners. And if you can look at 2047, where you can look at mutual fund industry, rough number could be, rough estimation could be, we may be a 640 lakh crores if we are at 20% of the GDP in 2047. In that today 50% of the retail money is coming from the, I think there is a warning bell for me. Before that I'll try to sum it up quickly. And the 50% of the money, if it is coming from the MFD community, you yourself can create 320 lakh crores. That's the kind of opportunity for us next 25 years. Probably time for us to bring even your next generation to this business. And we have at Aditya Birla, we have this program called Legacy Leap. You create a legacy, but give it to your next generation. How we can train them and we can certify for them. Today, we are looking at 150,000 ARNs, but these numbers are just growing up. And 40% of the distributors are come from the B30 markets. I said, why MFDs are leading the way? This is what MFDs are leading the way. And there is one good number, we are all talking about SIP number is good, but the biggest number is number of SIPs completed 5 years, 50% of them are coming from the MFDs. The consistency and persistency is coming from the advisors. This is a quality of each one of you. I think you need to just focus on that. And then, today we are all, some time back when IFE Galaxy was started, the first year I was talking to Mohsin ji. And, that is a time when the direct plan has come. All of us were worried. We are throwing our bags. Sometimes we are throwing our chappals also. And, but after that to now, it is almost 14 years. And today we are only 5% of the retail assets are direct. Don't worry too much about immediate competition. The real competition is yourself. If you are not learning and unlearning, then you are a competition. You need to learn always continuously. That's where AFM play a very vital role. And there are many initiatives done from the AMFI. You need to appreciate. The biggest one which we are doing is getting the next generation to this business. Can you give the volume? No audio? No, we are focusing, I'll just skip it because you can give the audio for the next one I may use. And we are focusing on the next generation to come to this business, and we want to look at, most of them can come back and do it here. Oh, yes, you stopped this, is it? This is not working. Yeah. Chalo, I'll just skip it. But this is a momentum of period which is coming to you. We all talk about chart GPT. I'll talk to you about chart GPT. That GPT, what you can chart is your growth, your profitability, and your transformation. That has to be an ongoing one. Focus on the growth. Your growth can happen only when client is growing. Your profitability will come only when client is creating a wealth. And your transformation will come with every learning. I think, today we have 350 paid people who are coming to the learning. Yesterday I was in another forum in Chennai, little over 100 plus. We are all ready to learn and we need to upgrade ourselves. I think this is where you can look at your chat GPT. And there are few things which are happening. Keep understanding how the landscape is changing. And understanding, basically focus on your client. Nothing on the mutual fund industry. I am coming from the manufacturer. I can create a product, but for you most important is your client. And the building the trust and credibility is important. Good times and bad times, just focus on what is client is interested. Not small cap, mid cap or large cap. Then you will have a mad cap. Just focus on the client cap. Visit that client cap. And adapt to the technology. Just be there. And focus on holistic life planning. Go beyond financial planning. Because client, for him, finance is one part. His life is bigger part. As an MFD, you play a vital role. This morning when Vas said the emotional intelligence, client needs that emotional connect. And sticking to the regulator, please don't blame regulator. If the traffic commissioner of Chennai says, Akkad Metropolitan, before there is a one-way traffic, you go wrong way, you pay the fine. And be with the regulator rather than opposing the regulator. And build a business which can be a sustainable, build a business which can be a scalable. I think we are here to support you. And you have an opportunity to connect with the client in every aspect, whether it is a life stage, whether it is the income source, whether it's the income level, whether it's the investment. Put the client before your business. And every person, every client is very different. This morning when I was talking to Deepak ji, he's working on a project management certification. Every client is a project, he said. It is true, every client is different. If you have a 60 investors, 60 different behaviors you have to manage. Then for that you need to manage your own behavior. Your emotional quotient is most important for you. And then when you manage yourself, then manage further. And understand for your clients, not just money, but give everything about not investment advice. At Aditya Birla Capital, we call this as a PFA. Protection, insurance is most important. Investment is important. And financing, providing them the opportunity to loans, etc. And the last comes an advice. You can keep that advice and you become a money advisor. And you can grow your business. In my coaching, I use this model called GROW. Any client who comes to me, he got a goals or she got a goals. And you should have a goal. This evening when you are going back, what kind of India is growing? 2047, this is the AUM. 2030, this is the AUM. What is that AUM you want to manage? What is the clients you need to get? And where are you? That is R, reality. And what are the options for you to grow? That is O. And what you do for it. Probably, some of like AFM can support you on your business models or in the coaching. Each one of us, when we started our journey, we are amateurs. But we need to upgrade ourselves to the masters. It is like, every pro was once amateur. MS Dhoni, when he started his first play, he was a gully cricketer. Today he is an MSD. And all that we need to get there, how I can get that master from amateur to the master. And client got different phases of the life, and you have a different phases of advice. First client comes to you as a simple investment in investor. Upgrade him, create a wealth for your customer, then you create a managed wealth of your customer. And after the managing the wealth of the customer, you need to move wealth planning, third stage of the customer. And the last phase of the customer, you look at wealth distribution. Probably, from AAFM, when we started CFGP and AFGP, our whole intention is basic goal planning. Today, every one of you are moving to the CWM. This is where you play your role according to the client entry. Then you can match your role with that. And this is where you can become, first you are a distributor, then you become a consultant, then you become an advisor. Then you become a true coach and mentor for your customers. And this slide itself may take 1 hour for me to explain. I'll skip and I can meet each one of you separately in Tamil Nadu. And then at Amphi we are going to support, we have come with a 2.0 at industry level. But one of the pillar we have taken is a distribution development. Distributors are going to be the key personalities for us at Amphi. And this journey has just begun. You be your MSD for this cricket, and just players just started. Come and play in the market. It's just sitting idle will not. You need to play that. And then everything what you do, every engagement should have a purpose. And your own purpose statement is created, enriching the life of your investors. And there is a purpose of financial advisor should be beyond the business is you are the leader of the nation building. Other day I was doing one program in Guwahati. This is for the Faujis and our army. And this is a program called Fauji Nivesh. When I came back from here, there was one advisor with me from Guwahati who was accompanied to me. And one of the general there he said to me, I am protecting the border, but you are building the nation, you are creating the wealth. You are also equal Faujis on the ground, right? You are that Sainiks, that army, and you need to look at. And then last but not the least, mutual fund sahi hai, advisor, coach, mentor or distributor zaruri hai. That is a necessity for all of us. And now volume is there? Can you give me? No volume? This alone at least you can help me. Can you play from there? This is my concluding, then we can break for the tea. Vivek 49.
Caramel comfort. Scissors edukku?
I want to cut this one. எனக்கு போதும்.
அப்புறமா ஃபோன் பேசிக்கலாம், முதல்ல சாப்பிடுங்க.
ஒரு 2 நிமிஷம் மீட் பண்ணேன் ப்ளீஸ்.
ஹலோ அனில் சார்.
வணக்கம் அகர்வால் சார், சொல்லுங்க.
எப்படி இருக்கீங்க?
நல்லா இருக்கேன் சார், நீங்க எப்படி இருக்கீங்க?
அனில் சார், நாளைக்கு ஒரு வேலை இருக்கு. 1 மணிக்கு வீட்டுக்கு வர முடியுமா?
1 மணிக்கா? ஷூர்.
ஓகே சார், நாளைக்கு பாப்போம்.
சரிங்க சார்.
அப்பா.
பாச்சலோ.
ரிவன்.
வாங்க வாங்க வாங்க. இன்னைக்கு டிஃபன் யார் கூட ஷேர் பண்ண போற? சிவாவோடவா?
இல்ல.
சொல்லுங்க சார்.
அனில் சார், இன்னைக்கு வரீங்கல்ல?
கண்டிப்பா.
இங்க வேலை அதிகமா இருக்க மாதிரி இருக்கு, கொஞ்சம் லேட் ஆகலாம். ரொம்ப இம்பார்ட்டன்ட்டான வேலை.
ஷூர்.
சரி சார், நேர்ல பாப்போம்.
பை.
என்னாச்சு? எல்லாம் ஓகே தானே?
அகர்வால் சார் கூப்பிட்டு இருந்தாரு, 2 வாட்டி ரிமைண்ட் பண்ணாரு. அதான் போர்ட்ஃபோலியோ செக் பண்றேன். கொஞ்சம் என் ஷர்ட் அயன் பண்ணி வைக்கிறியா ப்ளீஸ்? அதுக்குள்ள நான் குளிச்சுட்டு வந்துடுறேன். வணக்கம் சார்.
வாங்க அனில் சார், வாங்க வாங்க. சொன்ன நேரத்துக்கு ஷார்ப்பா வந்துட்டீங்களே, சரியா 1 மணிக்கு.
ப்ளீஸ். இல்லை சார், நீங்கள் எனக்கு 2 வாட்டி கால் பண்ணி ரிமைண்ட் பண்ணீங்களா? அதான் ஏதோ அர்ஜென்ட்னு நினச்சி நான் இங்கே. கோலுவோட பர்த்டேவா இன்னைக்கு?
பம்மி இன்னைக்கு கோலுவோட பிறந்த நாள் நினைச்சிட்டு இருக்காரு. இல்ல.
பிரியா,
கேக் எதுக்கு? அனில் சார், கடந்த 10 வருஷமா நீங்க கொடுத்த மியூச்சுவல் ஃபண்ட் அட்வைஸை தான் ஃபாலோ பண்ணிட்டு வரோம். அப்படிதான் இந்த வீட்டையே வாங்க முடிச்சது. இன்னைக்கு இந்த வீடு வாங்கி 1 வருஷம் ஆகுது. நீங்க இல்லாம நாங்க எப்படி செலிப்ரேட் பண்றது? ஏன்னா இந்த வீடு வாங்கினதுல உங்களுக்கும் பங்கு இருக்கு.
This is the power of mutual fund distributor, right? This is the power you have created many places. I think, this is a famous statement from Picasso. Picasso's mother, it seems, she said, if my mother said to me, Picasso said, if you are a soldier, you will become a general. And if you become a monk, you will become a pope. But I have decided to become a Picasso. You are a Picasso of the world. You are creating the painter for the people, creating the wealth of the financial life. You are that Picasso. You are creating that. And this is a small 3-stanza lyrics from my side to you. I mean, who is an MFD? MFD says, we are not the authors. We don't write the books, right? But we are the clients. We are here to help the clients to take right money decisions so that they can create their financial book. We are not the architects. We are not building the houses, right? But we help our clients to build their life with financial abundance. And we are not the airline industry, but we help our clients to fly high with their life goals. That is an MFD. That's the power of MFD. That's the power of MFD. And this year is a leap year for us, 2024. That leap for me is an acronym. Learn everything to accomplish your purpose. Learning is the most important. In Tirukkural, I think 391 Tirukkural, which says, Karkai Nandri, what is that? Pichai Budinam, Karkai Nandri. Whichever the way, you need to continuously learn. And that's where you can lead the world, live every day to achieve your dreams. And that's where you can look at, I think this morning when she said, learn, evolve, and here is learn, upgrade, and evolve. And that is what you need to repeat. And it's educate yourself and educate your clients, enrich your clients and engage your clients well, and empower yourself and empower your clients. Then you can expand your business. Then you lead the way of the mutual fund business. And there is a moment of life in us, including every one of us. There is a chance to leap. This is a period of that leaping. And for me, I come from Aditya Birla Capital, ABC. I always say that ABC is always build competence. And we are entering 2030, if 100 trillion is the AUM, then all that you need to do is 2x and 3x. What is that 2x and 3x? Double your learning and triple your earnings. Putting your learnings is the most important, where AFM. And last but not the least, market is not always pleasant. There are unpleasant times. Customer is not always pleasant. And there is I think, Ganesh ji is here. We can say KYC issues will always be there. But in spite how you can be cheerful, ABC can be always be cheerful. And that's where you can have a leading edge. That edge for me, the asset allocation, when he spoke, EDGE, edge of asset allocation is EDGE, equity, debt, gold, and real estate. Keep all that so that you can get into the abundance and prosperity. Thank you and wishing you all the best. We break for the chai. Thank you so much. Thank you.
Thank you, Rao sir, for such a wonderful presentation. I think it calls for a bigger applause that we just did. A big round of applause to Rao sir for such an amazing presentation. Especially, it motivated, I think, all the advisors sitting here, and we are feeling proud that we are part of this industry. Aren't we feeling proud that we are part of this industry? Yes. So should we let go Rao sir, or should we want some more from him? Some more. There should always be fun element, at least with Rao sir, with so many IPL, ABCs, LEAP, CWM, so many terminologies we just learned. I think the handbook had less pages, sir, to note so many things that you just taught. So should we let go Rao sir, or should we do something with him?
No, we will break for the lunch. That is, T. TEA for me is an acronym. I mean, thoughts empowering into the actions. Get back that and get into the action.
But
God bless you all.
Letting you go. letting you, sir. I just need 2 minutes, not more than that, promise you. It's a rapid fire. I want to play with Rao sir today.
Oh my God.
So are we all ready?
This is a surprise for me too. This
Ready,
is
sir?
I'm not ready because this is a surprise for
So
me.
rapid fire comes with a surprise. We are part of markets.
Okay. As long
Define
as
ABC. Define ABC.
I said right.
Sir, you stole the question.
Pardon.
Yeah, you can repeat that.
No. Always build your competence, but always be cheerful. Competence is the most important part of it. Who's somebody's mobile? This is a Mohit has forgotten, or is yours?
Yeah, so this was first question. Sir, it's a rapid fire. It's a one word I need from you and just one thought that comes to you. Define yourself in one word.
I'm a friend of MFD for 3 decades.
One word for markets.
It's like now we are in the elections period, right? Markets are always a voting machine, but MFDs are weighing machine. They bring the stability.
Sir, one word.
Voting machine.
Cryptocurrency in one word.
I never invest.
Your approach to risk.
I love it.
Best investment advice.
Go with an MFD.
Describe financial independence.
Work with AIFM.
Your views on passive income.
Yeah, be active to get the passives.
Define retirement in one word.
Never retire, always retire.
Last but not the least, your outlook on innovation.
Keep your outlook always up.
So that's from Rao sir. A big round of applause. Thank you, sir, and sorry to trouble you for this unexpected rapid fire. Thank you so much. I would request Deepak ji to please come on the stage and felicitate Rao sir. A big round of applause for such an inspiring, motivational presentation. So we break for tea and we come back in another 15-20 minutes. Please join.
And I'm glad to be part of it.
So, Namya, first of all, can you just let us know about yourself and why did you join the CW certification with us?
Thank you so much. My name is Namya. I come from a finance background. The curriculum is very market-based, very real, something that you can relate about a day-to-day financial knowledge and financial events, not something that you feel that it's only theoretical and that's
Hello everyone, are we all back? I request people in the lobby area to please join us back for another exciting round that we have planned for you. I'm requesting people to please be seated, settle down yourself as we are starting our next presentation. Are we all ready? Can we please start? Thank you so much for your cooperation. I can see all the people coming back to the hall, and all are seated also. Thank you so much. I request people to please stop talking. There is little noise. Rest, we are all ready to, hear our next presentation. Okay, so ladies and gentlemen, it is a privilege to welcome Mr. Hari Shyam Sundar, the Vice President and Institutional Portfolio Manager for Franklin Templeton Asset Management Private Limited. Mr. Shyam Sundar transitioned to the investment management industry in 2009 with Franklin Templeton. Over a decade, he has made significant contribution to the industry and he has played various important roles in equity fund management team. He has also been the CEO of Navi AMC further enhancing his leadership experience and industry insights. In May 2023, he returned to Franklin Templeton as an institutional portfolio manager. Mr. Shyam Sundar, a CFA charter holder, earned his post-graduation diploma in management from IIM Bangalore and completed his Bachelor of Engineering degree from National Institute of Technology, Trichy. So today he joins us to share his valuable insights on market insights, unique opportunities and equity outlook. I think we are all, we are loving to talk about markets, asset allocation and products if you're talking about. So one more exciting presentation. I request everyone to please help me in welcoming Mr. Shyam on the stage here, please. Thank you so much.
Good afternoon. That's better. Right, good afternoon. It's a great honor to be here at AFM's first time in Chennai. Franklin Templeton, of course, has a much longer history with Chennai. We have been in Chennai for the last 30 years. We have always been not able to hear. Can you hear me? They think they're not able to hear. Okay. So Franklin Templeton has had a long history with Chennai. We are the first privately registered mutual fund in India. And some of our schemes have just completed 30 years, delivering over 19% per year to investors over this period of time. So that's the long-term story of some of our marquee products like the Franklin India Prima Fund, Franklin India Blue Chip Fund. I'm sure many of you would know about it and would be participants in our long journey as well. So thank you for your role and your support in this long journey which we have had. So speaking today about what we are looking at. So when we are talking about, they're not able to hear. Okay, so I'll keep speaking. So while trying to decide what to speak about today, I'm a part of the equity fund management team. My role is to be between the fund management team and also to speak with partners such as you. But trying to decide what to speak about today, of course, the India story is well articulated. We know well about how the India is on a solid growth path, and there's little doubt that India's Amrit Kal is upon us. We are among the fastest growing economies in the world. But today we just wanted to speak about a bit more of a nuanced perspective, look at slightly different part of the market, not just speak about the broader overall market outlook and economic development, all of that, but we wanted to focus into one part of the market which maybe we don't speak enough about and try to understand why it works and what are the ideas which FT has in that particular space. And what we're talking about really is innovation waves, innovation cycles, and the growth which you see in particular parts of the economy. So if you look at how things have been evolving in, this is a very, very long-term chart which almost looks at the history of all the progress which humanity has made from the 1700s to today. What is clear is that over this period of time, there's been developments across various kinds of technologies, right? So industrial revolution has given way to the third wave, which is more on the electricity wave and the chemicals wave. In the internal combustion, we've seen the rise of the automobiles through the last century. It has been really the hydrocarbon era in the last centuries. Fourth wave, we have seen that petrochemicals, electronics, we have seen aviation rising. That is towards the second half of the last century. And now we are clearly into something which is very different, which is a digital age. Going forward, we are saying that we are on what is called the sixth wave of innovation. This innovation cycle will take us through AI, Internet of Things, where everything will converge together. We're saying that all the internet which has been more fragmented today, will be around us in every form possible. It means that we will be in an era where everything is virtualized. You have a greater online presence in every activity which he takes, and we are just at the start of it. ChatGPT is just the start of what is going to be the next innovation wave. Last year was just the starting point of the artificial intelligence revolution, which will then get embedded into everything. What is the most interesting bit about this slide, though, is that we have seen that these innovation cycles are compressing in time frames. So innovation is becoming faster and faster. If we feel that, I'm sure all of us have felt that nowadays there's so much change which happens so quickly. It's hard to keep pace with all the change that's happening. And that is real. That is real. It is something which we have seen on the innovation side as well. What we think is that this is a sign of, and if you look at the innovation waves, these are represented in the markets through themes. Markets capture the mood of the times. Markets look at what are the fastest growing industries at any particular period of time and look to capture that growth into the story. Markets have stories of themselves which are represented by themes. And that's what I would like to speak a bit about, in terms of thematic investing and why do we invest in thematic funds? A theme really is any part of the market which is going to outpace the rest of the market in a particular period of time. So it is a concentrated segment or part of the market. So it is a unique and concentrated exposure. These are becoming a part of the broader market and economy. And this is very often the results and the returns are not just correlated with the rest of the broader market. The broader market may be doing something, but the thematic funds are doing having their own little stories playing out. That is thematic. And the previous slide spoke about what are the various kinds of, the most powerful kind of innovation waves which we have seen over the decades. So I want to speak about two products which we have, within the ambit of the two products, two kinds of ways of playing themes in a sense, right? So one which I want to speak about is the digital age which is upon us. We are clearly in a digital age, and it is a very powerful time which we are in terms of how the technology is changing and how India is adapting to it. One point here is that why is this such a powerful theme for the Indian markets? The themes play out differently in different markets as well. And each market, which is whether China will have a different kind of theme playing out. You'll have Japan, which will have a different theme. And for India, we are saying that this is a particularly powerful theme which is coming out right now. If you look at how the US tech index has played out over the last 25 years, India has not yet seen the full power of what it means to transition into a digital economy. And there are good reasons for that, which I will get into. But this is what the US tech index has done over the last 25 years, really, 25 years. And this is not something which is, so of course the dot-com boom was a bad memory in a sense, where you had a lot of unrelated unrelated to the bottom line. But what we have seen in the US tech stocks is that the earnings have been justified. Earnings have justified the stock movement. So if you've seen that massive outperformance, it is because the earnings have fundamentally outpaced the rest of the economy. So what do you speak about uncorrelated returns? This is an example of an uncorrelated theme which has played out in the US markets. The question is that why do we think that India's time is here? India had suffered from lack of internet penetration. In other markets, we had a build out of the fixed line infrastructure a lot more. So internet penetration had already gone to a different level. But for us, the internet penetration has really taken off just 7 or 8 years back, with Jio being available in everybody's hands. So this internet penetration is now on a massive uptrend. And we are seeing an accelerated digital adoption as a result of this. India is really right now where US was in 2010 in terms of e-tailing penetration. So and over that next decade, 2010 to 2020, we saw the rise of Amazon. We saw the rise of e-tailing in all its forms in US. So we are just at the starting cusp of it. We are also spending a lot more time now on our computers and smartphones, and that's leading to a lot of opportunities across the board. We are also seeing a converge, and so final piece which needed, so you had the internet penetration, people are now spending more time on their phones. What was missing is the payment ecosystem. So you want to buy something, e-commerce, online. Until 7 years back, it was not possible to really do that. You had to do maybe internet banking in very cumbersome ways, and very few people are really doing it. Today, there's a lot more belief in the payment ecosystem. As a result of that, we are really at a stage where the whole digital ecosystem is at the verge of taking off. Over the next decade, we expect the digital components of every sector to grow much faster than the underlying. So for example, if there is a pure play insurance player versus somebody who is already existing in the insurance player, that is going to grow much faster. Restaurants will grow at, say, X GDP, but food delivery could grow at multiple times that X. So across the sectors, you will start seeing that the digital sectors are growing much faster than the rest of it. And you're already seeing the greatest signs of this. So what we had done is that on the Franklin India Technology Fund, if you talk about a tech sector funds, typically you think about the normal software companies, right? You think about our IT export, big IT exporters. That's been a big success, and that's what the Indian tech sector is known for. But if I ask you, think about the tech sector in US tech companies. I don't think you'll come back with Accenture, right? I mean, you'll think about Amazon, you'll think about Meta, you'll think about Apple, you'll think about Google. You're not thinking about the software exports. We're seeing that in India, something like this is playing out right now. Even in China, if I ask you what are the tech sector there, you're not going to come back with export service. We felt that a tech fund in India needs to go beyond just a software exporter to tap into the emerging digital theme for the next decade. And that is what we have restructured the Franklin India Tech Fund towards. So now it is a mix of both the internet tech B2B platforms, you have some B2C internet platforms, of course software products and platforms are there, along with a few US companies as well, the best of our US companies, and feeding into the Franklin tech expertise which is there in US. Our teams who are sitting there, our funds which are managed there, we are participating in their growth as well. So that is the Franklin India Tech Fund. It has seen a fantastic performance in the recent time as well as a result of this repositioning. And this is one example of a theme. We are saying that this is not just a tactical theme. We are saying that this is a structural theme which is coming. And that's the way we like to think about thematic investing. It should not just be a short-term theme, but capturing an innovation wave for the next era of our economy. Coming to another example of this is the Franklin India Opportunities Fund. This is a different approach towards thematic investing. What we said here is that we want to identify a set of themes, but we don't want to maybe cast them in stones, right? So the idea here is, of course, to have a focused approach to specific themes. This is a diversified theme. So firstly, it is a diversified theme, so you're not just investing in a single theme. Second is you are talking about dynamic weights in each of these themes. And at the heart of it is our bottom-up portfolio construction. What this has meant is that currently we have 3 unique themes which are running in this particular fund. You have a Make in India theme, you have a digitalization theme, and sustainable living. Digitalization, there is an overlap between what I spoke about earlier, but Make in India and sustainable living are unique in their own rights. Make in India, of course, our move towards import substitution is a powerful theme. Government initiatives to promote the manufacturing are powerful. And you also have all the macro factors coming together for a capex boom. Sustainable living, very different story, but it's clear that climate change is real. We are seeing the effects of it in Chennai. We have seen the effects in terms of the cyclone, which we saw earlier, not too long ago as well. So the impact, and I think in Chennai, what we have seen is that this is last maybe 8 years, you've had 3 huge cyclones, but before that, I can't remember the last time when it had happened. So this is real. And the move to a sustainable living is a powerful theme which is going to play out in the coming years. But what's also interesting about the Franklin India Opportunities Fund is that we are saying that this is not necessarily cast in stone. At the end, a theme needs investable ideas. If we feel that investable ideas are not there, or it's done very well, or the whole space has become like the e-commerce or the dot-com boom in 2000, it's just massively overvalued. We have got the flexibility to move beyond these themes and identify the next emerging opportunity or the next theme which is coming as well. So this is a unique way of also looking at thematic investing. You are looking long-term, but you're not just restricting yourself to a set of particular themes. Here as well, what I'll say is that if you look at just delving a bit more into each of these themes, Make in India, its time is here. Digitalization as well, as you're saying that it is playing a role in every sector. And the thing with digitalization, to remind again, it's not just IT services exports. It is catering to a variety of different sectors within this. So it is a multi-pronged approach to even within a digitalization theme. And finally, sustainable living as well. It's got multiple legs in multiple sectors, from power and distribution to infrastructure to overall renewable to the electric vehicles as well. Right? So I think that is how these particular themes are playing out. We did this turn about a couple of years back to result in a very diversified fund, but which is again uncorrelated in terms of the returns. The portfolio as a result tends to have a variety of different kinds of stocks and has been moving pretty dynamically as well. And the results are here to see really. I think the last 1 year, last 3 year returns show that this approach is something which has been working pretty well. So in conclusion, what I'd just like to leave you with is the idea that thematic investing done right and with the focus of being in a long-term, by having a longer-term approach to thematic investing, that's one way to also create a higher set of returns, or possibility of higher set of returns, but which is more uncorrelated from the rest of the markets. The risks, of course, are there, but in terms of being able to offer something different for your clients, thematic investing is one way in which you can approach it as well. So thank you for your time, and happy to take it from here.
Thank you so much, sir.
Thank you.
And big thanks because you finished the presentation on time, but you covered everything. Thank you so much. So I request Deepak sir to please come on the stage and felicitate sir.
Thank you. Good to be here. Thank you very much.
Thank you so much, sir, for being here. Thank you so much. So now it's the time for panel discussions. We have attended a lot of engaging sessions and presentation. It is going to be a completely thought-provoking panel discussion, this I can assure you. And it is going to be moderated by one of my very favorites, Miss Alpa Shah. So she is going to be moderator of the day, and we have a lot to talk about her because she has been associated with American Academy, but now she has formally joined American Academy as a strategic growth partner and member advisory board AFM India. She is a founder, Empower Education. She's been in the industry, and I think most of the advisors sitting here may have interacted in the past also at various platforms. So Ms. Alpa is a social entrepreneur, author, and finance professional. She has worked for more than 25 years in corporates like Tata and SBI Group. Her passion for financial literacy called for to venture into her own entrepreneurship. She's a founder of Empower Education and is a managing trustee for Freedom Foundation. She does a lot of social work also. She's associated with various NGOs. and she's a chairperson at Women Entrepreneurship Development Cell, MSME, Startup Forum Bharat. Being empathetic for giving back to the society, she became the charter president of Rotary Club of Mumbai Inspire. She has also authored 2 books, Every Woman Should Invest and The Business Woman. You can follow her on Money Ki Baat, Alpa Ke Saath, YouTube and WhatsApp channel. A big round of applause for Miss Alpa Shah for being here. Thank you so much. And I'm sure it's going to be a wonderful presentation, panel discussion. But before that, I would like to invite Mr. Vyasa Nagpal and Mr. Deepak Jain on the stage to felicitate Alpa ma'am for being part of AFM at such a stage where we actually need her. Because now from here, we are looking to amplify and multiply our growth, ma'am. Can we have a big round of applause, please? Can we welcome her loudly? Sure. May I request Mr. Vedyanathan to please come on the stage and join us? Sure. So, ma'am will give a wonderful introduction for sir joining on the stage because he is the counterpart of our South team.
So Vaidi and me, we work together in SBI Mutual Fund, and then we are forever friends. And thank you, Vaidi, for joining here.
I think this is our industry and we should appreciate and motivate each other, right? And this keeps us going. Thank you so much, ma'am, for this wonderful moment. Thank you, ma'am. So we are now looking forward for the panel discussion, and the panel discussion is again going to be wonderful because it is something I think we are all here for. So the panel discussion is on the art of client acquisition, a new era. And the panelists are very, very special here today. So we have Mr. Ekmeet Singh with us, co-founder and CEO, Lendbox Per Annum. Mr. Ekmeet is the founder and CEO, the leading P2P investment platform in India. Lendbox enables retail investors to invest in people, an asset class that was previously accessible only by banks and financial institutions. Since founding Lendbox in 2015, he has helped serve over 5 lakh retail investors on the platform, along with partnering 1,000 plus IFAs and some of India's largest wealth management companies. Retail estate continued to be his passion alongside fintech, and his next goal is to marry the two with technology at the center. A big round of applause for Mr. Ekmeet. Then we have again one of the very special person from the fraternity, and I think most of you again know, Mr. Ganesh Ram, CEO, Mutual Fund Utilities. He is the MD and CEO, MFU. He carries himself with 20 years of experience in financial services, capital market, process transformation, and investment banking. He has joined MFU from BSC Limited, where he was working as MF Business Head. Prior to BSc, he has worked with K Fintech as Head Mutual Fund Operation and Digital Products. A big round of applause for Mr. Ganesh Ram, please. Thank you so much. And I'm requesting Mr. Deepak Jain to please join us for this panel discussion. This panel discussion cannot be completed without him. He is an author, speaker, coach, and trainer for elite finance professional, serving as the co-founder and director of AFM India and managing director of Next Gen Estate Planning. He brings himself extensive experience to the field. A big round of applause to this panel discussion, and we are all looking forward from this. Over to you, ma'am.
Good afternoon. I know we are in between your lunch time and hungerness, but trust me, we are all here today so much hungry for knowledge. Yes, business development. From the morning I've been listening to all the such beautiful speakers are talking about business development, Amrit Kal, India growth story. Well, this entire panel discussion we are going to have today is on how you can acquire clients on board, new clients, new investors. Well, first of all, a very big round of applause for all of us. We are almost 60 lakh crore in few days now, I think. And that's amazing. I was just talking to Mr. Ganesh that from 50 to 57 is like this, you know, because of you all. The first question I will ask to our none other than Mr. Deepak Jain. Deepak sir, what do you feel that the client profiling nowadays is completely changed? The traditional way of approaching in acquiring new clients or investors, will it work, especially when we talk about women investors onboarding, youth when we are dealing, or maybe, you know, first-time investors, how it will be easy for all our mutual fund distributors to get them on board with the help of the knowledge which they are gaining since morning today?
So, when you talk about client profiling and the traditional way of profiling clients and acquiring clients, that is actually already changing. So many of you would not like to restrict yourself to the geographies you are working in. You like to go digital and maybe acquire clients beyond your geographies. But when I talk about client profiling, acquiring, what I find the most important thing missing is there is no system. Most advisors, distributors have not created a plan. This is how I will work on my client acquisition thing. This will be the first step. This is how we'll fish. This is how will we catch the fish. This is how we'll mentor those people. This is how we'll groom those people. So I can give you an example from my industry because we sell financial courses. Now we found that digital marketing is very, very important in today's world. Right? Many of us even don't have websites. Let's not talk about digital marketing for acquiring clients. Right? You have social media platforms where you are not, maybe not making a personal branding of yours. So what we have found out is, and AFM does not do any other client acquisition technique apart from digital marketing. And Dimple is here, she knows that for last 12 years we have been acquiring clients only through digital media. And you can do the same. And you will have clients which are beyond your referrals. Please and that's very, very important to diversify the client base. Right? But once you create a lead through a digital media platform, the second step should be how do you nurture that lead. And for nurturing that lead, you need to segment that lead. I have a lead from a digital media platform. Now I need to segment them into various baskets. This is this type of person and this needs that kind of nurturing. Nurturing mediums can be immense in today's world. You can do email nurturing, you can do social media, custom audience nurturing and all those stuff. But nurturing is very important. After nurturing comes the third step where you start closing that lead. You need to take them to a level where I will now propose my solution. And closing is where sales is made or lost. Either we are very early to close a lead or we are very late to close a lead. Right? I take a session on sales and I say there are two types of salesperson and you are either of them. Either you are a hunter or you are a farmer. Who's a hunter? For hunter, sales is a numbers game. Right? You go out daily and say, I'll hunt for clients today. Then there's a second type of salesperson who says sales is a people's game. I will build relationship and then I'll sell. Now out of these two, which one are you? Are you a hunter or a sales or a farmer? Which is better? Okay, let me ask it different way. Suppose you have to build a sales team under you. Would you hire hunters or farmers? Hunters. So you are a farmer, you will hire hunters. No. Actually, you need a mixture of both. The balance is required. You need people who acquire clients and people who keep clients. Does your sales process include both those things inside it, acquiring and keeping people? Right? Client acquisition is going to change, and it's already changing. If you are restricted to your geography, not doing digital marketing, not acquiring clients through digital platforms, one day this business would outgrow you. You would not be able to sustain. Anyhow, we are seeing slowly there is consolidation happening in this field. And only people who will survive in this field are people who go beyond their geographies and acquire clients through digital mediums.
Go beyond to grow beyond. That's the, I think, clear message given by Deepak sir. And just to add that you have to focus a lot on acquiring women investors on board. 50% of the population is women in our country. You have to focus on that segment. Youth, the youngest country in the world today we are. We have to focus. A dedicated efforts has to be made in acquiring youth as far as your first time investors are concerned. And lastly, as Deepak sir mentioned, phygital is a good word, I would say. The combination of physical and digital will work wonderfully well. So thank you so much, Deepak sir, for giving such wonderful insights. My next question is to my very dear friend Ganesh sir. Most of the people sitting in this room must be thinking that, oh my God, robo-advisory is coming, these fintech platforms are coming, we are going to have tough time, in acquiring first-time clients, and what this panel discussion is all about. What is your view on that, sir?
I think my view is slightly different. Like Mr. Deepak told, I think first, my view is MFDs need to then adopt robo-advisory mindset to themselves. Okay, that's what I have seen. Like you said, phygital, I will slightly turn it, it should be digital. First is digital, then comes physical. Okay, I still see people a lot of doing physical activity, physical paperwork for them or for your team. I think the change comes from you. Okay, so you need to start, and I have seen this industry for last 10 years. I don't think robo-advisory has made a huge impact to any of your clientele. Okay, there is still scope. Now there is AI is coming. Okay, now people are, you would have seen my NSC's MDCO's video was my boss earlier. So Ashish Bhai's video was used AI and they kind of
it was a complete fraud.
Yeah, it's a complete fraud. I also messaged him. He said, yeah, both sir, aisa chal raha hai. So a lot of these are happening, but probably on the other side. Okay, so first, my point is whether MFDs are moving into a digital world. Are you ready? Okay, somewhere you need to, but the change is required. It's not easy along with your business, but I always say this, MFDs are, the one thing I really like about MFDs or advisors is they think a lot about their client, but they think less about themselves. Okay, this is one group of community. We always think about how to create wealth, how to make life easier for investors, but are you thinking for yourself how to make life easier for you and for your team? Okay, first let us adopt the digital platform. The reason I'm saying this is we see a lot of people still use physical paper, be it KYC or be it your transactions or anything else. So can we kind of give some target to yourself? Like regulator keeps on some target to do this. You keep a target for yourself and say by this time I will move all my business into digital. That's the first one. Okay. But second is worrying about robo-advisory, it's not going to help. Okay. So eventually technology is going to take away a lot of our work, make life easier. At times it will have impact also. But just worrying about robo-advisory, I feel that that's actually where we are actually, there's a non-value addition for thinking about that. Rather than what you can say is you can shift to a platform, and as Mr. Deepak told, I anyway have in my presentation, but I just want to use it now. I think we are also now coming with a good robo kind of CRM tool. Today what we realized in distributor fraternity is they don't have a proper CRM. So a CRM where I go and meet client, it gives me a reminder, it's attached to my transaction. So everything is done in Excel sheet, WhatsApp and all those stuff. But now we have realized that importance. So we are under development now. It will probably take another 3-4 months, but we will definitely come with a CRM. But my only request is, people should start using it. First 1 month, 2 months is going to be tough. We need to get this routine. As normally doctors say, okay, that 21 days is the right days consistent. If you do something, it becomes a habit. So to summarize, madam, what I'm saying is instead of worrying about robo-advisory, that AI now is, no one thought probably a year before AI will become a big one, okay? So these things will keep on happening, right? So let's not worry about this. Let's start doing digital. Let's put digital first and physical later, and then start adapting into digital. Your world, I think your circle, your office, you need to completely move into digital, and things will automatically play in place. So that's my view.
Superb. And I think digital is not a threat. Digital is for us to enhance and upgrade ourselves to make the things faster. Processes will be better. So as Mr. Ganesh said, that we have to look for the positivity and opportunities in every challenge which we come across in life. Also remember, for NRI clients, I think whatever Ganesh sir has suggested will work wonderfully well. So in acquiring NRI client, whatever tips are given to you today is really, really important. Please follow them. So my next question is to our third panel member today here, Mr. Ekmet. Welcome. Everyone is talking about social media, brand building, subtle way of selling. What is your view? Why it is so critical and important for everyone who's sitting here in this room to be present on social media? Do's and don'ts. How much to put? How much to, showcase? That's also an art. So what's your suggestions on that?
So thank you first of all, Alpaji. Setting up the website, like Deepak ji mentioned, is the very, very first step. It is like opening a shop online. And as soon as you open a shop, whether offline or online, the first thing that you think about is how to get the customers into your shop. Now, in the digital world, marketing and branding initiatives are the ones which will help drive customers to your platform, to your website, to your application. A lot of social media these days help you understand your target audience and lets you track them and target them on the basis of the kind of interest that they would have, the kind of online shopping that they do, the kind of travel that they do. So in addition to that, you will be able to profile the customers right. Now, when we talk about marketing from a broader spectrum, and this is true for both online and offline mechanisms. All the marketing initiatives are basically divided into two broader categories. One is basically on the market penetration part, and second is on the market development part. Market penetration is basically that there is an existing industry, and you as a distributor or a shop try and acquire a bigger chunk of that pie. That is, you try and focus on increasing the market share for your brand within an industry. Second is market development. Like Ganeshji mentioned, robo-advisory. I feel that what they are trying to do is trying to build another market, which is increasing the size of the pie, which is basically, for example, for a mutual fund industry, there are a lot of education and awareness programs done by AMFI and other association bodies, which are trying to bring more and more people into the mutual fund industry. One such campaign that all of us know on top of our heads is Mutual Fund Sahi Hai. And that campaign has worked wonderfully in bringing more and more people into the mutual fund industry. That being said, when you talk about do's and don'ts in an online marketing branding campaigns, I feel first of all, it is very important as a personal brand or as a distributor or a wealth management company, it is very important to understand the problems that the customers face. Second, I feel another very, very important part which becomes even more difficult when you go online and we talk about online businesses is building trust. When you go out physically, meet somebody, you're sitting right in front of him, it is still much easier to build trust. However, in a digital world, that becomes a very, very difficult mechanism to follow. And third is how you differentiate yourself as a brand from others. If there are 3 distributors coming to me to manage my wealth, how do you add value, right? This can be in terms of the kind of relationship management you do, whether you're cost efficient, whether you're really proactive in terms of your responses, I think these are the key areas which, even in the offline and the online world, have to be taken care of. What I feel should not be done in marketing and branding activities, first of all, I mean, we've noticed this multiple times, and this happens pretty often in the digital world, is over-promising and under-delivering. Most of the wealth management companies that you will see will be promising returns or maybe committing returns which are much higher than what they would be able to deliver. This leads to, I feel, higher churn rate for brands. Customers start losing out in the due course of time. Second, I feel neglecting compliances or regulatory compliance is something that a lot of brands do. Especially regulators these days, all of them have come up with guidelines on each and every industry on what you can market, what marketing communications can go out. So it is very important that you don't miss out on that. And third is, I mean, a lot of digital brands that you will see these days are very salesy in nature. I mean, so most of the marketing activities that we see are driven towards sales. I mean, I feel that is something that is a short-term approach to marketing. As a company, as a personal brand, you wish to have a branding which people would know by name so that you're able to distinguish yourself. I think these are the major reasons.
I think very well framed and explained also. So basically what Ikmit sir is trying to say is that digital marketing, social media is no more, it's a necessity. It's not an option available to you. If you can't write content, if you can't make videos, don't worry. Your case studies, the testimonials of the clients, you can surely utilize them as a part of your social media. So these are the do's and don'ts, and you must definitely understand what you are capable of. Take guidance, like how people come to you for financial planning and investments. The same way, I think you should definitely take the guidance of a proper professional social media planning person. Right? Secondly, also I personally feel that LinkedIn is a very, very important social media tool. If you really want to look professional, please give a lot of importance to LinkedIn as a social media platform. So my next question is to Ganesh sir, and the question, it's not the question, it's just one word. And I know you all will guess, what is this one word? Yeah? No questions asked. Sir, KYC, answer.
Need to be done. No other option. Okay. So there is nothing else. Yeah. I'll tell you how to do. Okay. Unfortunately, Mr. Rao put that entire thing on me, but I'm not the policy creator. Okay. So I'm kind of stuck in between. So I think it's definitely mandatory. I think I was just driving both in Mumbai, in Chennai. So when I was driving today, this metro is a big pain. Okay. So, but I was thinking that how it is so much related to KYC, right? So it's a pain now, but that's obviously for the future, right? But yeah, long-term gain. But KYC, I think, I do understand that we are going through a tough time, including me. I was telling that my KYC was verified, which I was very confident that it was validated, but then I checked, but immediately I did it. But I think there is a bigger background to the KYC. I think there's a lot of things from the government point of view need to be done to control some of those anti-money laundering, PML. A lot of guidelines has come, but so I need to sell MFU now. Okay, there's no other option now. So yeah, see, this KYC need to be done. So MFU has come up with a seamless KYC module for you. For distributors, this is the only platform in the country today which offers a distributor-based KYC. Okay, no other platform has. Every other platform, including the AMC websites, have DIY. So investor themselves need to go and do. But the concern, a lot of AMCs came back and told us is a lot of dropout because individual clients, it's very tough for them. So we have done a B2B. So you kind of log in and you take clients' data, upload, and it can be done on a T+1 day. It's completely Aadhaar based, no manual intervention. In case if you want to even correct the data, you can be done. You don't need to redo everything. But yeah, so madam, what I'm saying is, no, let's not look at KYC as a pain. I'm saying it's a pain, okay? But we need to get through this, and with the data what Amphi has given, I think the numbers are quite less, more than what I expected, okay? In MFE also we are, I think every platform, including BSC, NSC or other platforms, including RTAs, they have their own reports which is sent to you, saying that if you are a MFD or RIA, which are the clients and what is the KYC status. Please do look at it and take advantage of some of the digital platforms. Look at MFE also. I have a presentation around 3 o'clock. We'll talk about in detail about KYC. But this need to be done. There is no other choice, and this for our betterment. It's up to us whether we want to kind of cry about the problem, sit on it, or want to just finish it. As I told you, you can probably keep a deadline for you. The next 1 month, I'll ensure all my clientele will become a KYC validated. That's the deadline, you keep it. And whatever you help, AMCs, RTAs, on behalf of them I'm talking about, and MFE will able to help you to achieve it. So that's what I want to leave it.
Superb, I think. Thank you so much, Ganesh sir, and you have really set the good positive vibes. And as Rao sir mentioned, you have to see the opportunity. So when this KYC exercise we all will do, it will give us an opportunity whether our clients are underinvested or not. We will also get the idea and profiling, cross-selling, upselling, references. I think let's see as an opportunity, and thank you Ganesh sir for those ideas. But in continuation with that, one more question to you only, sir. You are in the limelight today, sir. What are the challenges which mutual fund distributors may face as far as the servicing are concerned or compliances are concerned while doing the KYC, while doing the documentation? Can you please make their life a little easy by stating few things which they need to follow?
So it's few things cannot be done. There's a lot of things to be said.
Okay, sir.
Yeah, but few things I will tell you. As Mr. Rao also told, personally and professionally, MFD community, it's my favorite because they have, like you told, madam, from 50 it has crossed to 57. Somewhere I think the AUM of the industry is also compounding. Yes. Big time, right? So the 100 trillion vision for Amphi, I think soon it will be happen because we already crossed 57. Okay, as we are talking today, probably it starts 58 also. Yeah. No idea, right? But what I'm saying is one area which opportunity, I think I have spoken to Mr. Vyas also, is as part of the industry. I have even approached Amphi, so I think we had a good discussion on it. One area which distributors need to look at is somewhere I feel, as I told you earlier, they more focus on clients, how to create wealth and all. They need to look at themselves, and also when I say they need to look at themselves, the transactional life cycle and investor life cycle in mutual fund industry is not an easy path. Okay, there is KRAs, there is platform, there are RTAs, there is AMCs, there are payment aggregators. Okay, so it's not a smooth line. Okay, it's not a straight line, and there is a lot of hurdles. Somewhere as a MFU or earlier I was with BSE, the one struggle we as a team have is explaining to the distributor about how this life cycle works. In case if refund is stuck, okay, who is responsible? What need to be done, right? And second is if there is a new regulation comes in, what is this regulation all about? So they need to first understand, and they also ensure their team also gets understand. That's where I think I see a great opportunity between Amphi and MFU part of Amphi and with AIFM to be a knowledge partner to probably do some certification courses in making MFDs understand how the transaction life cycle works. What are the challenges, right? And particularly, a lot of these distributors have their own offices. Okay, I'm not blaming them, but so many changes, so many, every AMC has their own process. Okay, it's not everyone has the same process. You will probably know transmission is a good example. Okay, after COVID, we saw transmission cases gone up, but every AMC has their own different set of rules. Okay, it's not easy. So I think that's an opportunity, and that one area, if distributors can able to gain, I think that's going to help their confidence, and also when they are acquiring clients. Because today in the digital media, or Mr. Ekmit said, everyone is aware. The client is very, because they sees everything into social media. Even if you don't share it and all, they will come to know. Okay. My son also keeps on asking me about mutual fund industry. Okay, I'm happy, but certain things even I'm not aware. Yeah. So he gets in this college group, and then I look at him, that's a fake. I told him, no, it's not like that. Okay, so they come to know. So I think it's very, critical for distributors to understand, their team to understand That one area, I think we see a great opportunity to work with AIFM and create some certification program or knowledge expertise in MFDs, which would really help them in acquiring new clients, retaining them or servicing them.
Fantastic. I think more you can listen to Ganesh sir when your individual talk slot is also there. But coming back to Ikmit sir, one of the best suggestions which you gave, which I personally liked, and which is you must conduct investor awareness program or educating the masses, not just for client acquisition, but also for your brand building, your own satisfaction, giving back to society kind of a thing. See, there are certain things in life which you have to do. And you please don't think what you are going to get in returns. Universe will take care of it. So thank you so much for giving that wonderful idea and advice to all of us today here. And trust me, if you can't conduct the investor awareness program or education program, please take help of professionals who can on behalf conduct the programs and help you. Everything is collaboration, partnership, which we are going to discuss with sir also in the last question which we are going to ask. But Ikmit sir, one question to you over here is, what is your choice between client retention and client acquisition? What works better for mutual fund distributor, costing wise and acquiring more business wise?
I can tell you all the numbers digitally, not
okay, sir, please go ahead.
So, so two metrics what majorly digital businesses track. I mean, one is what we call as CAC, which is customer acquisition cost, and second is LTV, which is lifetime value. Customer acquisition cost, CAC, is something is the sum of all the variable costs that you incur for acquiring a paying customer, not just a customer, somebody who gives you business. And lifetime value is the total amount of revenue that you're going to generate from that client. This might not be the first transaction. A lot of people usually get confused that lifetime, usually a bigger client on day zero is much more beneficial than a client who's giving a smaller check. However, it is important to understand that what you need to evaluate is the ratio between the lifetime value that you're going to generate out of the customer versus the cost that you've incurred in acquiring that customer. Usually, anybody whose LTV to CAC ratio is less than 1 is pretty much losing money on every customer that he's acquiring.
Very important.
Absolutely. And yes, and for a digital business, a good number to achieve is 3, I would say. That you're spending 1,000 rupees to acquire a customer, you're able to drive at least 3,000 rupees of revenue from that very customer. Now that being said, retention, the cost of retaining a client and building a long-term relationship is much lesser than acquiring a new customer. Digitally, these days, to acquire a retail investor, somebody who would start his journey from as low as a 10,000, 20,000 rupees investment can go as high as 5,000 rupees. Which is where the distinguishing factors between multiple players come to play, which is where the kind of value addition that you bring to the client comes into play, which is where like ma'am mentioned, servicing and how good you manage the relationship comes into play. And I feel that in terms of costing and if we talk about traditional businesses and including how mutual fund distributors used to operate, and I'm sure there are a lot of mutual fund distributors here who are managing relationship for people for more than 20 years. I meet so many distributors who say that I've been managing entire wealth for somebody over and for last 20 years. So eventually, it is important to understand that retention will always be better than just spending money on acquisition. If you have limited budget, limited marketing budget, limited amount of money, I would say that should be spent first on servicing and then on acquiring new customers.
Superb. What a great idea. And one last question, because we are running out of time, to Deepak sir. And then maybe audience, if there are 1 or 2 questions we can answer. Deepak sir, you are the man who does collaborations and partnerships and outsourcing all the time. What's your view how mutual fund distributors can get benefited with that?
So basically, I'll start by asking you, is it better to sell more products to the same client or acquire new clients? So that's where collaboration comes into place. You can't be master of every field, right? There are some skills which you have, but your client's requirements are much, much more than what you can service. And I would not like my client to be going to other specialists apart from me. So for collaboration, you need to collaborate with other specialists in their fields. I do a lot of work with HNI clients or ultra HNI clients for their estate planning, right? And many of these clients are given to me or introduced to me by mutual fund distributors who do not want their client to go to a banker to get their estate planning done. But the moment a banker steps into that, the relationship. Okay,
Yeah, I
great.
think it started.
So what these distributors do it, they know that they are not masters of creating a private family trust or doing a will. So they have collaborated with us and made us their back office. Similarly, you would have chartered accountants, tax planners. So we said you should have a network of experts around you whom you maintain excellent relationships, right? And I have seen in US and other developed markets, they have their profile printed, the distributor, and there they have mentioned their network of experts. That way, if you collaborate, you become my client, these 7 people also you will get services from. And they have made sure that these 7 people have also printed those brochures for themselves. Where in wealth management and investment planning, they put their name. So what are you doing? You are getting references from experts first. You are not losing client relationships to other experts because you are introducing them to experts. So what this world is about collaboration. But collaboration starts from networking. Unless people know you, you would not be able to collaborate. Right? The first step is people start knowing you in your niche, in your area, in your profession. And interdisciplinary networking is very, very important. We should not be limited to what we are doing. So mutual fund distributors are very good in networking among themselves, right? We have made so many associations and all. What about that interdisciplinary networking, right? How many of you have joined a club like a Rotary Club or a Lions Club, where you might find so many chartered accountants, advocates, businessmen, etc. coming to that meeting every month, and you are able to network. You get lot of clients, you get lot of professionals there. So it's a mindset. I want to be known and I want to collaborate. That's the way business would work in future.
Superb. I think there is a very beautiful forum for networking called Business Network Individuals, BNI. Yeah. Also women forums. There are solid, strong associations where women promote each other like CII and all. Please network. Networking is extremely important and come out of your comfort zone. We all are good here, we know each other. But for true business and new client acquisition, networking beyond the boundaries are extremely important. Thank you so much for bringing that point out. And 1 or 2 questions, if time permits, ma'am, can we ask one question? Yes. Okay. Any question from the audience for Mr. Ganesh, Mr. Ekmit, Deepak Jain sir? Yes, sir.
My question is around acquiring global clients. it has been a very, very tough thing to get them on board, especially with the conditions like they should be in India when their KYC is done. Okay, or the FATCA and CRS and all the fear the foreign people have in those reports. So, what can be done to simplify this?
So I presume this question is for Ganesh sir only.
Sir, we have a solution, so I'll talk to you. Okay. So you can use our MFU KYC module. Not necessarily the NRI should be in India. It can be anywhere in overseas, and that can be done.
My suggestion was also to AFM that they can make some of these things easier, having presence in multiple countries.
Yes, good suggestion.
So when it comes to acquiring foreign clients, you should have foreign collaborations. Your client has a home country. Are you collaborating with the local financial advisors in those countries? That would make your life very easy, and that advisor has a requirement of servicing those resident Indian clients' Indian wealth. Are you collaborating with them?
No, in most of the cases, you have your friends or family who are in NRI, but not connection with others.
That's where it becomes very easy.
Yeah, but how to get those collaborations is again
LinkedIn.
Okay, so I think we can take this offline. Thank you all so much. And I think we are breaking for lunch, if I'm not wrong. Yes. Wow! Are you all happy? Thank you so much. Thank you.
To all the panelists, it is wonderful. Thank you all the panelists. And yes, we are breaking for lunch. I request my panelists to please stay here for the felicitation. Yes, ma'am. I'm requesting all the audience to please join us back sharp in 30 minutes. It's 2:10. We reassemble at 2:40. I request you please manage, as we are trying to manage the time. Thank you so much.
You gotta put your past behind you. Look, kid, bad things happen, and you can't do anything about it, right? Wrong. When the...
There. He's outside. You can call him. Hello everyone. I request everyone to please be seated. Attention everyone, I'm requesting all the delegates to please be seated. Neha? We have Mr. Vishwanath A, a co-fund manager, client relation, Prosperity Wealth Management Private Limited. We are privileged to welcome him, and he is associated with many audit firms. He plays a very vital role at Prosperity now. His prime responsibilities include evaluating investment opportunities, portfolio management, communicating the fund's investment philosophy and rationale of investment to prospective client. I think this is something very, very important because you also get to talk with your clients. So I request Mr. Vishwanath to please come us on the stage and give his presentation so that we can have some key takeaways from this exciting topic.
Yeah. Okay. Hello. Hi, good afternoon, everyone. Welcome to Chennai, and thanks for taking your time out on a Saturday to be at this amazing event being conducted by AFM India. And so myself, I'm Vishnath A, and I'm part of Prosperity Wealth Management. We are a SEBI-registered PMS portfolio management service, and we are based right here out of Chennai. So the theme of the event is tectonic shifts in the financial landscape. Talking of tectonic shifts, the tectonic shift that is happening in a major way is in the Indian economy. So India is one of the fastest growing large economy in the world. You know, it took 60 years since our independence for us to become a $1 trillion GDP. Since then, it's become 7 years and 7 years to become $2 trillion and $3 trillion GDP. And currently we are close to $4 trillion GDP, and it's just been 4 years. So when we say fast growing, it's really a huge opportunity in this economy. So like I said, at this pace, we'll be the third largest economy by 2028, and we'll be overtaking Japan and Germany in the time space. And what this will do is, this will increase our disposable income from the current $2,600 per annum to $4,000 per annum. And with a rise in disposable income, there is also a rise in the consumption-driven economy. And it also helps that the government is easing of doing businesses, like we are reducing the corporate tax rates to match with that of the developed countries, and also many other measures which is helping businesses to make it easy for them in this country. And also the various schemes like Make in India, Digital India, PLI, all those helps the businesses. So this is how our GDP has fared over the years. You can see a sharp uptick over there. And currently we are, our GDP comprises of 3.6% of the world GDP. We also hold 3.4% of the world's wealth. And our stock market capitalization is 4.1% to that of the world. However, we have 18% of the world population here in India. So this shows there is a huge headroom for growth in our country. So what I'm exactly trying to infer is that this economic growth is going to translate directly into the expansion of stock market. As can be seen here, as the GDP increases and as the GDP per capita increases, your stock market capitalization is also going to increase with that. And India is one of the top 4 stock market capitalizations in the world. It recently overtook Hong Kong in Jan to become the 4th largest country by capitalization. And our indexes have also given good returns through the years. And here's a small tale for you guys. So we all know that this is how the Sensex has fared since its inception in 1986. So it has given a CAGR of 13.4%, but this has not been without its fair share of adverse events and unfortunate events. So despite all this, Sensex has continued to grow continuously in the long term and will continue to do so in the future as well. At this same rate, our Sensex will be close to 1,44,000 by December 2030, assuming a 13% CAGR. So let that number just sink in, 1,44,000. So also, equity has done better, comparatively outperformed other asset classes as well. Take it gold, silver, your real estate, or the fixed deposits. So equity is the space to be, and while others are better for diversification, equity provides a better return for all the investors. So why are we telling all this is, we are, as I said, we are a SEBI-registered PMS, and we are a multi-cap fund. We run a fund called the Prosperity Discovery Fund, and our founder and CEO is Vasudev Gupta, who is always ready for a chat. You can hit him up anytime. And we also have a young and dynamic team of CAs and MBA finances to lead the operation. So what this team is capable of is to generate a CAGR of 29.5% since our inception. So it's been 3 years since our inception in December 2020, and we have 140.69% return since then. And this translates into an outperformance of 42.64% in that time space. So where exactly do you invest in the market? So while the Nifty has given good, handsome returns over the years, it is clear that the money is in small and mid-cap space, as can be seen in these returns. But it's not that easy, right? If it was that simple, everyone can do that. So this is where the challenge comes in. The number of companies, if you take in the large cap space, is close to 100 to 150. But in the mid and small cap space, it's almost tenfold at 2000. And with because of their relative size, their growth potential is also high. But with the relative growth potential, the risk is also high for these companies. And the data available about them is comparatively low, because these are small companies and we will not have much disclosures about them. So the stock picking skills required to make a well-informed decision before buying a company is really high when investing in a mid-cap and small-cap space. So how do we do it? How have we generated that alpha that we are looking at? So our main objective is to increase our alpha while reducing our negative beta. Alpha is basically the excess return that we are generating over the benchmark, which is BSE 500 for us. And reducing negative beta means when the market falls, we'll need to have a risk cushion to limit our downside risk. So we employ something called the core and satellite portfolio approach. So we divide our portfolio into two parts. First, we'll talk about the core portfolio. This consists of the large cap companies. These act as risk mitigators. These are the risk cushion, and in times of economic downturns, these provide stability for us. And the satellite portfolio, these are comprising of small and mid-cap companies. These are our alpha generators. We identify companies with strong fundamentals, and it is really important that it's undervalued so that it gives a good cushion for us in terms of growth. So what we do is, we vary the ratio of core and satellite portfolio based on the market cycles. If it is a good economy, we'll have more of the core portfolio, let's say 70-30, so that we have stability in our portfolio and our downside is limited and even mitigated. But in good markets, we'll increase our satellite portfolio, and these help us generate the alpha that we've generated over the years. So how do we select these stocks? So the first thing is, we don't look at them as stocks, we look at them as businesses. So we follow something called the 6-pillar selection methodology. So the first important thing, as everyone will know, is the fundamentals of the company. How good are the balance sheet, profit and loss, the ratios, the growth potential of the companies, and whether the books are clean. Next, we look at the management quality. So they are the engine who drive the business. So it is very important that the management has a long-term vision and they are able to drive the growth for the company going forward. And we also look at the macro factors for these, whether the industry is a good position, how good is the industry, whether there is room for growth for that industry, and how well the company is doing in that industry. Because only when the industry is going, a company is able to grow in that. And we also look at the future outlook of these. How good are their economic moats? What is their competitive advantage? Moat is something really important because, literally a moat means if a castle is there and the water body that's surrounding it. So it's like a cushion for the company that's protecting its competitive advantage. So we try to identify moats of these businesses and how well they fare relative to their peers and identify their competitive advantage. And we also look at the key market triggers for the company. These could be like planned expansions, new product launches, technology shifts. So these will help the market realize that this company is valued way more than it should be valued. And finally, we do field research. We go and interact with the management. We participate in con calls. We try to visit their factories and get a better understanding of the business in whole. So once we identify the company, do we just go ahead and invest in it? So there is something called the margin of safety, which is very important for our scheme, which is based on value investing. So, well, value investing is something that has been acclaimed by Benjamin Graham and Warren Buffett, and these stand the test of time. So what it means is we try to identify companies when they are below their intrinsic value, so that we buy them when they are cheaply priced and we are able to sell it when it attains a fair value. So what this provides is, this gives a risk cushion for us. It limits our downside risk while also enhancing our upside gains. So our investment philosophy revolves around the value investing. Like I said, we try to identify the entry points when the companies are undervalued and how they can grow in the future. And this is where the key market triggers comes in play, right? Because if a company is undervalued, there could be some reason. And there should be the key market trigger that is going to change the market perception about the business. So we try to identify those and enter at those points. And also we have a strategical exit plan. So when the company attains its fair value, or when there is a change in our initial investment thesis, we exit at those points. And like we said before, ethical leadership is something really important for us. And only when the engine is good, the car is going to be good. And we also try to, we do continuous learning and adapt to the markets to ensure we are staying updated, and we are also, and this helps us to identify emerging opportunities and also identify the potential risks. So why choose prosperity? So as we said, our value investing is the core of our investment philosophy, and this is a time-tested method for decades. So we follow that, which is a good advantage. Also, we have a concentrated portfolio of 15 to 25 stock. You know, there is a study that after 30 or 40 stocks, with each stock you had, the benefit of diversification is going to be very minimal, that it does not make sense to add the next stock. So the optimal portfolio diversification is between 15 to 25 stocks. So we try to stay in that and avoid over diversification. And currently we are a 100 crore fund. And what this does is we are able to invest in companies that the large funds may not be able to invest because of their inherent capital size. And finally, our interests are aligned with yours. We have a transparent fee structure, and our significant portion of our capital has been also invested in this portfolio. So here are a few of our winners in the past since our inception. Just a disclaimer, these are not recommendation and just for illustration. We may or may not have future or current position in these stocks. So one of our favorite companies is the curious case of TVS Holdings. So just like to go through that, how we were able to identify this company and how we generated return from that. So TVS Holdings was the holding company of TVS Motors. So the promoter group held stake in VIPL and THPL, two companies, and THPL in turn held a stake in Sundaram Clayton Limited, which held stake in TVS Motors and Sundaram Clayton DCD Limited. So this was the structure in June 23, during which restructuring happened in the group. So at this point in time, the market cap of TVS Motors was 52,000 crores, and Sundaram Clayton held 50% of this. So this means 26,000 of that belonged to Sundaram Clayton. However, Sundaram Clayton's market share at that time was 9,000 crore. This is because of a term called holdco discount, in which a holding company is not going to be trading at its subsidiaries proportionate share. There is going to be a discount, and traditionally it's been 40 to 60%, and in this case it was 63%. But the catch was Sundaram Clayton did not just have TVS Motors in their company. They also had Sundaram Clayton DCD Limited. However, it is hard to get the value of Sundaram Clayton DCD Limited when the entities are merged. So what happened is in August 23, there was a restructuring in the group, and the top three companies that you saw, Sundaram Clayton DCD Limited got demerged and listed as Sundaram Clayton Limited as a separate listed entity. So this listing took place in December 23, and in August 23, Sundaram Clayton Limited was transformed into TVS Holdings Limited, which was the amalgamation of VIPL, THPL and SCL, and it was the sole holder of TVS Motors Limited. So the market cap of TVS Holdings prior to this transaction was 9,000 crore. And post this demerger in August 23, in December 23, if you see, TVS Holdings was trading at close to 15,000 crore, and SCL was separately listed at a value of 3,000 crores. So you can see the disproportionate gain because of the restructuring which we were able to identify. So this demerger helped us to unlock the value because of this in the group structure. So today TVS Holdings is almost north of 20,000 crores due to this value unlocking as well as the growth of TVS Motors Limited. And we made an approximate return of close to 150% from identifying this opportunity. And this is what our investors had to say about us, just a glimpse of it. Thank you everyone for being an amazing crowd, and we are happy to engage with you in our stall. Since morning we've had some amazing engagements, and we hope that continues through the day. Thank you.
Thank you so much, Mr. Vishwanath, for finishing the presentation on time and yet sharing all the required data which was useful. Thank you so much. So it's time for the fireside chat now. So we had the presentation, and it's wonderful time because we are going to talk about truth and trends for wealth professionals. So we are going to unveil some of the amazing truth and trends for wealth professionals that probably you are looking for answers. So it could be active versus passive, it could be long-term investing, it could be anything that you probably are looking for. So I would like to invite our panelists for this chat, Ms. Usha Nair, Senior Vice President, DSP Mutual Fund. Ms. Usha Nair, currently Head of Distribution at DSP Mutual Fund, carries 24 plus years of experience in mutual fund. She has been part of various roles in multiple asset management companies. Graduated from IIT Chennai and SPJ Institute of Management, Mumbai. Welcome, ma'am, here to this, to this event, 16th Wealth Convention. Then the second panelist is Ms. Vandana Rangarajan, Managing Partner, 361 Wealth. Ms. Vandana Rangarajan, Managing Partner at 361 Wealth, erstwhile IFL Wealth, has over 17 years of experience in the private banking industry. She advises over $2 billion across key business families in South India, creating a brand for herself in unexplored geographical territories. Currently, she serves on the board of few startup companies in India and is a member of FICCI FLO, the women wing of the Federation of Indian Chamber of Commerce and Industry. Welcome, ma'am, here to the 16th Wealth Convention, and definitely we are looking forward from this chat. Moderated by Mr. Deepak Jain.
Okay, so good afternoon, everyone. So we are doing a small chat where we discussing the trends in investment management and wealth management, and what advisors like you and me cannot ignore going forward, right? So before I start the session, I would like to know from both the panelists what has been their journey over the years and what are the biggest money lessons they have learned over the years. I'm starting with you.
Thank you very much. Always a pleasure to be with the Chennai audience. My journey, this is my 24th year in this industry. I have only been associated with mutual fund as an industry. So I always tell not audience like you, but especially when I meet younger generation of professionals, as wealth advisors, wealth managed professionals, mutual fund distributors, we always talk about compounding. I also believe very strongly it is important to compound the profession that you choose. So I personally feel that more than compounding the money, which is of course important, and compounding of wealth, if you are an MFD, if you are a banker like Vandana is, or like me representing an asset management company, or the pattern of the profession that you choose, if you stay invested in that profession for many years, that also compounds very, very meaningfully. And when your career compounds, your assets, your income, your reputation, your brand equity, everything compounds along with that. So that is my one of my biggest learnings as an investor, as a professional, as somebody who's been associated with this brilliant universe called banking and financial services industry. And one of the most important money lessons is the earlier you start, the better it is. So as professionals, as people associated with this industry, I'm sure most of us would have actually become serious investors in our personal capacity a little later in life. At least that is what I have done. I mean, the understanding of how compounding works was definitely not there in the initial days of your career. And that is something that I've learned as a mistake, which you should not ever repeat. So if you can tell others that, I think that will be a big thing. That is my biggest learning.
Your journey and
Thank you.
lessons here.
Thanks a lot for this opportunity, AFM and Wikiflow. I actually started off as a legal professional. I'm a qualified company secretary who's started off with the Murugappa Group. And in about 15 months, I was quick to change to being a relationship manager like most of you are. I think for me, the biggest life lesson that I've learned in this journey of managing money is the importance to constantly go back to the table and review and assess if this is the right decision and be quick to adapt to these changes. So whether it's managing money or managing portfolios or, in my case, even my career choice, I think that is something that's very integral and important to do, is to reassess, review and react according to it. Thanks.
So my next question is, what are the trends in wealth management and mutual fund distribution business which advisors and wealth managers cannot ignore and cannot afford to ignore? Yeah.
Sure. So I think, like Vishwanath rightly pointed out, right, we are on the race to being the third largest economy. With that, something that I truly believe is that we are no longer going to be targeting, clients who are only here. I think there is going to be a lot of cross-border investments, and we're going to see a lot more money flow from outside, because if we do become the third largest economy, our market cap is going to increase significantly. And therefore, we are going to become a destination of investments for investors outside of India and in India. So I think the important trend that I see over the next decade is India opening up to the world as an investment destination in a much larger way. So that leaves us as advisors to sort of be nimble-footed, understand, the jurisdictional change, understand what the regulations are around both India and overseas.
Great. So how have client expectations changed over the years? And what can we as distributors do to meet those expectations?
So I'll answer this, Deepak sir, in two parts. One is from a client expectation perspective. I think we often think of client expectation only in one angle, which is the portfolio return. I think that has to change significantly. To me, largely I feel, and this is not, I don't deal with clients directly like any of you do, or somebody like Vandana does with large ultra family HNI clients, etc. I deal with distributors like each one of you, either a banker or a MFD kind of a thing. So I won't have the direct experience. But what I'm quoting is what distributors tell us, or sometimes in your social network you do interact with clients. The first thing is, to me, the client expectation is not about return. It is an expectation that we create in the client. It is like how you, parent a child. The entire experience of how the child learns things is either from his household or from the school or the curriculum or the environment that he lives. Similarly, if as an advisor to a client, if I am fostering that return expectation, then the client is bound to have that to be the anchor in the entire conversation. The client's expectations, therefore, I think is something that you can definitely navigate. The client is all about that. Second, the service expectation, definitely the clients will have. And I'm sure Ganesh is sitting here. In the morning you had discussions. Again in the after our panel you will have discussions. There is a lot of bothersome problem of the KYC and a lot of things that are going around. All I'm saying is regulatory challenges is something that we will live with, and then I again referred to her in her previous answer. So expectation from service in the quick world that we are living, at the click of a button when you are getting every service, you can order online, you can get your food, you can book your tickets. That speed of service the client is going to expect, and irritability if there are these kind of regulatory changes will happen. That is something we will have to handle. But the return expectations, the portfolio dynamics, I would believe we should never take those things for granted. While it is extremely nice to believe we will be a large economy, our market cap will grow, so on and so forth, there are enough instances, history has proven, periods of time when all these theories don't work. Like there is a divergence between the market return and what the economy does, what the geopolitical situation is, what the environment is, so on and so forth. I don't want to get into those details, but therefore, it is important to set those expectations also when you handhold a client, and it will be more complicated as the world is becoming a one single universe kind of a thing. That's my belief.
Great. Ma'am, I want to ask you something. How can we acquire and retain HNI clients? Because we want to move to the next level of clients, and many of us face challenges there.
Okay, so my mantra of acquiring clients is to just be open to information. Today, I think if you're going to go meet a prospective client who is, let's say, a managing director of a company or is probably the promoter of the company, there is ample data available, whether it's Toffler or Zoba or your MCA portal, where you can get a fair sense of how leveraged the company is, or how do they existingly have investments. There have been times when we've actually done an entire portfolio review and gone and met the client even before they've actually been a prospect. So I think doing that due diligence is something today the client expects, and is also something that's going to help you because you're fully aware of who their auditor is to what their balance sheet looks like.
That's great. What are the key skills which mutual fund distributors should have in next 5 to 10 years to be able to grow and outgrow this industry?
I think a lot of people will answer knowledge, understanding of markets, so on and so forth. I would say, are you convinced in what you're doing? What is the level of conviction that each one of us carry in terms of what we are offering? And let me tell you, put yourself, why am I saying this? Put yourself in the shoes of someone who is at a receiving end of a service, going to a doctor, going to a lawyer, going to an architect, even going probably for a tuition teacher for your child. How would that individual inspire confidence in you? What would make you believe that I must send my son to this academy or this tuition center, or I must put my, I must get my mother or father treated by this doctor if he or she has to undergo a surgery? What is that character in that individual that will give you the confidence to, there are hundreds of doctors, there are hundreds of hospitals, there are hundreds of tuition teachers available. What is it that you look for as a customer for that individual to win your trust and you to hand over your precious, which is, in our case, it is their money. But when we are being a customer to a teacher, then you are handing over your child's future to them, or your mother's or father's health to them. So what is that character? I think it is the conviction, it is the confidence, it is the clarity with which they will talk to you, and all of this will lead to one thing, which is to say that I think he knows his trade. If I feel that the person who is talking to me knows how to handle my finances, then I think I'll give the money. So that skill, to reach that level of confidence, clarity, which means the person who is sitting in front of you is willing to hand over his life savings, is what I would say that all of us should acquire.
So there's a related question. There are many people who are, there are many individuals who are wanting to enter into this space. What advice would you give to those young people who want to enter into the wealth management or the distribution space today?
See, I think the competition is neck deep today. But while obviously people who've been in the industry have the advantage of being there for a long time, I think the newcomers have a definite edge over technology. Because today the quality of customization or the quality of advice you can give with adapting to technology is huge. So I think for them, from their perspective, that will be their edge. Like ma'am also pointed out and said that everyone's expecting quick service. At the same time, they want to have a deep dive of their data, look at a deeper analysis of their portfolio. And that I think will be a great value add that the newcomers are going to be able to put forth to the table.
Okay, so I would be failing my duty if I don't ask this question. From your experience, what unique perspectives do women bring to wealth management, and how can industry better support women advisors and clients?
So I think both of us should answer this question because you have chosen a panel with two women. And I'm sure it's going to be a very controversial answer from my end. I'm personally a very strong believer that women are better money managers. Unfortunate to see that a room is full of men. So I'll just, Deepak, end my answer and leave the tougher part of it to Vandana. That had there been more women MFDs and women bankers and probably women fund managers, we would have been a 100 lakh crore industry by now. So let that be the goal for all of us.
I don't think I can counter that, but I personally believe there is no man-woman in this. It's a personal choice, everybody's personal preference of what industry that one wants to be in. And I think the potential is definitely there. That's the reason you have a few women at least on the table, because you're equally qualified, men and women. I think it's a choice of profession more than the capabilities. So I'm going to leave it at that to say, hopefully more women choose this.
Okay. So we are open to questions. If somebody has some question, we can.
Sir, Nirmala Sitharaman. Nirmala Sitharaman is the finance minister of the country, southern state.
Don't go very far. My mother, greatest money manager I have ever known.
Okay.
So
we all not in public forums, that's all.
Yeah, so.
Actually, we are doing the awareness to everybody. Businesses come or not.
Alpa ma'am is there. Alpa ma'am should also speak on this, I think.
Yeah.
So any questions?
So I think, yes, we can end this conversation, and it was, I think, quite exciting. So a big round of applause for this wonderful session to panelists. I would request both ma'am to please stay on the stage for the felicitation. So now it's the time for one of the topics we have been speaking since morning: large cap, mid cap, small cap. Small yet mighty, exploring the potential of small cap investments. And it is going to be presented by Mr. Abhilasha Satale, Associate Fund Manager, Quantum Mutual Fund. We are privileged to welcome Mrs. Abhilasha, an experienced professional with 18 years of experience in Indian capital markets. She joined Quantum AMC in June 2022 and has worked various sectors like capital goods, infrastructure, chemical, textile in the past. Prior to joining Quantum, she worked with Dalal and Brocha AMC as well. So I would like, I would request all of you to please help me in welcoming ma'am on the stage, Ms. Abhilasha Satale. Okay, sorry, I didn't see. Sorry.
Yeah, thank you everyone. So today, as you know, it is already introduced that the topic is small and mighty. So there is a presentation. said, today's topic is small cap fund. So Quantum recently launched its small cap fund. And so I'll just take you through the unique features of the fund and how we are different from the industry. So in small cap, most of us have seen recent headlines in terms of... So I have to navigate this. Okay, so yeah. So we have seen, all the recent headlines about the SEBI stress test. Recently, SEBI had asked all AMCs to publish the stress test. In that, they had asked AMCs to to publish within how many days they can liquidate their small cap portfolios, because most of the funds have become a very large size, and they also hold very large quantum of the stocks. So, each fund would be holding in the range of 100, 200 stocks. So how liquid these stocks are, and why liquidity is important for any fund manager is because if you are not able to sell that stock, then the impact cost in your returns is very high, because for every selling you will destruct the value, and the investor who is redeeming that portfolio will get that much lesser returns. So just to analyze that, whatever returns we are seeing today in the small cap, whether those are realizable returns or not, for that SEBI had given this stress test, and the stress test tests the results like we have seen, like some of the funds have been able to, they have said that they are able to liquidate their positions within 50 days, 60 days, 50% of the portfolio. For us, it has been always a very important parameter. When we build the portfolio, when we introduce the fund, at that time also we had all the liquidity criterias in our mind, and that is how for us it is a very easy proposition when we disclose our results to SEBI, and we Quantum as a fund, we are able to liquidate our entire portfolio within 1 day. So that's... So our AUM is small, so we are on the building stage. So that is one of the factor. But apart from that also, when we look at the the stocks, there also we have already built our capacity that beyond that we will not go. So those all strategies I'll discuss in future. So here, basically, I wanted to tell you that this also has one flaw, that SEBI has said that only 80% of the portfolio liquidity criteria you should be disclosing. So what happens if any large redemption comes and, if a portfolio manager has to, or a fund manager has to liquidate any of its position, then he will liquidate the most liquid position, not necessarily the position which has a major, not necessarily which has a lesser upside. So, for us, usually fund manager, when they build the portfolio, they see every stock how much upside it has, and if any redemption comes, then we liquidate the positions which are having lesser upside, so which are near their fair value or something like that. But because SEBI has asked only 80% of the portfolio's holdings to get disclosed, this is just a possibility. I am not saying that this will happen, but then in case of any redemption pressure, there will be some most liquid stocks will get liquidated, and that will mean for the rest of the whichever are not liquidating their positions, not redeeming their position, they will be left with the rest of the positions. So that's one risk which it has. When, as far as as we have concerned, so for us we have already mentioned our liquidity criteria. So we will invest anything which has minimum 2 crores in liquidity per day liquidity for us. We will not go below that. And before launching fund also, as I said, that we have already mentioned our capacity. So beyond that capacity, we will stop the subscription, or beyond that capacity we will not go. So that's the that's the guardrail what we have kept for our small cap. So for us, the returns the every return, so every money should be invested in the same manner. That is what our philosophy is, and that's what we are sticking to it. So this is just a illustration what it says, that how the size has grown and how the number of stocks have grown in each portfolio. So at 5,000 crores, if you see the average number of, so when the fund size was 5,000 crores, the average number of stock what the funds were holding were in the range of 50, 60, 70 stocks. Whereas when the fund size has grown, because small cap got lot of inflows in last 2-3 years, and that is how the funds have become very large. And that is, that has increased the number of stocks in each fund. So you see at 20,000 crores, 25,000 crores, 30,000 crores, the number of stocks these funds would be holding are now at least in the range of 150 to 200 stocks. So when you are holding, 150, more than 150, 200 stocks, that means you are literally, mimicking the index. Then why to give active fee? Because at that position, the suboptimal, so any position which is below 1%, we call it as a suboptimal position. So those positions will be much more, the 1% below positions will be many more in your portfolio if you have so many stocks, stock holdings. So, and that at some point of time dilute the return, because if you are holding only 0.3, 0.4% of your AUM as a stock, then even if stock doubles, the alpha it creates to your portfolio is very minimal. That's just 0.3% alpha you create. So, these are some of the risk what we feel that in the current industry it is, and this data suggests that. So, like these are, as I've been saying, below 1% holding the number of stocks every fund would be holding. So, in a fund A, if I see 71% of the stocks are below 1% holding. In fund E, F, like almost like 92% are below 1% holding. Whereas for us, we hold only 7% stocks which are below 1%. Overall, stocks like what we hold are around 47 stocks. So, so that's what this is again the illustration as to, how much, because top 10 usually is a very, high conviction portfolio bet for any fund manager. So if you are taking that kind of bet, then you don't want to sell those stocks just because of the liquidation pressure. But in the top 10, if the stocks are more illiquid and, if they reach fair value and all, and if you are not able to sell those stocks because, those are usually the high holding of your portfolio, then there could be some dilution in terms of the returns. So this is what, these are these kind of risks. So taking all these things into consideration, we have built our portfolio, and in our, like as I said that, we don't face that kind of liquidity risk in our portfolio. So as far as fund capacity is concerned, I have already mentioned that we have already, mentioned our fund capacity at particular time, at particular size, we will close the fund. Mindful of liquidity, as I said, we will not invest anything below 2 crores per day liquidity in any stocks, because, any position we are taking today, we would always be mindful that we are able to liquidate that position within 66 days. And this is like the portfolio positioning. So at any given point of time, we will not be more than 5% of any company's market capitalization, because nowadays even that risk is there. SEBI has already mandated that any fund cannot hold more than 10% of the market capitalization. But because small caps are a small small market cap companies, what happens is, like with those 0.2, 0.3% of the AUMs also, of the holdings also, companies tend to invest almost 9-10% of the entire market capitalization of that company. So what happens in that case, when a person, when a person tries to sell, a fund manager tries to sell that kind of position, then it is a return destructive. So he has to sell every position at a lower level, because he is already holding very large amount of the same company. So those are the constraints. So like for us, we have kept it at 5%. We will never be more than 5% of our hold of the company's market capitalization. And so for us, the maximum weight what every stock would have is 4%. So 2 to 4% is a range what we think that our stock, we will have in every stock. Will have, as such I have mentioned, we have very less suboptimal positions, and that we will maintain. And so overall the portfolio action, like I'll just explain the process. So that will be based on the upside potential. So these are some of the unique features of Quantum Small Cap Fund. As I mentioned, the liquidity criteria remains a very important criteria for us. Quantum globally, we manage around $2.5 billion of assets in equities, only in equities. So domestically, we are scaling up. And that is how, like, we have a very strong research capabilities. We have a strong track record of creating wealth for our investors. And that is, so, in the research also, we have a same process wherein we see, after seeing the fundamental analysis and all, every time we try to buy the company at below its intrinsic value, below its fair value, and then reap benefits over a period of time. So that is a process what we have followed for so many years. We have a strong research team of around 15 to 18 analysts, and they tracking different sectors and also that is how in small cap, which is a very diversified segment as compared to large cap and mid cap, we are able to navigate to different companies, different sectors effectively and build the positions. So emphasis on governance and quality, this is something which Quantum has stood for its name. I mean, this is something which we have very unique, so we will not dilute it at any point of time. We have never invested in any company which has any poor track record in terms of governance, and that we will continue to do. And for this small cap investing, we are following a GARP approach, that is growth at reasonable price. So as I said that we always invest into the companies which are growing. So in small cap, there are many niche sectors and niche companies which are having differentiated business models and different they are catering to very niche industries. So the companies which are leader in those niche industries and growing at on a sustainable basis and available at a reasonable price, that is what our investment approach is. So the one thing is, in that case, we don't chase momentum. So as I said that, we always see from current level what kind of upside, absolute upside a stock could give me over a medium term, then only I invest. So that is one philosophy which we stick to, and therefore by and large you will not find any momentum stocks or something just because the market is going up, so we invest. So those things usually we try to avoid. So, and of course, like all of our investments are long-term investments. So these are some of the themes which, as we have built the portfolio and we already have exposure to some of the themes. I'll just explain what is our perspective in terms of investing in these themes. So financial inclusion is one theme which we feel has a long runway in India. So we have seen this, 90% of the India's population already has digital IDs. Like the bottom of the pyramid, credit to bottom of the pyramid has increased at almost 30% CAGR over last 5 years. And the companies or the institutes which are getting benefit of it is largely small finance banks. And we have also seen, how AMCs have grown and still the penetration levels are low in India. So that is how we feel that this sector has a very large potential for, investors to give. It can sustain a growth over a longer period of time, and we have around 21% exposure in this scheme. Then this ICE to EVs is one theme which we feel is, another sector which has a high potential to generate returns for the investors, because that is a premiumization or EVs. So the auto ancillaries which are catering to those kind of segments and increasing their bill of material with OEMs. So we have some exposure to such companies, and we invest we have around 9% exposure there. So power distribution is another theme which we feel has a big potential. So India has now become a power deficit country, and there are the industries which are catering to these themes, like the power manufacturers, smart meter manufacturers, cable manufacturers, and we have some exposure. And what has happened in the last decade, this sector has been consolidating. There was no growth in this sector, and therefore the competitive intensity in this sector has gone down. So we feel that whichever are the remaining players are there, they will be winner for the entire journey what is unfolding for the going forward. So therefore we have invested in some of the power distribution themes where we have around 6.5% exposure, and this is like increasing per capita consumption, that we all know that India's penetration level are very low in terms of consumer durable, healthcare, travel. Travel, if you see the aviation, it is largely a duopoly wherein we are seeing every day the rates are going up, and there is one beneficiary which is reaping the benefits of it, and the demand is still continuing. Healthcare by and large is still unorganized, and it is now getting organized. So there is a long runway for Indian economy to grow these sectors and take benefit of this. And then last is like global outsourcing. So I feel that this is one theme, the India manufacturing theme. Everyone talks about China plus one, and this theme is still ongoing and will continue to grow. So exports, we have seen the kind of growth. India still remains very it is one of those economy which has a large working age population, and it will remain till the large working age population country for a longer period of time. Therefore, the productivity of this country is likely to remain much more than what we are seeing in the developed economies. And therefore, the themes which are exposed to this sector, we have invested in some of the companies. So we have around 14% exposure to these themes. In that, mostly like it's a pharma chemical companies. Now we are seeing that there is some bottoming out in terms of the pricing and margins, and therefore we will take some exposure to chemical companies. So these are by and large the themes which we discuss. We are positive, and we feel that we feel that these are long-term winners for the Indian economy, wherein if we have exposure, we can create an alpha. So this is our portfolio snapshot. As I said, BFSI, industrials, IT, these are some of the sectors we have exposure to. Discretionary, and these are our portfolio characteristics. So basically what I have been saying, that we have GARP approach, like growth at reasonable price, and therefore you see our TTM-PE is lower than the TTM-PE of benchmark, whereas the growth rate, like these are the Bloomberg estimates, and the growth rate what our companies would be posting for the next 1 year or so, it is around 22%, whereas for industry it is 12%, and the dividend yield is around 1.2% for our company. So therefore, if you see PEG, that is the price what we are paying for the growth, that is lower because the growth rate is higher, and the PE what we are paying is lower than the index. So PEG for our companies is lower than the index PEG. So that is what I've been saying, that we have a GARP approach, and these are the characteristics which are showing that. So lastly, just to conclude, I mean, there are many in small cap, many funds, it is a largest return generator sector in the near term. But we feel that there are risks going forward. Lot of momentum is built up in this sector, and there could be some sanctity over a period of time. Whenever it happens, we will be there to cash on to that opportunity and buy into those corrections into quality companies which can give us good returns over a longer period of time. And that is what our philosophy is. So for you also, I would suggest that that you choose something which is which has some cash built up and can reap the benefits over a period of time when the market goes through its cycle. Thank you.
Thank you, ma'am, for the wonderful insights on the small cap investing. Please stay here, ma'am, for the felicitation. So one more presentation and then we will all be charged up for the panel discussion. And this presentation is by Mr. Ganesh Ram, MD and CEO, MF Utilities. I was asking sir, after KYC, are you in the public forum for the first time? Because people were asking so many questions from him. So I think it's the time to have some presentation from him and then note your key takeaways in the handbook that you have. Welcome, sir, once again.
Hi, good evening, everyone. Good evening. Last bench is always. Okay, good. Okay, so I have been asked to give some presentations. So it's a way, the way I am, positioned is quite different because earlier we had presentation on outlook of market, how to invest in India INC, wealth management, client acquisition, okay? And then now I think we had a small cap investment also. All these things is good, but where you want to execute? Okay? Yeah. So that's where MFU come into picture. Okay, that's why all this is good, right? But where you want to execute the transaction for you and investor, that's where MFU comes. So I don't have more slides. I have only 3-4 slides, but I know there is a burning issue of KYC. You guys want to talk? Okay, so all of my energy had by a couple of coffees, lunch and all are gone with all the discussion of KYC. So I will definitely cover KYC, but beyond that, no. The reason I had this slide immediately is because a lot of people in this forum, which normally I know, a lot of new faces, okay? I don't know, because it's American Academy, it's new. I have no idea. But a lot of new faces, good to know. So I thought, a lot of people came to me and said, what is MFU, right? So I just thought I'll talk about MFU. Okay, how many of you people here know MFU? Oh, quite a lot. Okay, half of them knows, half of them I should put my hands also. Araban sir, you should also put. Yeah. So okay, you should also know. So yeah, so we'll talk about MFU. No, so MFU is called Mutual Fund Utilities, which is a shared services from a AMFI. So which means we are the company legally owned by all the companies. So we had Aditya Birla, we had DSP, then we have Quantum. So all these mutual fund companies are equal equity shareholders of MF Utilities. Okay, so we are a SEBI registered registrar by license. So we are a non-profit oriented company. We have our own web portal and app, and our job is to simplify process, reach to investors, and make life easier for distributors. Okay, that's where we are. So we are going to talk about 3 things. One is what we are offering as a platform. And then we are going to talk about some of the salient features. Some features are there, some features are just upcoming. Okay. The last one is what is the value proposition, why you need to use MFU. Okay. So MFU platform is serviced for regulator intermediary. When I say regulator intermediary, I'm talking about asset management companies, PMS, stockbrokers, or any other RIAs, all of those. Then you have corporates. We are by large have a huge institutional channel. So the entire Adani Group, Reliance, Vedanta, all these use MFU to transact. Then we have neutral entity. We have a lot of softwares who provide to distributors and RIAs. They can also kind of use. And we have MFDs. Okay, so that's why we have. Then we have our own web portal. We have our app, which is based on Android and iOS. From a transaction mode point of view, we have a manual entry, you have a bulk upload option, and we have a slimmest single stack API for all financial transaction, non-financial transaction, and also your reports. Okay. From a futures point of view, we are the platform which has completely digital platform for both financial transaction and non-financial transaction. When I say non-financial transaction, change in nomination, change in mobile number, change in email ID, bank, consolidation of folio, everything is completely digital. Okay. And then, yeah, we'll come to this eKYC. Okay, that's where I'll stop for some time. So we are the first or only platform today. See, eKYC, as I told you, something which we need to do. Okay, we can't just shy away from this. How difficult it is. Okay, we need to finish it. So we are the first platform to launch a B2B KYC portal. You as a distributor can do a new KYC, modification of KYC and re-KYC for all your clients, be it RI or NRI, across all the 4 KRAs. Most of the portals have only single KRA connectivity. So for example, if you go to some AMCs, they will take you to CAMS KRA, but you can only able to modify and edit the KRA if your client would have done KYC in CAMS KRA. If you have done in .x, you can't do. But in MFU, it's not the case, irrespective of wherever your client has done the KRA. So we have 4 KRAs, right? So CVL, .x, CAMS, NDML. Okay. So irrespective of wherever you are done, you can able to do this. Okay. It's completely Aadhaar based, and main point is no paperwork. If your client is a NRI having Aadhaar, because Aadhaar is mandatory now, he don't need to come to India. There is no geo-tagging, nothing. Everything works seamlessly. I will probably have few people who are subscribed to this KYC probably can come down and talk or stand from there and talk. I will be happier. A lot of people told me, give to Muralidharan sir, you can come, or anyone else. Please come. Or anyone, a lot of people gave me a very good positive feedback because we have recently launched the re-KYC also, just last week, okay. So we have been flooded with a lot of good reviews in Twitter and LinkedIn and all, but I thought if somebody can come and talk. So I would say it's a paid subscription model. It's a 999 per year, unlimited KYC. Please adopt it. You don't need to go anywhere. You can sit in your office, you enter all the details, your client verifies, put the OTP, e-mudra based e-sign, it's done. Okay, sir, please come. Can someone give a mic to him? So, or he can come here and talk. Yeah, mic to him. Sir, here. Lawn.
Evening. As Sir said, I am using the MFU from the day one of KYC and the MFU platform more than 2 years. It is, as he said, seamless. You need not worry, and it's user friendly. It will take step by step, no confusion. You can use it very easily. I strongly recommend to use the MFU, and that especially this KYC, it is absolutely very easy. You can do it without any issues. You can use the MF utilities and both the KYC also. Thank you.
Thank you, sir. Thank you. Yeah. Yeah. No. So MFU platform is a Section 8 company. We are a non-profit oriented company. But KYC we launched it 999 because India में ना सब कुछ free में देते तो problem है. Okay, so we just thought we will make it. But it's only yearly subscription of 999, unlimited KYC. Only for your KYC module we charge you. Rest all is free. Okay. Yeah, they can use. Absolutely, yes. Absolutely. Anyone can use. Anyone can. You are a MFD, you are a stockbroker, you are a AMC, you are a PMS guy, or you are a RIA. Anyone can use. Sir, I'll take a separate session on KYC. Or I'll finish it and then we can take. Okay, perfect. So we also have a end-to-end fee collection model, which is predominantly for RIAs and other RIAs and IA. So if you are a RIA, I don't know whether there are any PMS or RIA guys here. If you are collecting fees from investor, we also provide a module through which you can schedule the fees and collect it. So you don't need to run behind the client. Client registers the mandate. So automatically, like your mutual fund transaction, the mandate get used, debited in the investor's bank account, it's credited to your bank account. Okay, that's one thing we provide. Then the other beauty we have is the centralized complaint module. You don't need to use MFU for doing transaction, irrespective of wherever you have done transaction. Physical mode also. You can log into MFU, use our centralized complaint module. You need to put the folio number or PAN details. And the beauty of this module is only, obviously it is very unique. All the AMCs and both the RTAs also have access to this. So you can actually select RTA or select AMC and raise the complaint. So irrespective, you don't need to, it doesn't mean that you have done transaction in MFU, you would have done transaction anywhere. You can use this module as your central repository of all complaints. You can generate reports saying that what are all pending, 30 days more than pending, all those stuff. Okay, that we offer. And we also have a, like your stop loss in stockbroking, you also have a what you call NAV based and indices based. So you can select, tell the system, my NAV of this fund is 100. Once it becomes 110, do the redemption. Or it comes down 95, you can do a purchase. So all those things you can do. And you can do a future day transaction also. Multiple payment mode, we also recently introduced something called Insta UPI, because after the pool account discontinuation of SEBI, some of these payment modes are taking time. Even if you do the payment on time. So we have introduced something called Insta UPI. So if you are going for a client and you want to do a SIP immediately, you don't need to wait to take the check and all. You can do instantly Insta UPI and credit will happen instant. Okay. So and we also introduced UPI autopay. I think 1 lakh is the maximum amount which NPC allows. So you don't need to wait for an e-mandate. If you have a SIP which is 5,000, you can use UPI autopay. Now every clients have UPI. It's an instant mandate creation and instant approval and instant SIP start. Okay, that also we have introduced. Then we are also, this is something which is, I put a star here, it's coming up. So now we are consolidating all the client onboarding into a single OTP. Now if you actually look at MFU, for onboarding you have a OTP, for bank validation you have OTP, then you have a contact verification. So we are consolidating everything and we are making it electronically seamless. So now I think there is a 15-20 minutes of time for your CAN gets approved in MFU, but now going forward starting July mostly, everything will be instant and only one OTP your customer need to enter, everything is validated. Okay, that we are making it life easier. And then scheduled transaction, as I told you, if your clients have, so there are some distributors who are using this for the client's birthday, anniversary and all. So you can, future date you can put it with the remarks. So when the client gets approval, he will get the remarks also, saying that happy birthday or anniversary, okay? It's only feel good factor. And we have sub-broker module built in, so you can use, if you have sub-ARNs or some MFDs with you, you can log into MFU and you can ask them to do it, and you as a ARN can map all those and you can have a single view of all the distributors, okay? And last but not least, you don't need to open a CAN, there is a folio-based transaction also. Imagine your client is not there to approve. You just want to just do one transaction, you know his folio number, you put the folio number, do a transaction, it will go seamless. Whether it purchase, switch, redemption or additional purchase. Okay. So I will stop here. If there are any questions, I can take quickly.
Customer do not have to approve.
Folio based transaction is not required because the folio is already there. But a notification will go to the client.
Go to the client, but
You don't need to approve. That makes easier. Yes, absolutely. HUFKC, non-individual is not there. That's a paperwork. But NRI, HUF is there. Yes, sir, definitely. So I will give details to AAFM. So I don't know, or how you will reach out to these people in case. Yeah.
Either you can share your some number.
Yeah, so I will give my number. They can post it. Then you can reach out to us. Every week we have 2 sessions. We'll include you.
Through our club also we can keep some sessions.
Absolutely, yes. Absolutely, yes. Definitely. Completely online. Yeah, absolutely, sir. You can use a DMAT based transactions. X. No, you can get empaneled as a stockbroker and start using the transactions. No problem. Yes. Not requirement, sir. You only need to register the clients. You need to register the clients. I'll move on. From a value proposition point of view, we are one-stop shop, be it KYC, financial transaction, non-financial transaction reports. And just to add, as I was telling in that, how many 2 minutes I have? Okay. So as I was telling about in the panel also, we are also bringing a CRM. Okay. None of the platform has CRM today. We are under testing. It's going to be a completely integrated CRM, which will give you reminders. You don't need to have Outlook. You don't need to have Excel sheet. You don't need to have WhatsApp. It's going to be a completely integrated CRM. So we'll test it with some people, and most likely by July or August or September, we'll launch it. So that makes our platform a complete one-stop shop. We have a complete full stack API. So anyone who wants to use our API, connect to their system, it's absolutely available. So so the entire hardware and software belongs to Amphi, and our scaling is alone to handle the entire industry's volume. Okay. And we have a high service standard. That's one thing which is lacking in the industry, which we always want to fill. Post your transaction or be it KYC, we have very good higher service standards, end-to-end digital experience, and last but not least, completely regulatory and compliance driven. So you don't need to worry of something which MFU will do, which is against compliance or regulatory, right? So that being said, it's completely a business driven and regulatory driven. Thanks for this opportunity. So I will request the AAFM to have a session for MFU, so where we'll give you a very detailed demo. Thank you so much. So I have done on time.
I'll do it. Thanks. Thank you so much, Ganesh sir, for I think wonderful presentation, because people are having so many questions, and this makes, I think, mutual fund distributor life easy. So as said, definitely we can connect over with some online session. We have Finance Club. Under Finance Club, we do many sessions as required by our members. So we can definitely pose the requirement. Can we do the convo, or should we do panel? Yeah. Panel. 10 minutes. We'll take 10 minutes. Convo, right? Okay. So now there's going to be a ceremony, and we all are here, and I was asking how many of you already know us. But you'll be very happy to know that there are some people out here who have already completed various certifications from AFM. And it's the opportunity when we go to a particular state or city, we do a convocation ceremony. So I would request Mr. Deepak Jain, Mr. Vyasa Nagpal to please come on the stage and do the convocation ceremony for some of our proud students. It will not take more than 5-7 minutes, but if you will motivate people who have, taken the initiative to upskill, I think it would be a right opportunity and the moment. So I would request Mr. Malay. Mr. Malay is from Bangalore. He's completed CWM. Mr. Munaswamy Krishna Murthy. See, they are all from our industry, right? And we're talking about learning, upskilling, and that is how we can grow. So I think this is one of a proud moment. Even we feel proud about creating charter holders. Mr. Rayapati Kiran Gupta, Mr. Karthikeyan, Ms. Divya Kumari Agarwal, Mr. Ranganathan Srinivasan, yeah, you can be at the Mr. Sunil Padmaban, Mr. Venkat Raghavan, Mr. N.R. Ramakrishnan, Mr. Hari Krishna, Mr. Varun Krishna, Ms. Payal Maheshwari, Lakshmi Pati Yelam, Dr. Rama Gauri Chandan is also one of our certificates. She could not make it to the event, so she is not well because of medical reason, but we are actually missing Dr. Gauri here now. Mr. Abhilash, Mr. Imtiaz, Mr. Frenchy George Thomas. Anybody, if I've missed the name, if you are a certificate by any chance, please do join us on the stage. I think we can take one minute. Can we have mics, please? I request team to please give mics to the people on the stage here. So let us know them, right? We are talking about networking. I would request all my proud students who are here on the stage just to say one line. Who are you, from where you are, what is your experience, that's it. And why you did CWM. We'll keep it quick, but we want you to cover these 4 things, please. Starting from here.
I am Hari Krishna. I am from.
So come in front and be loud. It's a proud moment, be loud.
I am Hari Krishna. I am from Hyderabad. I completed my MCOM and MBA. I did CWM for the knowledge purpose. It is very useful for me.
Hi, good evening. I'm Kiran Gupta from Chennai. I'm a lawyer with 25 years of experience. I'm a lawyer with 25 years of experience. I help a lot of people write their wills and set up private trusts, predominantly specializing in special needs area, where families with special needs children require a lot of support in terms of the estate planning. I was doing this as a lawyer, but then this course, I came across this course. I felt that this was bang on my requirement. And I did this course and absolutely find it useful to provide better counsel to my clients. Thank you.
I am Karthikeyan from Coimbatore, and I have done CWM for only a knowledge purpose, and it helped me a lot to improve my business, and it enriched my knowledge.
Hi, my name is Malay Shah. I come from Bangalore. Actually, I have been into equity and mutual fund investment for past 14 years. Prior to that, I had 21 years of hardcore IT career. So I'm a computer engineer. And I did choose CWM on the experience path. So I did level 2. And in that, the question answer bank for practice, it helped me a lot. Thank you.
Thank you, sir. Thank you so much.
Welcome everyone. This is Divya from Hyderabad. A decade before, when I was a CA student and looking for a specialization in finance field, I found myself to be passionate about wealth management. And looking for the course, I discovered this AFM CWM course and got to learn about this course and was very fascinated. And that time I just thought of this course as my passion, but now I'm taking it as my profession. Thank you. Thank you, AFM.
Thank you. Great. Thank you.
Hi everyone, I'm Payal Maheshwari from Chennai, and I work as a private banker for Anand Rathi Wealth. And I think this course has been more than me going towards it. It was because the kind of inputs that I received from the team and the motivation that I got that I thought, yeah, it's good time to go back to the books, learn better, sharpen my skills. So I think I sounded more smarter once I completed this course, and even in front of my existing clients. All thanks to the team, kept me motivated that, yeah, ma'am, please go ahead and give your exam. So yeah, everyone should look forward to studying really well. The course curriculum is really detailed, very, very helpful. All the best to everyone.
Thank you so much. Thank you so much, ma'am.
Hello all, good evening. I'm Lakshmi Pati from Bangalore, been in the industry for past 20 years. I coach, I give training, and as well I do wealth management for clients. So I like this content, curriculum. So whether I read it or not, full subject no, but whenever I want to refer something, I can take those books. Books are awesome. The curriculum is very good. I'll refer it till now. And apart from all these things, one thing I like about this, I did CWM. You know what I like? Chartered Wealth Manager. Interesting? Distributor, IFA, everything it is there. Apart from that, no, I want to put that name, Chartered Wealth Manager. CWM, that is CWM. Thank you all.
Thank you so much, sir.
Good evening, everyone. My name is Imtiaz. I'm coming from Pondicherry. Even after spending 18 years working for different banks like Access City and HDFC in the past, I felt there are a lot of things that has to be learned before even handling a client's money. So when I wanted to do a certification, I was looking at different options, among which I found that CWM was has got a detailed subject, which is like gives a lot of information which I didn't know even after working for so many years in the banking. So I did this certification to have more empowered and being accredited in the market. Thank you AFM team for helping us in completing the examination successfully. Thank you.
Thank you so much, sir.
Good evening, Chennai. I'm Frenchie Thomas. I'm basically from Chennai. I've got 22 years of technology experience in wealth management. The reason why I took CWM is for my upskilling, knowledge base from which I support. I'm very thankful. Deepak Jain sir, your courses have been very helpful to me when I passed it. Thank you.
Thank you so much, sir. Thank you.
Good afternoon all. This is Venkat Raghavan from Waldell Wealth. I started off my firm just last year after 25 years of corporate experience. And most of my career I was in the asset management industry, into the mutual fund industry. And my last work was at Axis Mutual Fund as a vice president for the southern region. When I just stepped into the shoes as an MFD, I felt that experience alone is not enough. And as somebody was mentioning, the competition is neck deep. And we'll also have to improve the intelligent quotient. And I felt that, CWM from AFM was actually giving that kind of an expertise in terms of, getting a complete knowledge and application. So that's why, I did this course, and I felt that it's going to give a lot of value add when you meet across the clients. Yeah. Thank you, AFM, for this opportunity.
Thank you.
Good evening, everyone. Once again, this is Alpasha, social entrepreneur, author, and finance professional. And I also worked for mutual fund industry, bank, distribution industry for close to 23 years. And then in my midlife, I started my own venture. And I realized that upgrading yourself and knowledge is the power. And we always feel that we know everything, right? But that's not the truth. And thank you so much, the entire team. My God, I'm so big fan of Vyas, Dimple, and sir. Thank you so much for this encouragement. And I recommend each and everyone, you must upgrade and learn continuously and keep giving exams, because that's where you are challenging yourself. Thank you so much.
Thank you so much, ma'am. Thank you so much. I think this was much needed. Now I'm feeling Chennai is my home. Okay, sir is here. Sorry, sir. Yeah.
I am Anuswami Krishnamurthy. I worked in bank for 32 years and 6 months, and across length and breadth of the country. I have completed all the modules of Indian Institute of Banking and Finance, where RBI Governor and local MDs of Bombay has given standing ovation. I have completed all the modules of NISM, 26 out of 27 modules in India. And I have completed NCFM, National Council of Financial Markets. There are 47 modules. I have completed 46 modules. Only left behind that advanced derivative modules. Then I came to this AAFM. I am fond of chartered wealth manager. When I have entered into the wealth manager, the way the people of AAFM has given a tremendous report. If you have time, I will narrate each incident, what the people of AAFM. And they have given me that wonderful cooperation, and I have completed CWM. I attempted to complete accredited financial adjuster and a chartered trust and estate planner, and also chartered portfolio manager at one attempt. And I have worked hard for 18 hours in a day, because I have come from that family where I don't have food to eat. I don't have dress to wear. I don't have house to. Only Saraswati Katacham has taken me to this level. And now also I am writing all the examination. Latest NISM has introduced fund managers, alternative investor. I am the first person to complete in India. And only education taken me to this level. On that day of Pratyaksham by Saraswati Devi, I asked only one thing. Please help me giving the fees. At that time, in 1972, I got selection in Andhra Pradesh Residential School. From that day onwards, till my last thing, I have completed without any fees. My parents are illiterate. They don't know the denomination of money. I came to this level. Now I have completed not only in India, I have gone Chartered Institute of Security Investment, London. All the modules I have completed. AAFM and the excellent support given by Mr. Jitesh Kapoor. Sir, I will narrate that incident if you patience enough to hear that incident, I will tell you. I have gone to examination at Rajamandri. On that day, heavy rains, and after a half an hour, they could not make that examination. Then I have spoken with Mr. Jitesh Kapoor. I don't know, he is the business head of operation department. He has telephoned to Pearson View headquarters and London. They have taken me and they have apologized me. The way they have taken swift action, it is fantastic. And one more thing about AAFM, I don't know because I am not concerned with computer. I don't know how to prepare admit card. Mr. Jitesh Kapoor has spent time about half an hour taking remote and has done that is such a wonderful AFM. It is up to you to decide. They will make you the certification. Okay, I have completed 4. I have came only for CWM. The way they have responded, each and every staff member, the way they responded, it is excellent. Because NISM, NCFM, I have gone there. They don't care about a help desk if you go for there. For a half an hour, you don't get anything. And my thing is, I will sit at 9:30 examination, NSC center, 9:30 to 5:30. I used to, and once I enter into that examination hall, I will chat with Saraswati Devi. Okay, sir. That's all, sir.
Thank you so much. Thank you so much. Thank you so much, Murthy sir. Thank you so much.
My last breath will be when Reserve Bank of India Governor and local MDs of Bombay, they are giving standing ovation. On that day, I got All India first. For that examination, commodity derivatives, 89 out of 500. On that day, I have read for 18 hours in first class compartment of Bombay. And by seeing me, lot of people in Western Railway of Bombay, they have made their CIB and they have taken increment and also that's all.
Thank you so much, sir, for being so grateful, so kind, and sharing your experience. Thank you so much.
Really, the way you people will think empathetic way. What the other person is there. See that Jitesh Kapoor has taken me 45 minutes. 45 minutes, he is a business head. See, the devotion of that time is invaluable. That cannot be met. That's all, sir. That's all.
Thank you so much. And this is the wealth we have created. A big round of applause to the entire team of AFM, our supporters, industry partners, and our students. So without taking further time, I would request our Deepak Jain sir and Mr. Vyasan Akpal to please felicitate. So one by one you can give, sir. Come in. You come. Yeah, sure. I think we have people from all across, and I don't know, but I am feeling like we should play a national anthem and we should all get up. Can we have national anthem, please? Okay, sure. Yeah, after this ceremony, yes. After the ceremony. After the ceremony we'll do. I think this ceremony clearly shows age is just a number, and to learn there is no age. You can all come forward. Let's just make this moment a little wow. We will just throw the caps in the air and catch back. This will be a memory, you will lock it forever. I'll say 1, 2, 3, go, then all of you have to do it together. 1. You all have to catch it also. 1, 2, 3, go. Thank you to all the proud certificates. Thank you. So many people are coming from various states here. Thank you for making the effort and coming here to grace our ceremony. Thank you so much, Murthy sir.
Very nice.
Thank you so much, sir.
It is my pleasure.
Thank you so
to have
much.
such a wonderful day.
Thank you so much. Thank you so much. So now I think we are all charged up. As I was telling, now I am feeling like Chennai is our home and this is not our first convention. I am looking forward for even a bigger convocation ceremony once we are here next time. How many of you are charged up and motivated to upskill ourselves? Can we have hands raised? Are you all ready to upskill ourselves? Thank you so much. Thank you so much. So now it is time for the panel discussion, and it's a very, very amazing panel discussion. We are talking about wealth creation and enhancement since morning. Please mind, we are talking about wealth creation and enhancement since morning, and now this is the time for wealth transfer and wealth protection. Through a very nice panel discussion which is centered around business succession planning for advisors. Your advisors and your wealth is your client and you have your AUMs. How to transfer your AUM to the next generation. And for that, this is going to be deliberated by wonderful panelists. We have presidents from association to grace this panel. So I would quickly like to invite the panelists here. We have Mr. Ramesh Bhatt, founder Aniram, and he's one of the founding members of IFA Galaxy. Welcome Ramesh sir here please. A big round of applause for Ramesh sir. I think everyone knows him. He needs no introduction. Mr. Sundarajan, co-founder in Symphonia Wealth Pvt Ltd, President, IFPA Association. We have Mr. Tejas GV, President MAFDAC from Bangalore. He's travelled here to be part of this panel. Welcome, sir. Now we have somebody again very, very special in the panel, Mr. Valyappan Nagappan. He is immediate past President, Hindustan Chamber of Commerce. He carries himself 3 decades of experience. He has authored 6 books on personal finance and been on the board of various PSUs like TIDCO and Tamil Nadu Newsprint as an independent director. He was a member of SEBI Secondary Market Advisory Committee and was chairman of Federation of Indian Stock Exchange. Nagappan sir, warm welcome to the stage, sir. This panel is going to be moderated by our wonderful estate planner in India, Mr. Deepak Jain. This topic is very, very close to Sir's heart, and I think he is one of the very few estate planners in India who talks about this topic. So Sir is the moderator for this panel, and this panel will be followed by a presentation which will be related to this panel. A warm welcome, a big round of applause for all the panelists, please. Thank you so much.
So good evening everyone. So we are starting this panel which is on business succession planning for mutual fund distributors. Right? So one day you will have to hang your boots, right? And what happens to the biggest asset you have created till date? That is your business. Right? So you might have 1 or 2 children, but the most preferred child is your business. Right? So, and all of us have to retire one day. How do we exit this business, or what do we do when we exit this business? That's what we are talking about in this panel. I'll start by asking each of the panelists to introduce themselves very briefly and tell them how are they interested in this topic which we are discussing today.
I think Dimple introduced me. So I'm in the capital market for the last 3 decades, and that's a background. I've gone through a lot of transitions from flow trading, ring trading, what we call those days, and then to online trading, to mobile app-based trading. So I've seen all the transitions which is happening. And the most important, I really appreciate AFM for taking up this topic, because I find many, not only mutual fund distributors, it can be an insurance agent or someone, they don't think about or plan for succession planning, because all of us think that we are going to live forever and hale and healthy. It's a longer life is always good. But then I noticed many other set of people very much worried about this, and they had their own concern. I met doctors in Erode, in the annual conference, when the ophthalmologist conference, when I meet them, the most successful doctors, husband, wife, used to come and tell me, sir, we are in our late 50s or early 60s, and our children are not doctors. We don't know how we are going to, we have a good clientele, how we are going to do that. So this is a very important topic. First of all, I'll appreciate AFM for taking up this, because many of us don't even think about this. And the second reason is that, many people come and ask me, maybe 20 years back when they met me, they never used to ask me that when I tell them, have you filled up the nomination form? Who is going to be your nominee? Now they ask me, now I become old, now they ask me that who is going to be your nominee? Who is going to take up the business in your absence? They don't put it but some of them ask me this. So it's very important, because the grandfather came to me in 90s, the father came to me a couple of years back, now the son. So now he wants to know that he's in good hands, safe hands. There will be a continuity to advise him, not only for me to get my revenue, but also for him to make money. So I think that way it is very, very important.
Good afternoon, friends. This is Ramesh Bhatt. I'm in the industry since last 40 years only. I was there since UTI days, and my successors are also there. We are serving the 5th generation of the clients, and my successors also already there. Both my daughters in the same industry. Going on. Thank you.
Good evening, everyone. I'm Tejas from Bangalore. I chose this profession out of passion. I was into research initially for about 4 to 5 years, then moved on to sales, started interacting with clients, and caught up this profession on a very serious note. It's in the blood of every Indian that we need to carry forward the legacy, right? Be it the culture, the society which we come from. We want to have children. We want children to grow up well. We want them to settle well, and we want to create a legacy and pass it on to everyone. And since I do this profession more out of passion, I always have this dream of talking big to investors, you know. So when I talk to them, I tell them that, you know, all of you know that, you know, nobody is interested in watching test matches. Nobody is interested in watching one-day cricket. It's all about 2020, right? So off late, that's what is catching up, but that's also losing interest now. But then, yeah, so what I typically tend to talk to clients is, what's your goal in life? What is it that you need to achieve? What is the kind of a corpus you wish to see when you retire? So people just say 5 crores, 10 crores, 6 crores, things like that. So when I talk to somebody who has a time frame of, let's say, 20 years, I always tell them that you need to create a corpus of 100 crores. Can you do it? They say 100 crores, impossible. So this is the first thing what they say. So it's so simple actually that, you know, you just invest about, let's say, 4 lakhs a month for 20 years continuously at 20%, you grow it to 100 crores actually. Or you invest, let's say, a lump sum of 2.5 to 3 crores and you manage it really well. You can pass on a great amount of wealth for your next generation as well. So this is what I always talk to clients and, you know, encourage them to invest. So similar ways, you know, we always, creating something really big for the next generation is a passion which I always dreamt of. So having said that, I wish to also adopt that within me, within my organization and my family as well. So I found this topic to be really interesting. So that's what I would like to say. Thank you so much.
Good evening, friends. I'm Sundar here. So I've been in the industry for about 20 years. Earlier I was with stockbroking and banking, and for the last 10 years I've been in MFD. Thanks to AFM for doing this event, because as Sir said, I think succession planning is one thing, is the least spoken. So I think we all get enlightened through this event. Thank you.
Ramesh, my next question to you is, why is it crucial for mutual fund distributors to plan for succession? What's the need?
It's a very much needed one, because especially latest, how many people have seen 28th March 2024 circular of AMFI? How many people have seen that circular? So 0.01% in this hall. See, we are in this industry, we are supposed to see each and every circular from AMFI. Yes or no? Yes. Yes. See what happens, why succession is important. I'm coming to that. That's the circular, the base of the circular. Do you know that if you are, how many people are individual in this crowd? Independent people. See, almost 60% are independent. How many people in your family, there is an heir and holder? See, 10% again, out of the 60, so 50% out of the 60%, the 60% in their family, they do not have an heir and holder. See, there is a new circular which has come in, that is, if you are no more tomorrow, your family will get the continuous trail commission? Yes or no? It was yes earlier. From 28th March 2024 onwards, it is no. Have anybody objected? Nobody read the circular first of all. Well, how we can object it? And your wife should pass the exam within 6 months from the date of your death. Please remember, 6 months. Is it enough for her? Will she be able to do it? You are working so hard, doing your SIP books, accumulating, many things you are doing. But if you are not there tomorrow, succession is required or not? Yes. So we are going to discuss. That's a very important topic. Succession is required. That is, your entity, when you create something, it should be lifelong. Your client should get benefited for a lifetime, and many things we will discuss in details in the questions to come. We will discuss more on succession.
Thank you, ma'am. That's a great answer, and that's the reason we are having this discussion. My next question is, when is the right time to plan for succession? So there would be people at different life stages among the distributors. Some would be young, some would be at middle ages, some would have mature business, some would be about to hang their boots. When is the best time to plan for succession, and what is the first step? Anybody?
See, when you will write the will, I have seen in CWM only. When is the right, many of our clients comes and ask us, when is the right time to write the will? The day before you die. When you should write the will? The day before you die. That's enough. Do you know when you are going to die? Same way here also. When you should have succession planning, you should have succession planning before you die, 10 years before you die. Why 10 years before you die? I am telling you because you have to groom them. Whoever the successor of yours, you have to groom them to the next level. For which succession planning is a must. We need to definitely concentrate on that because it's a hard-earned money. In Corona time, we were all sleeping at home for 6 months. We were handling clients only over phone, sitting at home. Who is giving us 1 lakh rupees per day as commission? If you have 500 crore AUM, 1 lakh is a daily commission. Do you know? How many people know? I do not know. If your AUM is 500 crore, your daily earning is 1 crore. 1 lakh, sorry. 1.2 is perfect. 1 lakh. Just keep it 1 lakh in mind. So, who's going to give that? If tomorrow you are not there, where the money is going to go? If you don't have a proper succession planning.
Right. Anybody would like to add? Yeah.
I'll just add only one thing. I'll go a little further. I agree with him, but I'll go a little further. That I think when we start a business, whenever we start any business, we have to look at two things. The first is, what is the sunk cost? Today, if anything goes wrong, what is going to be my loss? The second is the succession planning, the end in sight. I think the day we start the business, if you've read the story of Hemu Ramaiah, the founder of Landmark, I remember she telling me that, telling us in a chamber meeting. She was telling that, when the day she started, she was planning for exit. And the moment the Kindle was launched, I think 2005 or 4, the Kindle was launched. Then she planned her exit and she gave it to Trent, Tata's. So I think if it is better that you start. We tell our clients, we tell our investors that you start even before you make your first earning. The saving starts even before you make your first salary. So that's how it should be. That's what I feel. Yeah.
So I just want to quote one live example, not take much time though. So 2021, we had elections for our association, and we contested, and then we had a couple of committee members from the previous stint also continued with it. Okay, this was a very live example, and we felt really helpless. So during the second wave of COVID, one of the committee members passed away. And he was managing assets close to 200 crores. Family just knew what is it that he was doing, but they were not aware of what exactly he was doing. And he had not left any notes, any will, how the business is going to carry forward. He just had 2 back office people supporting him, a very good client base, very nice gentleman, all of it, okay? But trust me, the kind of, the trauma which the family went through was so bad that everybody in the industry, the lady of the family didn't know whom to approach, what to do next, or how does she continue things, or does she have to stop? Nothing at all, absolutely. And she had no one to go and approach. In fact, she came up with so much of fear that because everybody started approaching her, she started getting random calls because people wanted to take over the assets. Somebody else wanted to come and support her with a right or a wrong intention, but she couldn't trust. She was clueless actually. And at the same time, we as the association, we wrote a letter to her, to the house, stating that, look, this is what you need to do, and then if you need any help, please approach us. We will be there to guide you. And we had a lady member in the association committee as well. We requested her to try and see if any guidance can be given, but absolutely nothing, because she was not in a position to take that at all. As sir was telling, 6 months time is just nothing. They'll definitely not be able to understand and pass the examinations and continue the business at all. So it is very, very important. And see, there is no right or a wrong succession plan for any business for that matter, okay? For any one of you, the kind of a business model what you're following, because each one has a different style of working. It's just not possible. So you need to adapt, you need to experience, and you need to make sure that it's successful. So for that, it requires a good amount of time period. Since you all are here, why are you all here? Because you're very serious about your business, right? So when you're serious about your business, when you're serious about your clients, and when you're handling big money, right, you need to make sure that it's in the safe hands, and you need to give that comfort factor to the investors. If you have to grow to the next level, you need to bring in people, you need to have processes in place. Only then people will also start believing you, and they will start investing big actually. So having said that, succession plan is something which everybody should, on a very serious note, think of it today and start planning towards that.
Yeah. So one, succession planning is important for every business, no doubt about it. But for our business, I think it is even more important. Why do I say this? Because now Ramesh Bhatt sir said he is having clients for 5 generations. Most of us who are sitting in the room who are wealth management, we have at least 2 to 3 generations of clients. There are many instances where client actually don't tell what to their spouses or sometimes to their children. Many of them actually tell what needs to be done if they are not there. I will tell you a recent thing which happened. One of my client got diagnosed with a cancer. She was in the hospital, and she was actually meaning almost at their last. So she actually called me, and she did not even tell her daughter. She was a single lady and she had a daughter. And she called me and said, Sundar, if I am not coming out of the hospital, these are the things you will have to do. Please help me and I will bless you. So this is the kind of emotional thing which we deal with, right? So the client is thinking that we are going to take care of their wealth. What if we are not there? So this applies to every business, but we are carrying the business for generations together. And we first needs to have a process whereby we should be able to capture, assuming I am not there, whatever the client has said, the next team member or the next person should be able to continue the thing. Then only I think we will be making sense to the business in which we are. Because we are not here only to manage money, we are here to make sure that the money goes to the right hands also. So that's where succession planning is very, very important.
Great. So now we come to the process. So my question is open to the panelists. What's the process and what are the various strategies to exit from the business or continue the business afterwards?
Okay, so I think succession planning is again like making clients wealthy, right? So if somebody wants to create a 10 crore corpus, how fast can he do? At least it takes 10 years, 15 years, 20 years, depending upon how much he is going to earn and how much he is going to save. Similarly, if you are thinking about succession planning, can you decide today and can you do it tomorrow? The answer is no. It actually takes, I will just put a number, it can be plus or minus. So if you have somebody who's in the early 50s, I think definitely you should start thinking about retirement. As sir quoted, actually the moment you enter the business, you should also have an exit strategy. If not, at least when you are nearing the age of 50, I think you should be ready with a succession planning, because first you will have to identify somebody who can actually run this business. Then you will have to train him. So maybe identifying itself will take some time. Then he has to come on board. The ethics and the values have to match. And then you will have to train him. And then eventually you will have to hand over. And finally you also have to be at the back seat and keep watching whether everything is going smooth. Otherwise you will have to again take business under your control and find for a new, find for a new successor. So all these things cannot happen in a day or in a month. So most of us actually don't think about succession planning because we interact with, I'm part of the association in the MFD community. So every time we interact, most people say, I don't retire. I have no retirement. I will work till the last breath. Okay, though it is a very encouraging thing and a very positive statement, but is it the way in which the business to be run? You can continue to work, but should you be the king for the business, or you should actually become a kingmaker of the business like how Ramesh sir has done? Okay, he is still part of the business, but he is already, and he is very young, so he is not very old, right? he's already done the succession. No, it is truth, right? So he is very active, he still plays cricket, so he can run fast than most of us, okay? But in spite of that, he's made sure that he had trained, he has identified their children's, and then he has also made sure he is there, and he is also training even now. Maybe he will continue to train even for the next 10 years. Then look at how the entity of him will grow. So that is how we should plan for succession planning. It cannot happen in a day or a month. So you will have to start as early as possible, as we keep telling about wealth management. I think even succession planning is start early.
So let me just give put a thought process into all of your mind, okay? So as we saw a lot of people raising hands, how many of you are independent, and how many of you are running the business all by yourself under sole proprietorship, or could be under an entity? That's majority of you, right? So basically, if I'm right, the data says that 40 to 50% of the MFDs are working independently, and they fall under the age group of 50 and 50 plus years kind of a thing. So we are all blessed to be in this line of business, because you know that even during the toughest of the phases in the recent past, what we have experienced, we were not impacted, right? We were able to get our commissions, we were able to be happy, and we were able to do things much better than what others did to survive themselves. So having said that, we are all doing good. We should pat our back for that. But how many of you are giving it back to your business? Whatever processes in place, it's not possible to put your leg in two boats and sail, right? So, and it's not possible for you have to do either or. So whatever you're good at, you're doing it, but you need to make sure that you have people working for you. So at least what you start thinking about having a back office, setting up a processes, defining or maintaining the CRM for your clients, their goals, all of that. Because I see a lot of people, they just, talk to them, they just get business, they just do it. So that's fine, but then that's really not the way. If you're very serious about your business and your succession planning, that is not at all the way. So having said that, processes are very, very important. And as I told, majority of the people, 40-50% of the people are above 50 age group, right? So when you have to collaborate with others, it's just not possible that you choose a person of the same wavelength or the age group and then you do. Then that's not called a succession planning at all, actually. So having said that, you need to understand the young minds. You need to have somebody who can understand your business model and come into your business. You need to show them the way. You need to nurture them, and you need to slowly start dissolving yourself from the business. So it's a long process, actually. So having said that, first, the thinking has to be right. If you think I'm the only person, I will run this business, my family is there to take over after, when something goes wrong, it doesn't work that way. It is very, very difficult. So in your presence, in your existence, once you have a client base, once you have an assets which you're managing, you should start recruiting people, and you should start having processes in place. It's very, very important, and technology has to be adopted. I know for a lot of people, technology is a little difficult to get. So that is the reason, you need to get in people who can bring in technology. So that is how you can really, give it a serious thought for your succession planning.
Great. So what are the exit strategies? It's not only passing the boot, there could be other strategies also. So I just want you to...
See, strategies, what we follow is normal, many of the people here in the hall, 10 years before, if you groom somebody as your next successor, who's going to be, see, example, what I did, let me tell what I have done for my company. We started the company in 1996 as a partnership company, because I want the company to be a perpetual entity for lifetime. Because even Ramesh Bhatt is there or not, the company should run. Anita and Ramesh Bhatt joined together, we called it as Ani Ram. Anita and Ramesh, my wife is always before me, she is. And we both joined the company, we started the company, and then in 2015, that is 14-15, both my daughters are in. That is, I was everything in the business. When I started the business, I was everything in the business. You are all now everything in the business. 60% of the people in this hall are everything in the business. If you are not there, your client will be in trouble. Please think that. Same way, where I was everything in the business till 2015. Then I have taken a back seat. The process, the first thing what I did is I brought my elder daughter in, then the younger daughter in. Even though they are coming and going to the office from 2011 onwards, but 15 I made them active and I brought them inside the business as partners. After bringing them, I started grooming them slowly. Whenever the client comes to them, no, they will not see them at all. Because why 10 years I am giving? The client should set the mind to talk to them. I was everything. When I was everything, client used to come and like to talk to me rather than my daughter. உனக்கு என்னமா தெரியும் நீ சின்ன குழந்தை, you are a small girl, baby girl, you don't know anything. What do you know about finance? They will talk only that. We made them, we groomed them slowly. Like that I want, why I am telling this? I want to do this for your wife or your son or your daughter. Groom them. Bring them to the next level. Now, from everything in the business, I am today nothing in the business. I am nothing. Whether I am there in office or not, Aniram will run. That's why I am attending many conferences. On a lighter note. Okay. And I'm just, even every day is a learning day. I do learn and I give it back to my friends and also to my family. I share with my friends.
Yeah, I think in my interactions with many personal finance professionals, whether it is mutual fund distributors, not only them, insurance agents, I interact with them. I find that the easiest way the fund distributors look at is that, ultimately, though they don't like it, they don't want it, but ultimately the exit strategy, what they generally plan is that sell it out to someone. But to think about someone who sold his business 10 years back based on the previous 5 years EBITDA or PE multiples, where we are today. It has grown multiple times. So the other option is that groom someone within your office or within your family. Now, I think somehow again we are not very comfortable training someone within our family, but we have successful strategies right here in Chennai in stockbroking firms. Some of the stockbroking firms started much before the stock exchange itself, are still there. 85-year-old, 95-year-old stockbroking firms are there, where the employees have become partners and the senior partners have retired and the company is still running. So I think there are examples which are there where the employees have taken over and under little better terms. The third option is what Mr. Ramesh mentioned. But that's the toughest thing. I don't know how many of your children will be interested in taking over your business. Be frank. We are missing out somewhere. They prefer working in an IT company, they prefer working somewhere else than joining us. I think we have been marketing, we are all of you are very good people in marketing the product, selling the product, but with a customer to the client, but not very successful in selling our profession to our children. I think many of the people whom I meet, we fail miserably in that. The children are not very keen to join us in spite of us making much more money than what they make in their profession. So that's where I think all of us were discussing. We have to look at how the business dynamics is changing. The person is not coming with only the 30 rupees which he is giving it to us as mutual fund, for mutual fund. He has got another 20 which he wants to give it to insurance. He has got another 30 which he wants to put it in something else. So if you are able to address the gamut of 360 degree, then I think the children probably may join. So you should have a strategy where don't restrict yourself to only one particular investment category, that try to provide, attract the 100 rupees of the customer.
Yeah. So one thing, as sir said, so one thing is, see, when we speak about succession planning, to whom are we planning the succession? Is it for the individual or is it for the business? I think most of us plan for the individual, right? Actually, it should be the other way. So for the business succession planning, we need people who can actually run the business. Run the business meaning first they should have some kind of attraction towards this business. Like sir said, how many of your children would be interested in coming into this business? I have interacted with many. Most of the answers are no. Why are they not looking at this as a business? Because we have not actually built this aspiration. If somebody is born in a TVS family, will they think of working in an IT company or any other place? They will not, because they are already tuned that they will be part of the business, because there is attraction and they have created that hype already. In fact, they have done well. So the point is we need to make our children understand. For that we also need to change in a lot of ways, right from the way in which our office operates, how many people are there, how do we meaning communicate, what kind of this one we wear. So first we need to create that thing. So first we are not ready for succession planning, and if children are also not ready for succession planning, definitely we are heading nowhere. So we need to realize that. And the most important thing, sorry sir, just 30 seconds. The other thing is, one is identifying the person, and the most important thing is the person should be competent to run the business. Otherwise the business anyway will fail. So keep that in mind, start early, and so that your business can run for a longer period.
So I'll just conclude by sharing something which I learned. They researched families which were multi-generational families where the business was running successfully over 5 or 6 generations. So they found out what was the one common element which sustained those businesses over generations. And what was that? It was that each generation run the business as it was a loan from their grandchildren. You understand that point? They run it, I have to pass it to my grandchild. So I will not do anything in the business which is detrimental to the interest of my grandchild when he inherits this business. If you inherit that mindset into you, the business succession planning becomes very easy, because then you start working on it on the first day, because it's a loan from me. All of us have created this business and it's our biggest asset. Second thing which I want to talk about is, while doing succession planning, do you only transfer your valuables to your next generation? Or do you transfer your values also to the next generation? That values has to be groomed into it. Your client has come to you because of those values which you show to them. And values are your principles in life. Values are your do's and don'ts. Are you transferring them to your children? Or are you only transferring the valuables after you? And lastly, many of you are working as individual entities, right? For business succession planning to happen, it should move to a entity system, not an individual thing. Now, what are the options to create an entity and transfer AR into it? Limited liability partnership companies, private limited company, or a partnership company. I'll give you a fourth option. And I think this is the best option which very few financial advisors have even explored. Create a private family business trust and take a ARN code on the business trust. Succession is automatically taken care of. The compliance costs are zero. A private limited company, what is the compliance cost? What is the cost to file the returns, have those AGMs and all those stuff? LLP also the cost is less, but there is a cost. But in a private family trust, no cost. And ARNs can be taken in the name of a private family trust. Right? We have done it for some mutual fund distributors, and there the succession is automatic. Because I say, during my lifetime I am the trustee, after me my child is the trustee. And whoever the trustee gets the indirect ownership. So if you plan it properly, there could be solutions which are out of your thing. Right? What I want to say is, business succession planning, as sir said, should be planned even before starting the business. When you go for a stock market trade, entry is easy, exit is difficult. And people who don't exit at the right time pay the price of it. So are you doing that or not? Right. So we take one or two questions here.
What is the generally agreed valuation model for an appraisal?
How to value that mutual fund business?
What is the
generally agreed valuation?
Suppose he has 100 crore AUM, what's the value?
3 to 4%. AUM. 3 to 4%. It is taken over by the existing who is taking over also between 3 and 4%, and the quality based on the quality of the asset. If you hold more on liquid and not on equity part, that will be different. What is the hybrid you hold? What is the income that business is generating? Everything is based on that.
One more question we can take if there is a question.
The family trust.
So my next session is on family trust.
That's what I told you. There's a follow-up presentation, so we are going to talk in detail.
But believe me, ARN codes can be taken in the name of private family trust. Yeah, we have done it for a couple of advisors in Gujarat. Tomorrow in the session, I'll even share the ARN code with you. And it is one of the best ways of doing it. It's the unexplored way, but it's one of the best ways to do it. Succession is automatically taken care of. It is as good as a sole proprietorship firm, I can tell you. Whatever you can do in a sole proprietorship firm, you can do in a trust. Yeah. Okay, so thank you very much. Thanks a lot.
Thank you so much for the wonderful panel discussion. I would like to take this opportunity to thank all the panelists, but one of my special thanks to Mr. Sundar because he suggested this topic. So when I asked him what advisors would like to know, he told me this is the topic you can take, nobody talks about it. So thank you to Mr. Sundar who suggested this topic. Thank you everyone. I would like to present small memento to the presidents here who have come because all the associations supported by them, they are also supporting our cause of upskilling. And that is why their associations are. And we have basically a beautiful trophy which says bringing change together. Alone, nobody can do anything, and that is what we are talking. We also need your support, their support, and that is about bringing change together. I would like Mr. Vyasra Nagpal to please come here and present the memento. Mr. Tejas, President MAVDAC. So yes, MAVDAC has also formally signed up with us to support our initiatives, and this is the award goes to Mr. Tejas. Thank you so much. I request Mr. Ramesh Bhatt to please accept the award on behalf of IFA Galaxy, who has also signed up formally with AFM to support our cause. I would also like to call Mohsin sir on the stage because when he was a president, we got an opportunity to connect with IFA Galaxy and supported this cause. I would request Mr. Mohsin to please come on the stage. I would request Mr. Vyas to please felicitate Mohsin sir with the Astria. In fact, Mr. Mohsin also experiences, his son is also taking care of his business, who is not in India, but he is taking care of his clients. And yes, what better, memento than an estate planning book that we have created at AFM. Thank you, Mohsin sir. I would like Mr. Vyas to felicitate Mr. Nagappan. Nagappan sir. Thank you, Nagappan sir, for accepting our request to be here. On a short notice, sir basically recently got his daughter, wedded in the past few days. Thank you, sir. Mr. Sundar to be felicitated. We have already presented this award at IFPA Association meet that we had for this. So now it's the felicitation time. Thank you so much. I would also invite Mr. Ramakrishna on the stage, President Fact Association, please to accept a felicitation for supporting our cause. So yes, MAVDAC, IFPA, IFA Galaxy, and FACT, all four IFA association from South really supported to make this convention a big success. Thank you to all the association and the members, presidents. Thank you so much. Thank you so much, sir. Thank you to all the dignitaries. Yeah. Sir, yes, let's have a photograph, please. It was a very engaging and an amazing presentation. panel discussion. And now we are looking forward for an amazing presentation. I think your lot of follow-up questions will be answered in this. This is the last presentation of the day, but not the least. You will enjoy it thoroughly. You will understand that trust can be so simple, which we never thought of till now. I ensure you, you will feel that you should have known trust even earlier. So I will invite Deepak sir to come on the stage and speak about the topic, the dynamics of private family trust in modern wealth management. And you would be very happy to know that we are the only organization in India who talks about estate planning. We have a special charter certification called Charter Trust and Estate Planning. And there are people who have completed this certification. We offer this premium certification. Once you do it, you will all know what is succession planning, estate planning, inheritance. Tomorrow also we will be talking in detail. I request all the people who are here who can make to our tomorrow's day 2 program, Know Your Business, Grow Your Business. I would request people to please join us at MMA, Madras Management Association. It's a half-day program, 9:30 to 2 o'clock, followed by a lunch. There is a certificate to complete the program, Know Your Business. That is tomorrow. I'm inviting and welcoming all the participants.
The Know Your Business, Grow Your Business, why estate planning is important for you, how you can do estate planning, how you can take estate planning as a new income stream towards your client. That's the main idea behind. And also we will talk about estate planning being relevant to yourself for your will and all. Second session is on WhatsApp API, how we are going to use that for the business, how new techniques of client acquisitions are being there in the market, then how you can scale up your business with that. All those things are going to be there. So that is going to help to increase your knowledge, number 1. Number 2, intent is to grow your business. So that's the agenda for tomorrow. So my humble request is please be there tomorrow. 9:30 is the registration time and 10 o'clock sharp we start. And tea and lunch is already there tomorrow at the event. Thank you so much. And Deepak sir, over to you.
Thank you. So good evening again. Good evening. Whenever I start a estate planning or a succession planning session, I always ask this question. And the question is, if you die today, what would you leave behind for your family and children? An inheritance or a mess? If you die today, what would you leave behind for your family and children? Inheritance or mess? Really? Will your wealth be a source of joy for them or source of trouble? All of us want to leave an inheritance for our children, wealth for our children, joy for our children. But many of us don't do that. We leave a mess for them to sort out. We leave a problem for them to sort out. Right? Estate planning is all about how to actually leave an inheritance, not a mess for your children. Right? And now, today I'll be talking about succession and trust. So what is succession? What is succession? We had just had a panel discussion on succession. So what is succession? Passing of assets and liabilities from a dead person to a living person is called succession. That's the best known definition of succession. That means a dead person not only passes his assets but also his liabilities post death. After your death, you will not only pass your assets to your children, your family, but also your liabilities. Now I'll be talking about asset distribution, but how are liabilities passed post death? Law says you cannot pass liability to a person more than the assets you are giving to them after your death. Law says you cannot pass liability to a person more than the assets you are giving to them. I'll give you some examples to make you understand this. Suppose you have assets worth 1 crore rupees and liabilities worth 2 crore rupees. Right? You give your assets, 1 crore asset to your only son. your only son after you inherits 1 crore of assets and only 1 crore of liabilities. The remaining 1 crore is bad debt. It cannot be taken away from anybody, because the law says you cannot pass as liabilities more than the assets you are giving to a person. Now I'll just flip this question, flip this situation. Suppose you have assets worth 2 crore rupees and liabilities worth 1 crore rupees, and you give your assets of 1 crore each to your 2 sons. So your 2 sons inherit 1 crore rupees of assets, and you have total liability of 1 crore. Now the creditor has the option to go after either of the child and take away his 1 crore. The child who pays more than their fair share of 50 lakh rupees can file a suit against the child who has not paid to recover the remaining 50 lakh. Right? That's how liabilities pass. But yes, there's the option. If you make a will, you could have written in the will, to the elder child I am giving 1 crore of assets without liabilities, but to the younger son I am giving 1 crore of assets with liabilities. That you can will. Now the younger son cannot say I am ready to take the assets, not the liabilities. Either he takes both or leaves both. Right? I am the elder, so I always give without liability myself. Right? Okay. You understand liabilities? Now, passing of assets and liabilities from a dead person to living is called succession. Right? And there are 2 major tools of succession, 2 major ways of succession. One is testate, second is intestate. Testate is when you tell legally how your estate or wealth has to be transferred after you. The succession is testate. If you die without telling your wishes, your desires, without making a will or a trust, then you die intestate. So intestate is when you die without making a will or a trust. Testate is when you die after making a will or a trust. Right? So how many of you will die intestate today? How many of you made a will as on date? The remaining would die? The remaining would die intestate. Right? So what are tools of testate succession planning? There are basically 2 tools of testate succession planning: wills and trusts. And this session is on the more complicated tool called the trust. Right? Will maybe some other session I'll take, but I'll be talking about trust today. Because trusts are the least understood and most misunderstood instrument in wealth management or in private family trust. Before I tell you what is a trust, I should tell you then estate planning becomes an art, not a science, when you use trust. So when you do investment management, is it science or is it an art? When you manage a portfolio of a client, is it science or is it an art? You have evolved it into an art. No, trusts are that art. That painting you can paint with a brush and stroke. You are the creators here. Whatever you can imagine, you can do it in a trust. Right? So let's understand trust in a simple way. Right? Trust is a relationship between 3 parties, where party A, called the settler, has given his wealth to party B for the benefit of party C. So A has given his wealth to B for the benefit of C. This arrangement is called a trust. What's the trust? If A gives his property to B for the benefit of C, that arrangement is called a trust. Right? So I give my property to my wife for the benefit of my son. Right? Who's the owner? No, he will be in future. That's the beauty. He is not the current owner. At some future date, he will become owner when she gives him. No, she is not the owner today.
He is not the owner today. See, every property has two parts to it. And listen to this very carefully if you have to understand the beauty of the trust. Every property has two parts to it. One is called title of the property. Second is called control of the property. Title is whose name it is. Control is who is managing it, who is enjoying it. If I ask you, out of these two, you can have only one. Either title without control or control without title. What would you choose? What do you enjoy? Control or title? A Taj Mahal is in your name. Do you enjoy it? What do you enjoy? Control. Trust allow you to control properties without having title to them. Title is risky. Risk of your risk gets transferred to your property. Why? Because it's in your name. Very simple. If it's not in your name, then your risk is not transferred to your property. It is safe. Title is risky. Title is the biggest risk in personal investments. Title. And I am able to separate title and control through a trust. So let's understand what is a trust. And I'll make you understand it with a very simple entity called a private limited company. All of you know a company? The person who starts the company is called shareholder. Shareholders start the company. So those initial shareholders are called promoters, but they are basically shareholders. Now a settler is same as shareholder. Person who starts the trust is called settler, not the shareholder. Now person who manages the company is called whom? Company. Director. Right? Similarly, person who manages a trust is called a trustee. So director becomes trustee. Shareholder becomes settler. Now, in a private limited company, whatever profit accrues to the company is owned by whom? Shareholder. Now comes a difference between a company and a trust. In a trust, the profits or the income may belong to shareholder, that is the settler, or on the instruction of the settler can be given to a third person. In a company it's not possible. Company everything comes back to shareholder. But here the settler can say, I don't want this income to come to me, on my behalf give it to this third person. Then that third person is a beneficiary, right? Now this arrangement becomes a trust. So you understand basically what's a trust? If A gives his property to B for the benefit of C, that arrangement is called a trust. Right? Yeah, all three can be same. I'll come to that. Now, a trust must have these elements to make it legally enforceable. First, a settler who gives property or creates the trust. Purpose of the trust. What is the reason I am setting this trust? What is the property that is going into the trust? And beneficiary, who is the beneficiary? And trustee, who manages it? If you have these 5 things built into an arrangement, that arrangement would become a trust. Right? So what are the components of making a valid trust? The first is the settler should make an unconditional declaration that I am giving this property to this trust. Second is, he should tell what is the purpose of the trust. Should clearly specify who are the beneficiaries of the trust and transfer identifiable properties to the trust. Once that is done, the trust becomes legally valid. Right? Why should you form a trust? Right? That's a basic question which many of your clients would ask. Why should I plan or create a trust? First is, incapacity does not affect management. Right? Suppose you are in coma, you are paralytic, you are mentally unsound. Under such situations, who would be able to operate your singly operated bank accounts, singly operated mutual fund holdings? So either you give us financial durable power of attorney, or you transfer all of them into a trust, and moment you become incapacitated, I have mentioned in the trust, moment I become incapacitated, my wife would become the next trustee. So incapacitation I have overcome, right? Incapacitation does not affect management. Command over assets after your lifetime. So many of your clients do SIPs and do mutual fund investment for a purpose, for a goal. Yes? All of you are with me? Your clients do investments for a purpose, for a goal. Suppose the purpose is I want to fund my child's higher education. The SIP is running. Tomorrow the client dies. The money would be distributed as per inheritance laws or as per will. What is the guarantee the inheritor would use it for the same purpose as it was outlined by the person who made the initial investment? Can you guarantee it? Can that person guarantee it? Would he like to have that guarantee? Would your client like to have that guarantee that the purpose which I want this money to be used, it will be only used for that purpose? I want this money to be used for my son's higher education. So would he like to ensure that whether he is alive or dead, this money is only used for this purpose? Yes. If you put the money in the trust and the trust covenant say this money can only be used for my child's higher education, trustee is forced to do it. Trustee is bound by the conditions you put in the trust. You say till age of 20 to 25, if he asks for money for higher education, pay it to the college, pay his tuition fees. If till 25 he does nothing, do this. You put conditions. So you ensure that the goal, the objective is met whether you are alive or dead. Such a big guarantee to a client. Are we selling pure mutual fund schemes or are we selling solutions? This is a solution. You are different from the other advisors because you say whether you are alive or dead, your purpose is met, I will ensure it. Right? Continuity of asset, probate avoidance. Your mutual fund holdings have either a nomination, a nominee is not the owner, he is just the caretaker, or you have a will which in certain parts of India need to be probated. And Chennai unfortunately is one of that. So Chennai is that there are 3 cities in India where probate is compulsory for a will. What is probate? Certification of the will by a competent court. Post your death, when the court certifies that the will has to be implemented and gives the authority to the executor of the will to implement the will, that process is called probate. 3 cities probate is compulsory. Mumbai, Chennai and Calcutta. Because these were the presidency towns during the British time and they made the rule. So that means if you make a will for your mutual fund holdings and other assets, that needs to be compulsorily probated in Chennai. Can you avoid it? Create a trust. Trust don't need to be probated. If I ask you one simple question, who is the best executor of your will? Executor you mean? No? What is an executor? Your after death agent who has the authority to implement your will is called an executor. After you, who has the power to implement your will is called executor. Now who is the best executor to your will? You yourself. Can there be a better executor than yourself? Can there be a better executor than yourself? In a trust, I execute my will during my lifetime. सब कुछ मैंने कर दिया, कुछ नहीं छोड़ा. I have led nothing to chance because I have written everything and that document needs not be probated, it's automatically implemented. That's the trust. That's the beauty of the trust. Right? Protect assets in event of litigation. I'll give you an instance, and I usually give this instance in my sessions. There was this person who had a net worth of more than 100 crore rupees. And he had only one son. What he did was, he made a will in favor of his only son. And he died peacefully. Post his death, his only son inherited this 100 crore rupee wealth. And everything looked fine until 8 months had gone by. Because as soon as 8 months had gone by, the son's wife applied for a divorce. And as alimony, she claimed 50% of this 100 crore rupee wealth. And she got it. Is it a risk? Is it a risk? How many of you say it's a risk? No? It's a risk. So how many of you want your wealth to go to any in-law? Whether that's a son-in-law or a daughter-in-law? You want to give it or not? No. So if you want to avoid that situation, create a trust. Create a trust. Because if this person would have created, please pay attention. I know it's interesting, don't talk. If this person would have created a private family trust and made the son the trustee and the future owner of this asset at certain age, or his grandchildren the future owners, I can guarantee you the son's wife would not even have applied for divorce. Because her lawyers would have told you, you will get nothing from here, because you are divorcing your husband, not the trust. Right? And that person would say, husband would say, I don't own anything, everything is owned by trust. So by making a proper trust, you are disincentivizing the partners or spouses of your children to leave them and take away your wealth. You are avoiding that situation. How many of you feel that separating partners of your children are a threat to your wealth? No, one or two? Okay. Let me give you an example. When I was small, India had joint family system. Right? Slowly family became nuclear. And today we are at an age where if husband and wife live together, people say family is still joint. No? We have changed the definition of joint. Your children's marriage would be more temporary than your marriage. That's a fact. And if you don't believe that fact, you are living in some other age. I am married for 7 lives. Maybe my child marries 7 times in this life. And every time a partner separates from them, they have the power to take away my wealth. Is it a risk? I got a very interesting call from a US citizen. So I do this estate planning advice. There was this US citizen from US who had married an Indian girl. And they contacted me on Zoom. Their problem was unique. I said, why do you want to create an estate plan? He said, I want to transfer all these assets to my children. I said, that's very easy. But sir, you don't understand. There are my children, there are her children, and there are our children. Now how do I transfer? Tell me. And each of them have a different right to different properties. There are 2 properties, 3 types of property. My property, her property, our property. And each of that has different ownership to different children. You understand what's the complication? Trust allow you to overcome all those complications. Trust allow you to overcome all those complications. Support dependents who are separated by geographies. Many of your clients would have children who are not in India. They would be spread out across various countries. What would happen to these assets after these parents pass away? Who would manage it? Would the parents want that to happen? Those children generally, I do it very often. Those children say, we are not interested in that. Whatever peanuts you have created, we are not interested in that. But for that parent, that is their life savings. They are emotionally attached to it. No, they are very much attached to that asset. That management of that asset can be transferred to a trust, appoint a local trustee, and make the children the owners of that, beneficiaries of that. I have children, one in US, one in UK, one in Australia. All 3 are beneficiaries, and a local trustee is appointed in India to manage the assets. No? So you can manage assets for children who are separated for geographies, because you are creating an entity which does it. That's the trust. Right? Special children, many of you would have parents whose children are special child. Children who would never become major or able to manage their own wealth. For such children, we create something called special child trust. Now, it's a trust created for such children where till the parents are alive, they are the trustees. After parents, either a family member or an outside person is made the trustee. But this money can only be used for the special child, nothing, no other thing. And we also sometimes suggest that after you, maybe the child is not kept in a family, he is shifted to an institution. So you can think of making the head of the institution as one of the trustees along with your children. Because I have seen generally what happens is the other children lose interest in this child. So maybe there is nobody interested in taking care of the child. So at least the institution person is the trustee, he can take over those assets and use it for the purpose you have outlined. They cannot misuse it. That's the beauty. Right? Now, sorry. I have covered this. I'll just quickly run to you the types of trust. What are the different types of trust? First type is private trust and public trust. Today what we are talking is generally the private trust, not the public trust. We are not talking about charities. Right? The difference is private trust, beneficiaries are defined and there are particular set of beneficiaries which you can identify. Public trust, it's public at large. Private trust always have an end date. They cannot be perpetual. You get this point? I can't create a private trust which lives forever. And what do you want? All of you want that my wealth remains in my family forever. But trust should have an end date. And we have created a very beautiful way of beating this law. Of trust not being perpetual. What we do, one of the beneficiaries, we create an artificial judicial person. So all of you have a family deity. Right? You have a family deity. Give 1% share of income to the family deity and make him the beneficiary. And say trust will last till the last of the beneficiary passes away. So will God ever pass away? Trust becomes perpetual. Rest 99 is with your children, your great grandchildren and so on. Right? So I can overcome that shortcoming of a trust. Right? So private and public trust is okay. Now other two types of trust is revocable trust and irrevocable trust. As the name suggests, revocable trust is a trust where settler can revoke or change the trust after it's made. Irrevocable, they can't do it. So for a settler, what is better? Revocable or irrevocable? Revocable. Because they have more control. But the problem is, revocable trusts do not give asset protection. Because the law says you have not transferred it fully. You have retained the control to make it come back to you. So they don't consider it as a full transfer. Irrevocable give protection against creditors, debtors, disgruntled family members, etc. So for asset protection, irrevocable trust is required. But suppose you are a person who has no risk in your life, risk of separating partners, creditors or other things, then maybe a revocable trust is good for you. The other two types of trust is living trust and testamentary trust. If you create a trust during your lifetime, it is called living. If you create a trust post your lifetime through your will, that trust is called testamentary. Right? So what would be better? Living or testamentary? Living is better always because you do it yourself. But one of the problems in a trust is if you transfer real estate to the trust, it needs to be re-registered in the name of the trust. And for that, stamp duty has to be paid, which is around 5 to 6%. Right? Some states it's less than 3% also, if it's to a blood relative or something. But if you transfer property through a will to a trust, there is no stamp duty to be paid. So that money is saved if I create a living trust and make a will in favor of the trust. But the problem is this will can be challenged and my property can be in jeopardy. If you want to avoid that, create a living trust, transfer it during your lifetime. Now I come to the last kind of trust, discretionary trust and specific trust. Now in a discretionary trust, I tell that these are the beneficiaries, but I do not tell who gets what. So I say my 3 children and my wife are beneficiaries, including me. So all 5 of us are beneficiaries, and I become a trustee having the power to give anything to any one of these 5 people. So that means I have a discretion to give it to any of the 5. Post my lifetime, my wife has the discretion to give to any of those remaining 4. After both of us, we have specified the shares of each individual. Then it becomes non-discretionary. Right? So that's a better way of doing it. But the problem is, law says that if it's a discretionary trust, it would be taxed at the highest marginal rate. And many chartered accountants would tell you, don't make a discretionary trust, it is taxed at highest marginal rate. I beg to differ. Why? Currently, most of your clients are at what rate of taxation? Already highest. So there is no change in tax. Today also highest, then also highest. Secondly, highest marginal rate of taxation for the type of income the trust earns. If it is capital gain, it is taxed at maximum is 20%, not 30%. If it's a mutual fund unit and you don't sell it, it just keeps on growing. No taxation till you withdraw money. So this should not stop you from creating a discretionary trust, because discretionary trust give better protection against predators and creditors. Why? Suppose I have created a discretionary trust, 3 children, me and my wife. One of my children is facing a problem with his marriage, or a creditor is coming after him. Right? The creditor would say he is a beneficiary in the trust, ask him to pay money from the trust. But because it's a discretionary trust, I say I am the trustee. I am not giving anything to this son. Moment I say I am not giving it to this son, court cannot do anything. It was my discretion. When this case gets over, I give it money. So discretionary trust give you more protection. So for asset protection, and I'll end it with this, living irrevocable discretionary trusts are the best way to protect assets. The trust should be living, it should be irrevocable, it should be discretionary, and you can have it. And I'll just end by giving you one more thing about the trust. And it's a phrase very often used in trust when you do trust planning. And they say, security by obscurity. Hear this term again. Security by obscurity. When somebody comes after your assets, what do they do first? They run your PAN card, etc., and try to find out what you own. And they will only come after you if they know you own something which is bigger than what is the cost to file the suit, etc. Suppose I have created a trust and transferred those assets to the trust. Will it show against my PAN card or the trust PAN card? So they will not be able to find what I own. That is the first line of defense. Second, I don't own it. It is owned by the trust. Trust deeds are a secret document. You would not easily get hands to it. And we can make it an art by creating companies, limited liability partnerships inside the trust. What if I don't own any property in my name? I create a private family trust, and that trust floats a company where 100% shares are owned by the trust, and that company buys a property. I have double protection. First, they will find out the property is owned by a company. They'll come after the company, then they'll realize there's a trust also to break. If you make it difficult for people to take away assets, they would not come after you. Right? So the way forward is trust. And I firmly believe every Indian should have a private family trust. It's not an option, it would become a compulsion, the way things are happening. And you need to learn to manage, create trust, and give solutions to your clients through trust. Right? So tomorrow we'll go further into it. Thank you very much. Thanks a lot.
Thank you so much, Mr. Sir, for a wonderful presentation. Thank you so much for such a wonderful presentation. Do we build some trust on trust now? Have we been able to develop a little trust on trust? And now you trust. Trust is simple? No, not simple. It will make things simple for sure. So it's the power of one of the tools of estate planning. Tomorrow we are going to dig deeper in estate planning. I'm again requesting and inviting everyone to please join us on day 2. It will be a wonderful program. We will be talking only about 2 things, that is estate planning and WhatsApp API. So that will definitely going to impact your business to help you grow. So now it's the end of the show, the event that we have successfully, I think, completed. I would like to take this moment to thank everyone who has come here, all the delegates, esteemed speakers, panelists, all the sponsors, exhibitors, and the entire team of AFM, which made this event a success. I'm requesting people to please do not leave. We will have a group photograph on the stage. I will request everyone who is sitting even till the back, please join us on the stage for the group photograph. This is the tradition that we generally do in all our events. It's a memory to be captured forever. Please join us on the stage for a group photograph. We do it. We always accommodate. We did around 800 people also in Bombay. Yeah, so we will come forward. We'll keep coming forward. The row will start building up.
Hello.
You come this side.